Hi guys, welcome to BCCA. This is Ravi Teja and I am your faculty for Corporate Financial Reporting at CMA final level. Guys, the image which I am using reference here is CM Vijay Sir, Chief Minister of Tamil Nadu. He have become a sensation. Recent talk, the total India, the whole India is talking about one and only person who is CM Vijay Sir. Of course, his movie journey and acting is next level, but his political journey is something which we have to draw inspiration from. So I just want to take some inspiration from him, and I have decided to name my revision marathon series as Beast Mode Revision Marathon. Last time it is CMA Final CFR Endgame Marathon, but this time it is Beast Mode Revision Marathon. If you are a first attempt student, you have to give your 100% just like how this person, CM Vijay sir, have given. Even if you are a repeater, you have to do that much hard work which this person have did in order to become this much. Guys, he's sensation. Correct. So coming to the marathon, this is not a separate recorded video, guys. So the recent exam oriented batch which I have taken at Hyderabad, I have uploaded all the recordings. This will be released in part A and part B. In part A, what I have decided is all the standards have been summarized. This time, short, crisp, more useful. So 16, 36, 102, 38, 23, 21, 108, 116. Everything will be summarized in part number A. For 113, since I have released a separate one-shot revision, you cannot. It is not covered here. So for 113, you can aram se check that one-shot revision cutting. And 115, it is not possible for me to cover in exam-oriented batch. So what I have did is, or you can watch the previous marathon for the time being, or in future, I will be uploading one-shot revision also for that chapter. Okay, so part A, all the specific Indian accounting standards are covered. When it comes to part number B, there I will be covering financial instruments, NBFC. 103 brilliant summary I have once again did in part B. One short revision is also there for this brilliant summary of 103 concepts. And coming to another set of chapters like CFS, theory chapters, MCQs. You have to refer to previous marathons only, guys, because those are only next level. CFS, theory chapters, MCQs, you have to refer to previous marathons. 110 also, one short revision already I have released. Correct? Yes, sir. So the only thing which I have not covered in this marathon is valuation of shares and goodwill. For that, you can refer to previous marathon. And one more thing I have forgot to mention, which is nothing but economic value added and market value added. If time permits, I will be even releasing a separate one-shot revision video for this chapter also. Okay, so with that notion, this marathon has come up at next level, guys. So I wish you to watch all these questions, all these chapters, and super 75 questions also maximum I have covered in this marathon only. So you just have to properly watch this marathon. And if any question I have left, that question now you have to solve in this super 75 questions. Okay. So I think that's it, guys. This is a little intro about the, what should I say, Evo batch which is being uploaded. So part A will be released today only. The moment it is uploaded, it will be released the same day, and part B will be released just 2 days later. Okay. So with this notion, let us start the video. Thank you so much. Okay, so good morning, everyone. This is Ravi Teja. I'm a qualified chartered accountant in May 2023. So from then onwards, I have very much passion towards teaching. But I have worked in Deloitte USA, which is a prominent Big Four. In Hyderabad only, I have worked in Deloitte USA for 1.5 years. I have worked, And then I have worked in audit department. So I have gained good exposure in, especially with respect to Indian accounting standards. So I know this subject very well. And also coming to my academic background also, corresponding subject to corporate financial reporting is financial reporting in CA final. That subject I have got an exemption, and corresponding subject at inter level is basically advanced accounting. So that subject also I have got an exemption. Okay, so I exactly know which areas we have to focus, and all I will really help you. So this is CMA final CFR June 2026 exam oriented batch. So what I have decided is, for this attempt, I have decided to come up with power 75 questions. So this time what you have to do is, not even a single chapter we have to leave. Every chapter we have to cover. So whatever the chapters which I have covered here, all the chapters I have included. So of course we will do category wise analysis of A, B and C, but even for C category chapters also, what you have to do is, at least we have to solve some questions and directly we have to go to exam hall, because last attempt is the eye opener. If you observe, they are asking only those standards which most of the students are leaving. So this time we don't want to take any risk. If any chapter is important, for example, some standards are there, 16, 36, 38, these standards, normally those are very important, but in last attempt, they have decided to ask for some new standards. So what you have to do, you have to be very careful, even if it is asked by our institute in past attempts, that is also important, or if any new chapter is there, that area also we have to focus at least some important questions. I will show you the category analysis of whatever A, B and C which is there. A category and B category, though we should cover almost everything. So 100% conceptual coverage we should get. Along with that, questions also we will solve. But if there is any C category which is there, at least questions definitely we have to see. Because if you observe, let me show you the past paper analysis. So just a minute. Now, if you observe this past paper analysis, here I have included from December 25, June 25, December 24, June 24, and December 23. Almost all the items, if you observe, some chapters are there which our institute is not leaving in single attempt. Those chapters, anyways, we have covered. If you observe this paper, now we all know that first question consists of MCQs, so I'm not touching upon those MCQs. Descriptive paper, if you observe here, one common chapter which is not even missed in a single attempt is this fifth question, which is with respect to Ind AS 103. Tell me, what is this Ind AS 103 about? Business combination. Very good. And one more standard question which is not even missed in a single attempt is what? Ind AS 110. What is this Ind AS 110? Consolidated financial statements. Smart student will definitely prepare these two questions. See, most of the students who are writing CA and CMA parallelly, if you observe, they will easily clear the CMA final, especially the CFR, they will get easily exemptions. The reason is, in CA final, these two are the backbones. Ind AS 103 and 110. Without these chapters, they will never go to exam hall. Same logic, nothing new they have to study. Same logic they have to apply. CMA final also, they are giving repeated set of questions. So if you are a smart student, at least out of these two questions, one questions you have to definitely attempt. Okay. There is no second thought about this. Out of this fifth and sixth question, one question definitely you have to attempt. Okay. And one more constant question, if you observe, it is also not even missed in a single attempt, which is nothing but this question number 4B. What is this about? Internal reconstruction. Easiest question. 7 marks straight away they are asking. So this question also easily you can get. And one more question, if you observe 4A, they are asking the financial instruments or NBFC. Out of these two questions, generally they are focusing on one question. NBFC also very easier chapter. If you remember, we just have to remember some provisioning percentages we have to remember. It will be just completed in less than 10 minutes. But if it is financial instruments, you have to study in depth. Okay, which means 4, 5 and 6, you can easily predict these questions. So smart student will definitely cover all these three questions. If not all these three, at least two questions we have to prepare from this 4, 5 and 6. And one more thing, if you observe, 2A, 2B, 3A also. From these three questions, what they are doing is they are asking the questions relating to specific Indian accounting standards. I think you all know that our syllabus consists of mainly Indian accounting standards, and other than this, some discussion is there with respect to this valuation of shares and goodwill. A separate chapter is there. Financial instruments also we are having a separate chapter. One standard question they are asking 3B. If you observe, two topics are there in this chapter basically: share valuation and goodwill. They are asking alternate questions. If you observe, share valuation, if they have asked in one attempt, in next attempt they are asking goodwill. Like this, they are asking some alternate attempts. Sometimes they have asked both goodwill only, but that is totally fine. This question also a little bit predictable only, but if you observe, the most important part according to me is 2A and 2B. Specific Indian accounting standards related question. If you observe carefully, out of this last 4 attempts, one standard is common. What is that standard? Ind AS 36. I think you know about this Ind AS 36. Ind AS 36 is about impairment of assets. Easiest standard, but what they have did in last attempt, they have not asked that question. Which means what? This time there are high chances that they are going to test this Ind AS 36. So we have to cover this Ind AS 36 definitely in detail. And other question, if you observe, 2 attempts they are asked Ind AS 16. The reason why they are asking Ind AS 36 in most attempts is there is little bit interlinking between 16 and 36 as well as 38 and 36. Do you know what is Ind AS 38 means? Ind AS 38. 38 intangibles, 36 impairment. There is little bit interlinking between that intangibles and impairment also. So that is the reason there are high chances that they are going to ask a combination of this 36 along with 16 or something. Okay, so 16 is also important in that case. And another standard is there, which is nothing but leases related standard, Ind AS 116. This is trending standard, but our institute is not asking that much in-depth questions as per this Ind AS 116. But still, what we will be doing is we will be covering all the relevant questions from this chapter also. Suddenly, in last attempt, every standard is new. If you observe, 12 is also new, 21 is also new, 108 is also new. Which means what, our institute is changing standards. So whatever the students taking most of the standards as choice, they are asking those questions only. Okay, see, if you observe these three chapters, if you observe, in Ind AS 21 we only have 2 questions in our workbook. In Ind AS 108 we only have 1 question in our workbook. Similar model is only asked number of times. Based on that model only, another 3 questions are included, but otherwise only 1 model is there in this Ind AS 108. Which means what, if any standard is ignored by the students, the reason is there is very little content in the standard. So at least some basic questions, if you have did from those standards, you are sorted. Okay, so that is the reason. If any standard is important, there is no choice, we will not skip anything. But otherwise, if any standard is even C category also, what we will be doing is at least we will be covering questions. In the same manner, what I have did is I have carefully handcrafted 75 questions, which comprises of all the categories A, B, and C. Okay, every category is included in this 75 questions. So what we have to carefully do is, these are our daily targets. So this EO is divided into totally 4 days. First day session, what we will be doing is we will keep it very lighter. 4 standards we are going to cover. If our luck is good, from these 4 standards, 2 questions have to come this attempt. At least 1, but if our luck is good, definitely 2 questions have to come from this 4 standards. Day 2, if you observe, balance important standards 116, 102, 108, 21, 113. These standards we will cover. So day 1 and day 2, if our luck is good, all the 3 standards have to come from this area only. Otherwise, some probability is there, they are going to ask Ind AS 115 also, that we will be covering in day 3. Okay, which means all the standards I wanted to cover. If any standard is important, again I am saying we have to cover it conceptually. I will be solving all these questions also in this EO batch only. Even if it is C category also, at least we will focus on questions. Okay. And one more thing, day 3 we will be focusing on financial instruments, NBFC, internal reconstruction, and Ind AS 115 also. Last day what we'll be doing is Ind AS 103 and Ind AS 110. What I have decided is, I think if you watch my YouTube videos, I have already designed some very concise summary of this Ind AS 113 and 110 also. I have divided into steps. So if you even attempt those steps also, maybe you may not get 14 out of 14. That you will get if you do perfect practice. But even if the question comes a little bit difficult, at least 7 to 8 marks you will get from the format itself. From those steps itself, easily you can get 7 to 8 marks. Okay, fine. And one more thing I just wanted to know, how many of you are hearing this CFR for the first time? Which means both online and offline. This question is for how many of you are taking this EO batch CFR especially for the first time? Is there any person who is hearing totally for the first time? Okay, 1, 2, 3, 4. Online students, I also want a response from your side. First time, if you are, please type F in the chat box. Or if you have taken at least regular or fast track classes. Okay. If you have taken regular classes or fast track, just type R in the chat box. Okay, so I think most of the students are taking this for the first time only. Okay, fine. If you are a first timer also, there is no problem for me. But the thing is, what you have to do is, you have to do more and more amount of practice, because here I have included only limited number of questions. Definitely I will explain concepts, because without concepts you can't do anything. So we will cover concepts very nicely. After that, going home, you have to solve each and every question, whatever I have mentioned in the class. Okay, since it is EO batch, what I will be doing is, I think I have already shared solutions in WhatsApp group. If possible, please get hard copy. Otherwise, soft copy is also totally fine. But at least for 1 to 2 days, what I will be doing is, I will be glancing through those questions. Of course, you will only calculate and tell me whether that answer is correct or not, but I will not write and solve. Okay, I will just glance through those solutions, because CFR is a little bit lengthy. I think you all know about that part. So it is not possible for me to solve each and everything, but concepts I will explain 100%. Questions also you will only tell the answer. Okay, I will just correct, I will just cross check from the solution, whatever I have shared. Okay, so fine. Even though if you are a first timer, don't worry. You will get 100% clarity on concepts, but questions, limited questions we are going to cover. In case if you are having any doubt, already all these chapters marathons are already available in YouTube. So after going home also, if you have any doubts, I recommend you to watch that marathon, and at least you have to solve those questions. Okay, because without solving questions, this marathon will not be helpful. Okay, so fine. I think with this, what we'll be doing is, let us start with our first standard, which is Ind AS 16. Okay, so in our concept book, please open Ind AS 16. One more thing I wanted to say, it is only 156 pages. Very concise concept book I have given. All the standards you can study from here only. Nothing is going to come out of this book. Okay, so all the concepts you can blindly rely upon this. So quickly let us open Ind AS 16, which is there in page number 14. Page number 14. Okay, let us understand. First standard, name of the standard is PP. I think you all know what is the full form of PP. What is the full form of PP? Property, plant and equipment. Very simple standard. So that is the reason why I have decided to start with this standard only. Easy standard. This will easily give you confidence. Okay, fine. So this is standard. What they will be explaining is, first of all, while studying any standard, you just have to understand the objective as to what exactly is covered in that standard. You have to understand. Okay, here it is very simple. When we have to recognize a property, plant and equipment, recognition means bringing an asset into our books of accounts. See, accounts is very simple. Whatever the toughest chapter it is, we will only pass something which is called as journal entries. That's it. Accounts is all about journal entries. It is not like SFM or DT. Complicated topics are not there. Again, I am saying very confidently, I am saying accounts is all about journal entries. Even though it is business combination, even though it is consolidation, accounts is all about journal entries only. Okay, very, very simple. I think journal entries, in your intermediate days, we have understood that we are having totally 3 golden rules of accounting. Those golden rules are only going to continue. Whatever advanced chapter which you are studying, those golden rules are only going to continue. Okay, fine. recognition of PP. Second thing, measurement of PP. Measurement means at which value I have to record my PPE. For example, let us assume I have purchased one AC. So that AC have costed me 1 lakh rupees. In order to bring that AC from the supplier's location to my office, I have incurred some transportation charges. Transportation charges of 5,000 rupees I have incurred. Along with this 5,000 rupees, since it is a good, GST is also levied on this item. For example, GST at the rate 18% is levied. Oh, so 18,000 they have levied. If you add all those total costs, I have got 1,23,000. Now, at which value do I have to record this asset? Do I have to record at 1,23,000, or do I have to record at 1 lakh only, or do I have to record at 1,05,000? That will be explained in this part of the standard measurement part. Third thing, to presentation, and last but not the least, disclosure. Okay. Again, I am saying we are mainly focusing on whatever the important areas of the standard. Okay. So after that, quickly come to scope of this Ind AS 16. Quickly come to the scope of this Ind AS 16. In that, most important portion is biological assets. They may ask any MCQ with respect to this part, biological assets. So let us carefully understand this part. Ind AS 16, understand, is not applicable to biological assets. Biological assets means, for example, cows, buffaloes. These are also assets only. Sir, how you are saying these are assets? If you observe Amul Cooperative Society, their business is to extract milk and they are going to sell the milk. If you observe, they will not have PPEs as machinery. I mean, PP is also there, but very limited amount of PP. For them, cows, buffaloes, these are only assets. Ind AS is saying we have to record these items also as an asset. Okay, so what they have did, they have introduced one separate standard for these animals as well as living plants also, and that standard is covered in Ind AS 41, which is not there in our syllabus. But some little bit interconnection is there with respect to this standard PPE that we have to understand. Sir, what is that interconnection? Understand. Biological assets also, those are divided into living plants or animals. If it is animals, out of Ind AS 16. If it is living plants, these living plants are classified into two parts. First part is bearer plant, second part is other than bearer plant. One more thing you have to understand, if it is bearer plant is covered in Ind AS 16. Except bearer plant, everything is covered in Ind AS 41. Again, 41 is not there in our syllabus, so let us don't focus on that. 41. Agriculture related standard is there. We can forget that Ind AS 41. But sir, what is the meaning of this bearer plant? Let us take one example, then you can understand. For example, mango tree is there. Every year, this mango tree will give me mangoes. So you only think and tell me, will I cut that entire mango tree and I will sell, or will I only take the mangoes and I will sell those mangoes? Obviously, I will take mangoes and I will sell. Again, next year, I will again get new mangoes. I will take those new mangoes and I will sell in the market. Correct? If you observe PPE also, I have one machinery. Through that machinery, I am producing goods. End of the year, tell me, will I sell those goods or will I sell that PPE? I will usually sell those goods. PPE also it can be sold, but not in general cases. Exceptional cases, I can sell that PPE also. What this standard is saying is mango tree and PPE both are same. Because I am only selling produce of those items, I am not selling that item itself. That's why this standard is saying, okay, mango tree is a bearer plant and bearer plant is also covered in this 16. That is the point only you have to remember. Other than bearer plant, whether it is animal or whether it is other than bearer plant, those are out of the scope of Ind AS 16 is what you have to understand. Okay, just remember this much. Bearer plant definition here they have given, which means it should be used in the production of agricultural produce, expected to produce for more than one period, which means what, for more than 1 year you have to give agricultural produce. Okay, if you observe one more example, sugar cane is there. Once that sugar cane is grown, I will cut the entire plant. Correct? Therefore, it is not a bearer plant. If it is not a bearer plant, it is not covered in Ind AS 16. Okay, that is the thing which you have to understand. Fine. Now let us move to the definition of PPE. PPE means we know it is full form is nothing but property, plant and equipment, but the standard will give some definition. Okay, let us understand the definition of standard also. What they will say, PPE refers to tangible assets.
if it is intangible, outside of scope of Ind AS 16. Because for intangibles, we are having a separate standard, Ind AS 38. Correct? So Ind AS 16 covers only tangible assets. And what they will say? Tangible assets used in the production of goods. Which means what? I am having one machinery. I am having one machinery. Through that machinery, I am producing goods. Now, this machinery is a tangible item. Correct? Therefore, this machinery, since I am using it for my production of goods, it will become PPE. Not only production of goods, what they will say? They will also say rendering of services also. This point I will come. Third point, they will say rendering of services also, which means I am having this tab. Through this tab, I am able to provide classes, which means I am not selling any goods. What I am doing, I am rendering services. If you observe carefully, my tab is also a tangible asset. It is also, I am not using for production of goods, but I am using it for rendering of services. This is also what PP. And one more item, administrative purposes, which means I am having one head office building. Through that building, I am not producing any goods. I am not producing any services directly to customers. What I am doing, internal services I am providing, which means for employees, for example, payroll is there. Through that head office building, total payroll of the entity is processing. Therefore, if you observe that office building, head office building, whatever it is there, I am not directly producing goods, I am not directly rendering services also, but still it is also called as what? PPE, because it is used for administrative purposes. One more thing, I am having one car. What I am doing is I am giving that car as rental to any other person. I am not selling that car. What I am doing, I am giving that car as a rental to others. I am using that car in my business. I am using that car in my business. How I am getting cash flows? I am actually giving that car as a rent. If you are having any asset, and if you are giving that asset on rent also, that is also called as what? Property, plant and equipment. But one asset you have to remember, land and building. If you are having land and building, if you are giving that property, land and building on rent, that is called as investment property. That is called as what? Investment property. For it, another standard is there. Another standard, sir, what is that standard? Ind AS 40, that is also not there in our syllabus. That is also not there in our syllabus. Okay, to conclude the definition of PPE, PPE refers to tangible assets. Either it should be used in what? Production of goods, or held for rental to others, except two items, land or a building. What is the third item? Rendering of services, and last but not the least, administrative purposes. Most importantly, this thing. What is this thing? Benefits should be expected to be used for more than one period. One period means more than 1 year. More than 1 year, you should get the benefits. Then only it will be called as what? Property, plant and equipment. Okay, simple is the point. Next, come to this concept number 5, recognition criteria. Till now, most important part of the standard is we have understood the definition of bearer plant. In bearer plant, you have to remember, bearer plant is only covered in Ind AS 16. What about other biological assets? Another standard 41, which is out of the scope of this Ind AS 16. Okay, very good. Definition of PPE also we have seen. Most important part, recognition criteria. Always remember one thing, if you are attempting standard question, directly if you start attempting the answer, you may not get full marks. You have to write some theory part. Definitely you have to write some theory, because accounting standards are completely theory. If you open any bare content of the standard, you will find that it is totally theory. You don't know whether it is law or accounts. No numbers will be there. Completely theoretical part will be there. So if you want full marks, what you have to do? You have to write some content of this standard. Some content you have to write. Standard content, whatever question which they have asked from Ind AS 16, you have to write this part. Which part we have to recognize? PPE will be recognized, which means you will record any asset in our books of accounts only if two conditions are satisfied. What is the first condition? It is probable that future economic benefits will flow to the entity. What is the meaning of future economic benefits? Future economic benefits means cash flows. For example, if you are having an asset, you have to use that asset in your business. You have to produce some goods. You have to sell those goods. Then only you will get what? Cash flows. Correct. If you are unable to produce the goods, for example, you are having one asset which is useless. You cannot sell that asset in the, you cannot produce goods through that machine, and you cannot sell cash flows, which means what, that asset becomes useless. Those assets you cannot recognize. For example, you have purchased one third-hand machinery. That is also a tangible asset. You want that third-hand plant and machinery to production of goods, for production of goods, but the thing is, future economic benefits, if they are not probable, I should not recognize that PPE. Second part, what they will say, cost can be measured reliably, which means you have to measure that. If you want to record any item, for example, if you want to record the cost at 1 lakh rupees, you should be able to measure that. You have to say 1 lakh is only the cost. If you are measuring the cost reliably, then only I can recognize an asset in my books of accounts. Tell me how many conditions are there? 2 conditions. What is the first one? Future economic benefits are probable to the entity. Second condition, cost can be measured reliably. Okay, fine, very good. This concept number 6 and 7 we will quickly come to this concept number 8, initial recognition of PPE. From this only questions are going to come. Very, very important. From this part of the standard, questions are going to come. Concept number 8, initial recognition of PPE. Let us understand. In case of acquired assets, which means, see, multiple ways are there to acquire an asset. First thing is purchase of an asset. If you want, you can purchase an asset. Second thing, you can construct an asset. You can construct an asset. Through construction also you can take an asset. And one more thing is exchange is also possible. Which means I am having building. I want to exchange this building and I want to take plant and machinery, which means I will give building and I will take plant and machinery. This is also, mode of acquisition. Mode of acquisition. Purchase is there, construction is there, exchange is there, and one more thing, government grant. Sometimes what the government will do is, government will provide some grant. At that point of time, what you have to do, the accounting and all will be understood in this part of the standard. Okay, let us understand carefully. If you have purchased any asset, obviously you have to record it something which is called as what? Purchase price. You have to record at which price? Purchase price. It includes import duties also. Always remember, if any duty or tax is non-refundable, that I have to include in my cost. Sir, what is the meaning of non-refundable? Very simple. For example, while purchasing, assume you are paying GST. If you are getting credit on this GST, if you are getting ITC on this GST, which means you are getting some benefit. If you are already getting one benefit, don't include that in the cost of the asset. Because what will happen, if I include in the cost of the asset, I will get what? Depreciation. I will get depreciation, which means on the same amount, for example, on the same GST amount, I cannot claim both input tax credit as well as depreciation. Only one benefit I have to take. Which means what, the standard is very simple. If you are already getting credit, you cannot include that item in the cost. But if anything is non-refundable, which means if you are not getting credit, then what I have to do, I have to include in my cost of acquisition. Simple point. Okay, non-refundable taxes, or here please make a correction, taxes on which credit is not availed. Taxes on which credit is not availed. Okay, this thing I have to include. This thing I have to include. And one more thing which you have to observe is minus trade discounts and rebates we have to deduct. I think you know the difference between trade discount and cash discount. Okay, let me help you with an example. Through that example, it will be clarified. For example, I have decided to purchase 10,000 units. Each unit price is 100 rupees. This is the quotation which is given by the supplier. What I have did is, I have decided to purchase 50,000 units. Since I have increased the number of units, supplier have reduced the per unit price. It is very common sense. Normally it will be done like that only. So that person have given 2 rupees trade discount. Normally it is selling at 100, but now supplier is giving how much discount? 2 rupee discount per unit. Now how much I have to pay? 98 rupees I have to pay. Whatever this 2 rupees discount which is called, that is called as a trade discount, or it is also called as volume discount also. If you are increasingly purchasing, obviously they will reduce per unit price. That is called as trade discount. Always remember. Now, obviously, I will be paying 98 rupees only to the supplier. Therefore, the standard is saying, please recognize 50,000 into 98. If I am writing 98, which means what I have written 100 minus 2. Which means what I have did, I have deducted trade discounts from the cost. I have deducted trade discounts from the purchase price. Okay, that only they will explain here. If you observe carefully, they will say minus trade discounts and rebates you have to deduct. This is the point which you have to observe. After that, one standard line which they will use in this standard, which is nothing but read this point. Everyone please read this point. Directly attributable costs which are necessary to bring the asset to its intended location and condition used by the management. This is also one standard line you have to write in every question. Very simple. For example, if you have purchased one air conditioner, just after that purchase, that asset is out of the location. That asset is outside of the location of the supplier. I cannot use that AC as it is. Correct? Obviously, I have to transport that AC to my office, to my workplace, or to my house, or whatever it is. Therefore, some transportation cost will be there. Without those transportation costs, I cannot use that asset. Correct? After transportation also, I have to do something which is called as what? Installation. Without that installation also, I cannot use my asset. So ask one question to yourself. If any cost they have given in the question, without that cost, can I use that asset? If your answer is yes, without that cost, if you are adding, that is not a directly attributable cost. Without that cost, if you cannot use that asset, then what you have to do? I have to capitalize that cost. Which means reason is simple. If that cost is directly attributable, to bring the asset to its intended location and condition used by the management. For example, these costs you have to remember. These costs only are going to be asked in your exam. These points only they will ask. If any point have given like this, you have to directly include that in your cost. Okay. What is the first item which they will give? Initial delivery and handling costs. Handling means, for example, loading, unloading. These kind of costs they will give. What we have to do, I have to always include those costs in my purchase price. Another thing, site preparation costs. For example, I am constructing one building, and wherever I wanted to construct my building, below that the land is there, but that land is uneven, which means the land is like this. It is not even. So what I have to do? First, I have to do leveling of land. I have to prepare that site to construct the building. Otherwise, if the land is like this, how can I construct building? I have to construct like this. Okay, it is not possible. So first, what I have to do? I have to prepare the site. Those preparation costs also very much essential to bring your asset to the location and condition. Correct? Therefore, I have to capitalize that part also. And one more thing, installation and assembly costs. Installation costs also I have to do. So what is the meaning of assembly costs? For example, you have imported one very big machine. That big machine cannot come as it is. What they have did is they have disassembled that machine and they have sent that machine into parts. After receiving, you have to do the assembly. Without this assembly also, you cannot use that asset to the intended location and condition used by the management. Therefore, what I have to do? I have to capitalize that part also. Remember one thing, if I am saying adding any cost to the asset, that is also called as what? Capitalization. Okay, capitalization means adding to the cost of the asset. Okay, fine. And one more thing, employee benefit costs arising from construction or acquisition of property, plant and equipment. What I have did is I have specifically employed 2 employees. Their job itself is to supervise the asset. Full time their job is to supervise the asset only. Without those employees, I cannot use my asset. I cannot conclude my asset is ready without that supervision. So what I have to do, for example, those 2 employees, assume they are employed for 3 months full time for that asset only. So what I have to do, I have to calculate the salary of those 2 employees for 3 months, and those 3 months salary I will be capitalizing. Sir, what about 9 months salary? 9 months salary I will charge to P&L account only. But 3 months salary, since they have full time devoted to cost of the asset, what I have to do, I have to include that item in the cost of the asset. And one more very important point, this thing we have to see. What is this? trial run expenses net of scrap. Trial run means, for example, you have designed your own metro train. Without testing, you cannot start. Correct? Without testing, you cannot start the train. So testing expenses I have incurred 1 crore rupees. Without the testing also, I cannot use my asset. Correct? So this testing cost also what I have to do, I have to capitalize. But sometimes what will happen, for example, this will be generally happened for manufacturing industries. If you have produced any trial run, what you have to do is some scrap will be generated. What I will do, I will sell that scrap. For example, I have incurred cost of 1 lakh rupees and I have got some 10,000 rupees scrap. Tell me what is my net cost? This 90,000 only I have to capitalize. That's it. So it is very simple. Trial run, net of scrap I have to do. Last but not the least, transit insurance. If I have taken any insurance, without that insurance also, I cannot use my asset to the intended location and condition. Therefore, what I have to do, I have to capitalize that transit insurance also. Okay. One more most important thing, which is nothing but this thing. So just read this point. Initial estimate or present value of dismantling, removal, and site restoration costs at the time of purchase. I will take one example. You have to understand to this example. For example, I am a qualified chartered accountant. So what I have did is I have entered into practice, but I don't have office. I don't have office to start my business. So what I have did, I have requested one of my friends, and my friend have given me some vacant space. Okay, that person have given me some space. What I have decided is, I have constructed some cabin for myself, and for my articles, I have constructed some podiums, and one cafeteria also I have constructed, and conference room also I have constructed. Like this, I have made some constructions. See, this empty space is not mine. This empty space is my friend's. What I have taken on lease, and I have did all these constructions. If you observe carefully this part, my friend at the time of entering the agreement itself have instructed me, I will give you lease only for the period of 5 years. Because since you are my friend, I have decided to give it on lease. A lease rent, they are charging only 1 lakh rupees per month, assume. Normally, my friend is having another option also, that if he wants, he can give it as lease to any other person, or that land is located in commercial area. So that since it is commercial area, that person is having a scope to get 5 lakh rupees per month lease rentals. But since he is my friend, he have given that land, whatever it is, as lease to myself. How much lease rent I am paying? 1 lakh only I am paying. What my friend have said is, I will give only for 5 years. I have asked why only for 5 years. Then he said that I am already losing too much. Since you are my friend, I have given you at 1 lakh per month, but after 5 years, definitely you have to hand over the land to me. Like that condition is there in the lease agreement. But what he have said is one more thing also he have said. See, empty land I cannot use for my practice purpose, correct? So what I have did, I have made few constructions here. After completion of 5 years, if this land or vacant space, if it is converted to commercial, that commercial entity don't need all these constructions. That commercial entity don't need this cabin. That commercial entity don't need this cafeteria, don't need this articles cabins, and don't need this conference hall also. So what my friend have asked me is, how I am handing over the land to you. After 5 years, you have to hand over the land to me in same condition. Which means what? I have to destroy everything. I have to destroy this cabin, destroy this cafeteria, destroy this articles cabins, destroy this conference hall also. Everything I have to destroy, and I have to hand over that land as it is to my friend. This is the condition which they have given in the lease agreement. If you observe carefully, in order to destroy all these items, I will incur some cost. Correct or not? In order to destroy everything, I have to incur some cost. Let us assume I have estimated I will be incurring 10 lakh rupees for this destruction. 10 lakh rupees for this destruction. Another word I can say, restoration. Sir, what is the meaning of restoration? I am restoring this asset back to its original condition. Earlier, how it is, I have to hand over the asset in the same condition. Therefore, I am incurring some cost. Think carefully. Will I incur this 10 lakh rupees right now or after 5 years? will I incur this 10 lakh rupees right now, or after 5 years I will incur? Obviously after 5 years. So what the standard is saying is you cannot recognize this 10 lakh rupees. What you have to calculate? We have to calculate something which is called as present value. They will give some discount rate. So what you have to do, you have to calculate the present value of this 10 lakh rupees and I have to include that present value. For example, I have got 7 lakh rupees. I have got 7 lakh rupees. I have calculated the present value. Approximately, I have got 7 lakh rupees. Now, what I have to do, I have to include this 7 lakh rupees also in the cost of the asset. This is what the standard is saying. Okay. Present value I have to calculate and I have to include that present value also in the cost of my asset is what the standard is trying to say. Okay. So, quickly check this part. Initial estimate present value of dismantling or removal and site restoration costs at the time of purchase we have to include. And one more thing they are saying, what they are saying, borrowing cost also we have to add. In brackets they have given something. What they have given, if the asset is a qualifying asset. So what is the meaning of qualifying asset? We will have discussion in Ind AS 23. Today only we will cover. Don't worry. Otherwise, normally interest should not be added. Interest will be added only if it is what? Qualifying asset. So what is the meaning of qualifying asset? We will have some discussion. Don't worry, I will explain that part. And one more thing they have given. What is this they have given? Minus government grant for property, plant and equipment. Subsidies, for example, government usually will give. For example, the cost of the asset is 10 lakh rupees. Government is said that I will give 2 lakh rupees subsidy or government grant. If the government is giving 2 lakh rupees, what is your net cost? 8 lakh rupees is your net cost. So they are saying if you are receiving any grants, what I have to do, I have to reduce from the cost of the asset. Okay, I have to reduce from the cost of the asset. Now, quickly check these three important note points. Quickly check these three important note points. First point, what they are saying is, don't include taxes in the cost for which what ITC is availed. This we have already covered. If you are getting ITC, don't again include in the cost of the asset. Second thing, what they are saying, cash discounts will not be adjusted from the cost. I think you already know about this cash discount also. For example, you have to pay 1 lakh rupees to your supplier. But supplier is saying, if you make the payment within 10 days, if you make the payment within 10 days, the supplier is saying, I will give you 5% cash discount. Assume you have made the payment within 5 days only. Assume you have made the payment within 5 days. Tell me how much amount you have to pay. 5% discount you will get, which means how much amount you have to pay? Very good. 95,000 you have to pay. If you observe carefully, sir, what is the difference amount which you are getting? Why you are getting that 5,000 discount? Because you are paying earlier, correct? Which means it is not related to asset. It is related to early payment, correct? If it is not related to asset, why to adjust in the cost of asset? If it is related to asset, I will adjust. If it is not related to asset, what I have to do? I have to transfer that cash discount to P&L account. It is just like an income for me. Okay, I will transfer that cash discount to P&L account. Fine. Please remember these 5 costs also. Please remember these 5 costs. Following expenses should not be capitalized. What we have to do? Charge it to P&L account as an expense. Understand the logic. For example, whatever the expenses which you are incurring up to the asset, up to the date your asset is ready to use. Up to the date your asset is ready to use, what I have to do? I have to add to the cost of the asset, because without those expenses I cannot use my asset. Once your asset is ready, subsequent expenses whatever we are having, those subsequent expenses will not be capitalized. The reason is very simple. Once your asset is already ready, subsequent expenses, whether they are incurred or not, still that will not affect my asset. Correct? My asset is already ready. Therefore, whatever the expenses which are incurred after that, those expenses should be charged to P&L account as an expense. Okay, fine. Here they will give few expenses. Staff training expenses. I have constructed one asset. Whoever the employees which are there, they don't know how to use that asset. My asset is already ready. Understand? My asset is already ready. Whether I have given training or whether I have not given training, I can still use my asset as it is. Therefore, what the standard is saying, okay, since it is staff training expenses, since you are incurring after the asset is ready, what I have to do? I have to charge to P&L account as an expense. Okay. Second expense, inauguration expenses. For example, I have constructed one shop. What I have decided is I wanted to invite Pooja Hegde to inaugurate that shop. Inauguration expenses, whether Pooja Hegde have really come and inaugurated or not, it will not make any difference. My asset is already ready. Whether she inaugurated or whether she doesn't inaugurate it, I can use that asset as it is. Therefore, what the standard is saying, this expense has no connection with your asset. So don't adjust with cost of the asset. What I have to do? P&L account. One more thing, advertisement expenses. Advertisement expenses also always should be transferred to P&L account only. The reason is very simple. See, I have already explained two conditions for recognition criteria. Correct? Just now I have explained two conditions for recognition criteria. Tell me what are those conditions? The first condition is what? Future economic benefits are probable to the entity. If I am incurring any advertisement expenses, can you tell me, sir, future economic benefits are probable from this advertisement expenses? It is not possible. At the time of advertisement, that product may become hit or the product may become flop. At the time of advertisement itself, I don't know whether I am getting future economic benefits or not. Therefore, always remember, advertisement expenses also always will be transferred to P&L account as an expense. Another two expenses are also there. Always remember, these two expenses also always should be transferred to profit and loss account as expense. Reason here only I have given. Okay, reason here only they have given. Please ask your question. In your exam, what they will do is they can give 5 to 6 costs. Some costs we have to include in the cost of asset, some costs we have to exclude, which means we have to charge that cost to P&L account. Just remember this format, more than sufficient. These items only are going to come in your exam. Staff training costs, inauguration expenses, advertisement expenses, staff relocation, and last but not the least, admin and general overhead costs. These are only going to come in your exam. Okay, even if you buy out also, that is also totally fine. But try to remember conceptually. That will give you, even if they have asked any new thing also, you can easily attempt. Okay, fine. And one more thing also, little bit conceptual part is there. Let us understand this example very, very nicely. So please mark this example as important. Directly, they will not give this example in the question, but some part they may give in this question. In a big question, they may give you some part of this. Okay, let us understand. See, A Limited have purchased PPE for 1 crore rupees, which has useful life of how much? 5 years. This is the most important part. It has a contractual obligation to decommission the asset and restore the same. One more thing you have to understand. Just right here, there is some cost which is called as a drawl. The full form of this drawl is decommissioning. Please write somewhere. Decommissioning, restoration, and other liabilities. Decommissioning, restoration, and other liabilities. So Nadeem, I will upload this soft copy, don't worry. I will upload this soft copy for day 1 or day 2. Till you receive the books, I will upload the same. Don't worry. First listen. Okay, see. This is shortly called as drawl. What is the full form of drawl? Decommissioning, restoration, and other liabilities. Understand this question. What they are saying is, initially I have to pay 1 crore rupees. Useful life is how much? 5 years. And at the time of purchase only, I am having one contractual obligation to decommission the asset and restore the same. Which means I have to incur this cost at the end of 5 years. How much I have to incur? 10 lakh rupees I have to incur. Understand carefully. 10 lakh rupees when I will incur? After 5 years. Which means what I have to calculate? Present value I have to calculate, and this present value I have to include in my cost. Correct? They have given 5 years. Discount rate is 10%. They have given. Discount rate is 10%. Period is 5 years. Cost is 10 lakh. Please tell me what is the present value? Please do the calculation. Tell me what is the present value. 6,20,921. Online students, you also please confirm. 1 by 1.1, 5 times equal to into 10 lakhs. If you do, you should get the answer 6,20,921. Okay, understand. First of all, what is the price of that machine? Initial price is how much? Purchase price is how much? They have given 1 crore. I cannot recognize my asset at this 1 lakh rupees only because present value also I have to record. Correct? What is the present value which you have calculated? 6,20,921. Can you tell me what is the total cost of the asset? 1 crore 6,20,921. Very good. You have to tell me, sir, what is the journal entry which we have to pass? If you understand the journal entry, we can skip this topic because journal entry is only the key. Very good. PPE will be debited. There is no doubt about it. How much amount I have to debit? Very good. That is the reason we have calculated 1 crore 6,20,921. 2. Very good. To bank, how much I have to write? 1 crore I have to write because initially I will not pay this 1 crore 6,20,921. 1 crore I have to pay to my supplier. Sir, when I will pay this 6,20,000? After 5 years. After 5 years, I have to pay this 6,20,921, correct? So here what I will let, I have to create something which is called as liability. And that liability is called as to provision for decommissioning, restoration and other liabilities. Sir, how much amount I have to create? 6,20,921 I have to write. Now my journal entry will match. Debit I have written 1 crore 6,20,921. Credit 1 crore will go to bank. 1 crore will go to bank. If I credit purchase, if I made, I will write 2 credit account. If I make payment in cash, I will write 1 crore in cash. What about balance 6,20,921? 6,20,921 I will transfer to provision. I will create one provision. Correct. One more doubt a student have to get. Sir, now I have recognized the liability of how much? 6,20,921. This liability when I will pay, tell me. When I will pay this 6,20,000 after 5 years I have to pay. But tell me, what is the liability which I have estimated after 5 years? After 5 years I have estimated 10 lakhs, correct? But my books of accounts, how much I have created? 6,20,921 I have created. Can you tell me the difference? 10 lakh minus 6,20,921. Some 3,79,079. This difference of 3,79,079 is only because of timing difference. Correct? Because we have calculated present value, but this expense I will incur after 5 years. So whatever the difference which I am getting, that is because of what? Timing difference, which is also called as difference because of present value calculations. I have got the difference. Now, it is totally clear at the end of year 5, I have to pay this 10 lakh rupees. But initially I have recorded 6,20,921, which means what? I have to increase my liability. I have to increase my liability so that at the end of the 5th year, it should become how much? 10 lakhs. Correct? Initially in my books, this is the balance. I have to increase this liability to become 10 lakh rupees at the end of year 5. Sir, what I have to do? Whatever the interest amount which you have said, 3,79,079, I have one option. I can recognize this total amount at the end of year 5 only. But that is not correct because the present value difference will be occurred in every year. So I cannot recognize the total amount at the end of 1 year. Therefore, this option is incorrect. Second option, if I want, I can divide by 5. 3,79,079 divided by 5 and recognize every year proportionately. The thing is, this is also wrong because if you do divided by 5, you don't know about time value of money. If you know time value of money, you will not divide with 5. Correct? So what we have to do, sir, we have to prepare something which is called as amortization schedule. What we have to prepare? We have to prepare something which is called as amortization schedule. So come to this balance. It is then page number 18. Come to the provision for drawal. Come to the provision for drawal. Year 1, what is the opening balance? Tell me. 6,20,921. What is the discount rate? 10% is the discount rate. Just do into 10%. 6,20,921 into 10%. You will get this 60,092. Will I make any payment at the end of year one? This is just like hire purchase. You will do opening balance plus interest minus installment like this. But I will not make any payment. Therefore, this will become my closing balance. This will become my closing balance at the end of year one. Second year, this will become what? Opening balance into 10%. Into 10%. 68,301. Will I make any payment at the end of year two also? Again, this will also be added, and my closing balance at the end of year two will be how much? 7,51,314. Correct. Same at the end of year three also, I will not make any payment. Therefore, this will become my opening balance at the end of year three. Please do these calculations and cross check and tell me is it correct or not. Do for all 5 years and tell me is it correct or not. Last year, last year what we have to do is, so last year you can write the balancing figure also. Okay, balancing figure means what? 10 lakh rupees, because we are taking round figures. Some approximations will be there. So that is the reason we can write the last year round figure also. See, we have presented in tabular format, but I want journal entries. But I want what? A journal entries. See, understand. I think you have said some difference which is called as 3,79,079. This difference is because of timing. This difference is because of what? Timing. Therefore, I can say that this difference is nothing but interest. This difference is nothing but what? Interest. Another name for interest is what? Finance cost. Another name for interest is what? Finance cost. See, carefully, what I am doing is every year I am increasing my liability. Every year what I am doing, I am increasing my liability. Liability is having which balance? Tell me. Credit balance. If I want to increase my liability, I have to further credit. Correct. I also have to recognize interest expense. I have to recognize what? Interest expense. So you only have to tell me what is the journal entry. Interest expense also I have to recognize. Plus at the same time, what I have to do? Liability also have to be increased. So what is the journal entry? Interest expense account debit to provision for draw. Provision for draw. At the end of year one, how much amount I have to write? This amount I have to write, because year one closing balance should be this much. Whatever I have presented in statement, I want journal entries format. That's it. So here I have got 6,18,013. Sir, how you have got this amount? I have increased in my liability. So just refer the journal entry for the first year. Finance cost account debit to provision for drawback. Just repeat for another 4 years. Same entry we will pass. Same entry we will pass. Sir, after 5 years, what will be my balance? Tell me. 10 lakhs. Sir, assume I am making the payment of 10 lakh rupees. Now what is the journal entry I have to pass? Very good. I have to cancel this provision, which means I will debit provision, and while making payment, I will write a 2 bank account. Correct? That much simple it is. Okay. Just remember, one more thing you have to understand here. Whatever the process which I am doing, this process is called as unwinding of discount. Unwinding of discount or finance cost. This process of charging every year interest, it is called as unwinding of discount, because total discount is 3,79,000, but I am unwinding some portion in each year. Okay, simple. Simple. Same this process we will also do in financial instruments chapter also. So please remember this unwinding of discount concept. First, I will record that present value. I will prepare amortization schedule. Same journal entries I have to pass. That's it. Same process. This process is called as what? Unwinding of discount. We will do in many chapters. Okay, don't worry. We will get proper practice in this topic. Okay. So now quickly come to concept number 15. Concept number 15. See, my objective is to teach those models which are essential to solve those super 75 questions first. Let us learn those models. After completion of all those questions, remaining topics also I will cover. Don't worry. Okay, we are learning in a sequence. Come to this subsequent recognition of PP. Subsequent recognition of PP. See, it is very simple. Subsequent recognition means each reporting period, what I have to do. We all know that if any PPE is there, at each reporting period, what I have to charge? I have to charge something which is called as what? Depreciation. And one amount you have to find out which is called as carrying amount. Tell me how you will get carrying amount? Cost minus depreciation. Another name for carrying amount is nothing but book value. Another name is nothing but book value. Understand? Carrying amount formula is total cost minus depreciation. Correct? Simple. Carrying amount, that's it. You are having an option to show your asset at something which is called as cost model. Cost model means whatever the original cost which I have recorded earlier, I will continue the same cost. Every year I will charge depreciation, but I will not make any adjustments to the original cost. One more model is also there. For example, one entity is there. That entity have purchased building 20 years back. It have purchased 20 years back. It have purchased at 1 lakh rupees, but now the value of that building is 1 crore. Can it happen practically? Number of cases it can happen. So what an entity wants to show? Entity wants to show correct picture of its assets. Therefore, it is having an option to choose their assets at which model? Revaluation model also. If it is having an option, it can choose a revaluation model also. So revaluation model means what we have to do? I have to calculate something which is called as fair value on the date of revaluation. Sir, how we have to calculate this fair value? We are having one standard which is Ind AS 113. It is there in our syllabus. There they will explain what is how to calculate the fair value. But according to this standard, they will always give in the question. But practically, we have to go to Ind AS 113. There they will say how to calculate the fair value of an asset. But this standard purpose, they will always give in the question. Okay, simple point. Understand, here what we have to do is, for example, assets carrying amount is 2 lakh rupees. Assets carrying amount is 2 lakh rupees. I have calculated the fair value. Very simple. You will tell me the journal entries, then you can directly start with one question. Fair value, they have given 3 lakh rupees. Cost is 2 lakh. I mean, carrying amount is 2 lakh. Fair value is 3 lakh. Think and tell me, is it upward revaluation or downward revaluation? Obviously upward. Upward revaluation means will my asset balance increase or decrease? My asset balance will increase. So tell me what is the journal entry? Asset account debit to revaluation reserve. But understand, this revaluation reserve will go to something which is called as OCI. What is the full form of OCI? Other comprehensive income. Very good. How much amount I have to transfer? 1 lakh I have to transfer. 1 lakh should be transferred to which account? Other comprehensive income account. That is also which? Revaluation reserve. This other comprehensive income will have totally 9 items. Totally, this other comprehensive income will have 9 items. Sir, what are those 9 items? I will not discuss all those 9 items at once. What I will be doing is, I will be discussing each item wherever we have got that point. Okay, here one item we will get. Sir, what is it? First let us complete this point and then I will explain. If it is upward revaluation, always remember, if it is upward revaluation, the difference between carrying amount and fair value will be transferred to OCI account, which is also called as revaluation reserve account. Correct? Very good. See, always it is not that upward revaluation only can happen. Sometimes what will happen? Downward revaluation also can happen. For example, carrying amount is 2 lakh. Fair valuation it is 1 lakh only. Now tell me, is it upward or downward revaluation? Downward. So what will be the journal entry? Think and tell me. Asset should be credited, correct? To PPE or asset I have to write. How much I have to write? 1 lakh I will write. Understand? If it is downward revaluation, don't transfer the balance to OCI. If it is downward revaluation, you have to transfer the balance to P&L account. If it is downward, where I have to transfer? I have to transfer to P&L account. Sir, but what if it is upward revaluation? I have to transfer to other comprehensive income account. Correct? I have to transfer to other comprehensive income account. Very simple. You have to remember these two treatments. Tell me if it is upward revaluation, where I have to transfer the difference? Other comprehensive. If it is downward, P&L account. Correct? If it is first time revaluation, I will do like this. So what is the meaning of first time revaluation? Let us slowly understand. First time revaluation, upward means difference will be transferred to other comprehensive. Downward revaluation means difference will be transferred to P&L account. Now what will happen? Let us try to understand. Sir, my asset is upward revalued earlier. In the last year, for example, my asset is upward revalued and the balance is assumed it is 1,50,000. This is OCI balance. This is which balance? Other comprehensive income balance. You have increased your asset value by how much? 1,50,000, and that 1,50,000 is there in revaluation reserve balance. Understand what have happened? 2 years have completed. After 2 years, your carrying amount is assumed 7 lakh. I am not doing the calculations. I am directly giving the carrying amount as 7 lakh rupees only. Earlier, how much amount of OCI is there? 1,50,000 is there. Understand what have happened? Situations have gone very bad. You have calculated the fair value and you have got the fair value only as 5 lakh rupees. You have got the fair value as how much? 5 lakh rupees. Tell me, is it downward revaluation or upward revaluation? Downward revaluation. Sir, but earlier I have did upward revaluation. Earlier I have did upward revaluation. Sir, how much balance is there in OCI? 1,50,000 is there in your OCI. Understand from the point of shareholders. For one asset, you have created OCI and now you are saying it is downward revalued. How much it is downward revalued? 2 lakh rupees downward revalued. See, both are contradicting each other. You are saying my asset is having upward revaluation balance and now you are saying my asset is downward revalued also. Your asset is downward revalued by more than the amount what you have created OCI earlier. అంటే మీరు అబ్జర్వ్ చేస్తే ఇంతకు ముందు ఓసీఐ ఎంత ఉందో అంతకంటే ఎక్కువ డౌన్వర్డ్ రివాల్యుయేషన్ లాస్ వచ్చేస్తుంది. కాబట్టి వాడు ఏం చేయమంటాడో చూడండి. స్టాండర్డ్ విల్ సే ఫస్ట్ ఆఫ్ ఆల్ మై అసెట్ balance is reduced by how much? 2 lakh rupees. So it is very clear. Credit I have to write 2 pp. How much I will write? 2 lakh rupees I will write. Debit, should I write P&L or OCI? We have to understand a little bit. How much amount is there in OCI? Tell me first. First, cancel this 1,50,000 because it is incorrect. You cannot say both. My asset is upward revalued also, my asset is downward revalued also. You cannot say both items. So cancel one item. Sir, which item I have to cancel? What is the most recent item? Believe that. You are doing downward revaluation right now because this is only correct. So what I have to do? I will debit OCI. See, if upward revaluation is there, OCI is having credit balance. I have to cancel that. Therefore, what I will do? I will debit OCI. Sir, how much you will debit? 1,50,000 I will debit. Sir, what is the balance? Very good. 50,000 will be transferred to P&L account debit. This is the journal entry which you have to pass. Simple journal entry is going on. Okay? Tell me, if it is upward revaluation, where you will transfer the difference? If it is downward revaluation, where you will transfer the difference? P&L account. But sir, earlier my asset is upward revalued. Now my asset is downward revalued. If there is any OCI balance, first I will adjust that OCI balance. Balance amount will be transferred to P&L account. Correct? Very good. One more thing can also happen. Sir, earlier asset is there. That asset is upward revalued. Balance is 1,50,000. 2 years are completed. Sir, after 2 years, carrying amount is 7 lakh only. Assume it is correct only. But fair value 9 lakh. Assume it is increased to 9 lakh. Is it upward revaluation or downward revaluation? How much amount is upward revalued? 2 lakhs. So debit what I have to write? Asset or PP account debit. How much I will write? 2 lakhs I will write. Credit what I have to write? See, if earlier also upward, now also upward, do the same treatment. Because nothing you have to change. Earlier also upward, now also upward. So I will write 2 OCI. How much I have to write? 2 lakh rupees I have to write. That's it. Earlier also upward, now also upward. What I have to do? Earlier also I will increase the balance. Now also I will increase the balance. Same treatment. Same treatment means what difference will be transferred to OCI account. Correct? Simple point. Last point. Earlier I have did downward revaluation. Earlier, last years I have did downward revaluation and I have got 1,50,000 loss. If 1,50,000 downward revaluation loss is there, where I have transferred that balance already to P&L account already I have transferred, but in the current year what have happened is, sir, assume the carrying amount is 7 lakh only, fair value 9 lakh. Carrying amount is 7, fair value is how much? 9. Now tell me, is it upward or downward? But earlier you have said that my asset is downward revalued by 1,50,000. You only have said that, which means already in the last year, how much amount you have already charged to P&L account? 1,50,000. But your asset is increasing. Now conditions have become good. Your asset value have increased more. My asset value is increased by that much more, so that my earlier recognized loss is also reversed. And ముందు recognize అయిన లాస్ కంటే ఏమొచ్చింది మనకి ఎక్కువ గెయిన్ వచ్చింది. Therefore, first what I will do? First, how much my asset is increased? Tell me. 2 lakh. Very good. So I will debit asset account debit 2 lakh. Credit. First, whatever the balance which I have created as loss earlier, I will set off that loss. Correct. So first, what I will write? To P&L account 1,50,000. Next, OCI 50,000. Understood? This is the entry which we have to pass. Sir, one last chance is there. Earlier also downward, now also downward. If earlier is downward, what you have did? Now also it is downward, what you have to do? P&L account you have to do. Treatment is completed. Okay, treatment is completed. Now what we are learning? Revaluation treatment, how we have to do, we had understood. Concept number 17 we have completed. The 16 I will come, don't worry. Concept number 17 we are done. Here what we will discuss, treatment of revaluation, gain or loss. First they have said first time revaluation. First time revaluation, if it is upward revaluation, what I have to do? OCI. First time upward, what I have to do? OCI. Sir, first time downward, P&L account. First time downward, P&L account. Next, one more thing, subsequent revaluation. Subsequently, if I got upward, two chances are there. Earlier I may recorded upward, or earlier I may recorded downward. Sir, subsequent upward, if earlier is also upward, which means I have to do the same treatment, which means what I have to do? OCI. I will recognize the revaluation surplus in OCI. And one more thing, sir, earlier it is downward, now it is upward. First, what I have to do? First, I have to reverse earlier loss. Balance gain will be transferred to OCI. Last treatment. Sir, subsequently, I am getting a downward revaluation. So, what I have to check? Earlier, what you are getting, you have to check. Earlier, also, you are getting downward. Recognizing P&L account. Sir, earlier I have got upward. Some OCI balance is there. First, I will eliminate that OCI balance and balance part will be transferred to P&L account. Understood? Simple point. Okay, very, very important point. Based on this, some questions are there. We will nicely understood those questions. But before that, one last concept also we will check and then we will take some 5 minutes break. Okay, but check this last part. Accounting treatment in case of revaluation. Based on this, they have already tested one 7 marks question in your past. I am not discussing that question because I will discuss one example here. If you carefully understand this example, no need to solve that question. Okay, so carefully analyze this question. First of all, what is the first method which is called as depreciation elimination approach? In the method only, what we have to do, they have given. What is the method? Tell me. Depreciation elimination approach. In the question, they will give you depreciation. What you have to do, you have to eliminate the depreciation. So how we have to eliminate, let us understand. Plant and machinery cost, they have given 1 lakh rupees. Cost, how much they have given? 1 lakh. Accumulated depreciation, how much they have given? 55,000. First, understand the meaning of this accumulated depreciation. Normally, every year if you charge depreciation, tell me what is the journal entry which you have to pass? Every year if you are charging depreciation, what is the entry? Depreciation account debit to asset account. Correct? This is the entry which you have to pass normally. But sometimes what the entities will do is, entities wants to show their asset at cost only. Therefore, they will not charge depreciation to asset. They will create a separate ledger called as accumulated depreciation. In balance sheet, they will set off asset with accumulated depreciation. Net presentation is same only. But just they want to show their asset at a cost, therefore they will not charge they will not charge depreciation to accumulated depreciation. Sir, where they will charge? They will charge the depreciation to they will not charge depreciation to asset. They will create a new ledger which is called as what? Accumulated depreciation account. Understand? This is the entry which they will pass. This is the entry which they will pass. Which means what? Accumulated depreciation account is having which balance? Credit balance or debit balance? Credit balance. Now understand what is the treatment. See, carrying amount, cost is 1 lakh. Accumulated depreciation is 55,000. Can you tell me what is the carrying amount? Can you tell me what is the carrying amount? 45,000. See, what is the name of method? Tell me. Depreciation elimination approach. Which means first what I have to do, I have to cancel the depreciation. Sir, accumulated depreciation is having which balance? Credit balance. Sir, how to cancel? Debit. Sir, with what item I have to cancel? Asset. Obviously with asset, therefore I will pass this entry. Accumulated depreciation to asset account. My depreciation got eliminated. Correct? First step done. Sir, second step what have happened? Fair value is 65,000. Understand? Fair value is how much? 65,000. Sir, what is your carrying amount? 45,000. Carrying amount is 45 because 1 lakh minus 55. Carrying amount is 45. Fair value is how much? 65. Sir, is it upward or downward? So tell me the entry. Asset account debit to OCI account. Sir, how much? 20,000 I have to pass. That much easy. That much easy. This they have asked for 7 months. I'm not joking. I'll show you that question. First method, depreciation elimination approach. Sir, what we have to do in this method? I will eliminate depreciation with what item? It's asset. They will give fair value. Difference I will transfer to either OCI or OCI reserve or P&L account, depending on upward or downward revaluation. Correct? Second method is also there. What is the second method? Read this. Here we will not eliminate depreciation. Here we will not eliminate depreciation. Here what we have to do? Gross carrying amount adjustment approach. Same adjustment we will continue. Same question we will continue. What is the carrying amount in the earlier question? Same question, let us understand. Sir, here I will not cancel any asset. I will not cancel any ledger. What I have to do? I will calculate something which is called as percentage increase. What I will calculate? I will calculate something which is called as percentage increase. I will proportionately increase the cost also. I will proportionately increase the accumulated depreciation also. Both I will increase. Then I will exactly get the difference. Sir, how you will get? Let us check. See, fair value is 65,000. Carrying amount is 45,000. Calculate the proportionate increase. Proportionate increase means 65,000 minus 45,000 divided by 45,000 we have to take. 65,000 minus 45,000 divided by 45,000. How much you have got? 44.44%. See, increase your asset by 44.44%. Accumulated depreciation also increased by 44.44%. So what are you saying? 1 lakh into 44.44%. How much it is? This much I have to increase my asset. This much I have to increase my asset. Sir, what is your accumulated depreciation? Into 44.44%. See, accumulated depreciation is having credit balance. I have to further credit how much? 24,444. See, debit I have written 44,444. Credit I have written 24,444. Is my journal entry matching? We have to write 20,000. We have to write further 20,000, then only my journal entry will match. Sir, what is this 20,000? OCI. Compare first and second method. Both methods you will get the same OCI. 20,000 only you have to get. Correct? Very, very simple method. Here also I will get 20,000. Here also I will get 20,000. Both should give you the same answer. What is the first method called as? Tell me. Depreciation elimination approach. What is the second method? Gross carrying amount adjustment approach. Sir, in first method what we have to do? I will eliminate the depreciation. Sir, with what item I have to eliminate the depreciation? With asset value. Further difference between carrying amount and fair value, what I will do? If it is upward, I will transfer to OCI. If it is downward, I will transfer to P&L account. Sir, but what if it is second method? Gross carrying amount adjustment approach, what we have to do? Proportionate change I have to calculate. Increase that proportionate change with the asset also. I mean, very good. Cost also and accumulated depreciation also. Balancing here will be obviously difference between carrying amount and fair value. Okay. If you don't trust me, please open workbook. I will show you the question. Whatever they asked it for 7 marks, let me show. I think December 24 attempt they have asked. This one. Mohan Limited, question number 7, page 27. Question 7, page 27. December 24. December 24. Question number 7. Mohan Limited question, just to find out these two. Just to find out these two and read, sir, what is the first method, what is the second method? What is the first method, what is the second method? Read everyone also please read. Online students, you also have to tell me what is that. Same model also they have given. Gross carrying amount they have given, accumulated depreciation they have given, carrying amount they have given. Sir, one more thing what they will give? Fair value they have given 3 lakhs. First method what they are saying, tell me. Gross carrying amount adjustment approach. Second proportionate amount we have to. Second method what they are saying? Accumulated depreciation elimination approach. How many marks? 7 marks. Such a kind institute, they are not even asking narration also. Narration also they are not asking. Okay, which means easily you can get 7 marks. There is no second chance in this. Okay, so easily we have to get. Here, please do small correction. Here, gross carrying amount should be 4 lakh. Gross carrying amount should be 4 lakh. Accumulated depreciation should be 1,60,000. Accumulated depreciation should be 1,60,000. Then my net carrying amount should be 2,40,000. The rest of the question is same. Rest of the question is same. Okay. 4 lakh, 1,60,000, 2,40,000. One final time. Tell me, if any asset is upward revalued, what is the treatment we have to do? Transfer to OCI. Sir, if any asset is downward revalued? Sir, my asset is earlier upward revalued, now also upward revalued. Sir, earlier asset is upward, now downward. First adjust with OCI, balance will be transferred to. Sir, earlier downward, now also downward. Both will be transferred to payment. See, if there is any different treatment, then only we have to do the adjustment. Otherwise, repeat the same. Sir, earlier I got downward, now I got upward. First adjust the P&L account, balance amount will be transferred to OC. Very simple treatment going on. Okay. So that's it. We'll take some 5 minutes break and we will resume at 11:20. Time is 11:30. 11:20. We will complete other concepts also. At the same time, we will cover most important these 5 questions we will cover. Okay. I will not go fast. You only will solve and tell me the calculations. I will just glance through the question. Okay. I will cover all these 5 questions along with balance concepts also. So let us meet at 11:20. Okay, online students also, let's meet at 11:20. బ్యాటరీ చేంజ్ చేసుకో. గూగుల్ వచ్చినప్పుడు when we discuss Google.
In last we will do, no? In one question they are doing by total number of equity shares they are dividing. In one question only number of equity shares.
Sometimes they will give
That
partly
I'm not
paid up.
understanding. Last month
Sometimes they will give in the question partly paid up shares.
in both questions they get party.
First of all, the valuation of shares, what the segment totally errors are there. So many errors are there. So recommend you to check the work. Percents are only mistakes. Correct? At the live option, zero process.
అదే కంప్లీట్ చేయాలి
ఇక్కడ రోజులుగా కొంతమంది పాత బుక్స్ ఉన్నాయి.
అవును సార్
కొత్త బుక్ ఇచ్చి అది కన్ఫ్యూజ్ అవుతుంది.
పర్చేస్ చేయమని చేసి
లేఅవుట్
పర్చేస్ చేయమని చెప్పాను.
కాన్సెప్ట్ కూడా అవైలబుల్.
వాళ్ళకి కాన్సెప్ట్ ఇవ్వలేదు సార్.
టీచర్ క్వశ్చన్ తెచ్చిన పీడిఎఫ్ తీసుకుంటాం. సెల్ఫ్ స్టేషన్స్ పీడిఎఫ్. అది ఆల్రెడీ సొల్యూషన్ తీసుకుంటాం.
యాక్సెస్ ఏదంటే 20% డిస్కౌంట్ కూపన్ నైట్ ఒక 2 కూపన్లు పెట్టి 2 సెకండ్గా పెట్టండి. నైట్ చేసింది
టోటల్ వర్క్ బుక్ ఆన్సర్స్ పెట్టాలి.
అది లాగిన్
కాంటాక్ట్ యువర్ సార్.
నేనైతే షూట్ తెచ్చుకుంటాను మాట్లాడాలి.
అలా చేయకూడదు మహేష్.
అక్కడైతే మీకు
only equity shares then we divided and we got this. Next, in one more question, but then for equity shares. Equity shares are valued.
That's what
Here there is only equity shares.
sometimes
Then this last thing also I'm not understanding this.
for example 10 rupees fully paid up and 10 rupees fully paid up shares are there. Both are different. Then also what we have to do is
Then we are considering as 10.
I wait and we will. So when number of shares getting calculated, later we will like this. And also sometimes they will give you dividend by equal valuation of three methods of valuation. Dividend dividend or earnings. And calculating dividend giving or earnings, what we have to do is we have to divide the total share capital. In total value, whatever we have to divide it by total
Total
share capital.
value should take what number
Share capital we have to, that is dividend yield. We will later discuss that.
అయిపోయి కదా మా ఇంట్లో మాట్లాడుతున్నాం వాస్తవాన్ని వెయిట్ చేస్తాం. ఏంద్రా హలో మార్చేసి అన్ని మార్చేసా.
బుక్స్ అంటే
హలో
ఇవ్వకుండా
హలో హలో వస్తుందా? ఏ రావట్లేదు. హలో ఓకే కదా సార్ అంతా? హలో అవి బాగానే వస్తున్నారు సార్ మీ దానికి. కానీ అసలు మీ పొద్దున స్టార్టింగే 6 మంది వచ్చారు. స్టార్టింగ్ ఎంతమంది ఎస్ఎఫ్ఎంకి వచ్చారు. ఎస్ఎఫ్ఎం
మనం ప్రమోట్ చేస్తున్నాం కదా 2 వీడియోలు చేసి.
మరి
చైర్ ఏంట్రా తేడాగా ఉంది.
సినిమాకి 3 వచ్చారు.
చైర్ ఏంట్రా తేడాగా ఉంది. అది హైట్ సరిపోదా?
చూడండి
ఒక్కసారి అంచెన్ పెట్టారు. ఇది నుంచొని చెప్పచ్చు ఎక్కువసేపు నుంచోలేను బ్రో. ఇందులో అదే బెటర్.
అక్కడ ఏమి వచ్చింది? సిఎఫ్
ఎన్ని బుక్స్ ఉన్నారా?
2
ఎంత చెప్పు? 2 కలిపి 7.
సరే.
ఇప్పుడు ఎవరన్నా తీసుకుంటే స్టాక్ ఉండదు. సరిపోదు అయితే.
ఉన్నాయి.
ఇప్పుడు కావాలంటే ఎక్కడి నుంచి వస్తారు?
ఉన్నాయి సార్. అంటే నేను ఉన్నాయి స్టాక్ నా దగ్గర.
మైక్ ఆపలేదురా. ఓకే ఇప్పుడు వస్తున్నాయి కదా సౌండ్స్.
అది కాదు ఇది
ఇది కదా రాదు.
ఇది దీనికి సార్. ఇది ఇక్కడ దీనికి.
మరి ఇది దానికి
వాళ్ళకి.
ఇది ఆన్లైన్ కా? ఇది ఇక్కడ ఇది తీసినా పర్లేదు అప్పుడప్పుడు. ఇది వెళ్ళిపోద్ది కదా డిస్టర్బెన్స్. ఓకే
ఇది దానిలో పెట్టుకోవాలి.
వాళ్ళు వచ్చామని అయితే పిలవలేము. ఎందుకు వెళ్ళిపోయినా?
రూమ్కి
లంచ్
వెజ్
లంచ్ ఏం చేద్దాం? స్నానం ఏం చేద్దాం?
వెజ్జే కదా. బాగుంటుంది వెజ్. మన నచ్చిన
ఇదేంటారు? ఇదా? ఇలానా? అవునా? అసలు ఇక్కడ మైకే అవసరం లేదు నాకు తెలిసి, ఉంటే సరిపోతుంది. దీనివల్ల డిస్టర్బింగ్ అప్పుడప్పుడు.
హలో,
ఓకే ఓకే.
ఇది నాకు ఇది ఆగిపోయినా పర్లేదు, ఇది ఆగకూడదు నాకు.
ఇది ఉంటే ఓకే.
ఇక్కడ 3 పాయింట్లు ఉన్నాయి. అడగండి, పోతున్నా సార్. ఇది పైకి
కింద ఆఫ్ ఉంది కదరా?
కిందికి సార్.
తీసే చిరాకు వస్తుంది.
హలో,
అంటే స్పెట్స్ ఉన్నాయి కదా అని. సరే ఎలా ట్రై చేద్దాం.
హలో.
పట్టుకో అంటే స్పెట్స్ ఉంటే ఇబ్బంది అయిపోతుంది.
అలా కింద స్పెట్స్ లేవండి.
ఏంట్రా ఇంత పైకి ఉంది? అవసరం లేదు.
ఓకేనా మళ్ళా?
నాకు ప్రాబ్లం
లైవ్ ఇది
ఏం కాదులే.
ఏదో ఎవరు మట్టునే ఉంటుండో నా పదమా కర్తవ్యం.
Can you please confirm now? Can you please confirm now, online students? Okay, fine, super. So now let us start with concept number 18, which is nothing but treatment of revaluation surplus balance. Let us carefully understand this. See, for example, one asset is there which is upward revalued. If it is upward revalued, we know that voice okay na? Last question. Voice the last. Okay. So listen. Assume you are having one asset which is upward revalued, and we are having OCI balance of 1,50,000. 1,50,000 OCI balance is there in your account, which means earlier you have passed one entry which is nothing but asset account debit to OCI account. How much? 1,50,000 you have written. Very good. This is the entry which you have passed in some last years. But now what have happened is, in the current year, when your carrying amount is, assume 6 lakh rupees. Current year your carrying amount is 6 lakh rupees. What you have did is, you have sold your asset. What you have did, you have sold your asset. For example, sold for 7 lakh rupees. Carefully understand what we have to do. Carrying amount is how much? 6 lakh rupees. Sale value is how much? 7. First tell me the journal entry. Very good. I have got 7 lakh rupees. So I will write bank account debit. Very good. I will write 7 lakh rupees. To asset, I will write 6 lakh rupees. Difference is there. Sir, my carrying amount is only 6 lakh, but I have got how much amount? 7 lakh rupees I have got. Have I got profit or have I got loss in this case? Obviously, I have got profit. Sir, where I have to transfer that profit? P&L account. Understand, sir, why you are writing P&L account? See, first of all, sir, the difference between revaluation and sale we have to understand. Sir, if we are doing revaluation, which means if any asset is upward revalued, we will get profit on revaluation. And that profit on revaluation is called as unrealized profit. What is that profit called as? Unrealized profit. Sir, what is the meaning of unrealized? Unrealized means we have not sold actually, which means profit is not realized. If you have sold, profit will be realized. Correct? Unrealized means you are not actually selling the asset, but your asset balance is increasing. Sir, always remember, if it is unrealized profit, I will transfer to OCI. If it is realized profit, which means I have actually sold the asset. If you have actually sold the asset, profit or loss will be transferred to which account? Profit and loss account only. Understand the difference between profit on revaluation and profit on sale. If it is profit on revaluation, it is called as what? Unrealized profit. Unrealized profit will be transferred to OCI. Sir, but if it is profit on sale, it is called as which profit? Realized profit. And if it is realized profit, it will be transferred to P&L account. Understand? Now this thing. Now I have sold the asset actually. Therefore, this profit is called as which profit? Realized profit. Sir, what is the difference? Tell me. 1 lakh is the difference, and this 1 lakh is called as profit. Now I have one doubt. Sir, for one asset which is previously revalued upward, I have created some OCI balance. Sir, how much OCI balance you have created? 1,50,000 I have created. Now that asset itself is gone. But that asset related OCI is still there. Understand? Asset is sold, therefore I have eliminated the asset. But what is there? That asset related OCI balance is there. It is very logical. Since asset is only gone, asset related OCI also what I have to do? I have to transfer. I have to remove that OCI balance. Correct? Sir, where we have to remove, we are having two options. First option, anything if you are removing, profit or loss will be transferred to P&L account. That is one option. Second option, sir, if any asset, if any item is there, for example, we all know that OCI is having which balance? Credit balance, because it is upward revaluation. Now I have to cancel. So what I will do? OCI account debit. How much amount I have to write? 1,50,000 I will write. Always understand. Sir, this OCI balance will be always transferred to retained earnings account. Sir, where it will be transferred? OCI balance will be transferred to retained earnings account. This retained earnings is also called as other equity account. Don't transfer to profit and loss account. That is the thumb rule which you have to remember. That is the thumb rule which you have to remember. We should not transfer OCI balance in case of PPE to which account? Profit and loss account. Sir, how you are saying that? See, what is happened is, in OCI, totally 9 items are there. How many items are there? 9 items are there. Those 9 items are not important. Some 4 to 5 items are there. Wherever important, I will explain you. Some items are not reclassified to P&L account. Some items are what? Not reclassified to P&L, which means don't classify that item to P&L account once again. Sir, second items are what? Reclassified to P&L account. Sir, what we have to do, understand the difference. If any item is reclassified to P&L account, for example, if any item is classified as reclassified to P&L, at the time of sale, such OCI balance should be transferred to P&L account, because it is which item? Reclassified item. Sir, what if it is not reclassified item? We will not transfer the item to P&L account. Sir, where I will transfer? I will transfer to retained earnings account or other equity account. You have to remember these two items. Sir, what are the two items? Items which are not reclassified to P&L account. If it is any item which is not reclassified, where I have to transfer that item? Other equity or retained earnings. Sir, if it is an item which is reclassified, where I have to transfer? P&L account I have to transfer. Okay. OCI balance in case of revaluation of a property, plant and equipment is which item? Non-reclassifiable item. It is a which item? Non-reclassifiable item. Don't remember those 9 items. It is not necessary. Only wherever I am saying, just remember those items. Okay, it is a non-reclassifiable item. Sir, what is the meaning of non-reclassifiable item? Will I transfer that balance to P&L account or OCI account? Sorry, will I transfer that balance to P&L account or other equity account? Other equity account I have to transfer. Okay, simple point. Next, this is first alternative which you have to do. Sir, asli ఇప్పుడు ఏం చెప్తున్నానంటే point, my asset is sold, but asset related OCI balance is there. So what I have to do? I have to transfer that OCI balance also. Sir, where I have to transfer? Do I transfer to retained earnings or P&L account? I will transfer to retained earnings. This is one method which you have to do. Sir, second method is also there. What is that second method? Second method is saying, don't transfer total amount. Don't transfer total amount at the time of sale only. Because in first method, we will do nothing. Only when you actually sold the asset, I will transfer the total amount to other equity account. That is method number 1. Sir, method number 2, what they will say, every year transfer some amount. Every year what I have to do? Every year I will transfer some amount to other equity account. Whether it is option number 1 or option number 2, I will always transfer to other equity only. I will not transfer to P&L account. Okay, so come to this concept book. You will understand whatever I am trying to say here. Concept number 18. Concept number 18, they will say that treatment of revaluation surplus balance. Option number 1, what they are saying, when the asset is de-recognized. Sir, recognized means what? Bringing the asset into our books of accounts. De-recognized means we have to remove that asset, which means what? Sir, de-recognized is nothing but sold. De-recognized is nothing but what? Sold. Or classified as held for sale. This held for sale discussion is there. You can write if you want. Please write here Ind AS 105. Ind AS 105, not there in your syllabus, but one question I will explain little point about this. Some knowledge you require, Ind AS 105. Okay, simple. This is first option. Sir, what you have to do? Read this last one. That asset related revaluation surplus will be transferred to retained earnings directly. No P&L account will be involved here. Sir, why? Because it is not a reclassified item. This is option number 1. Total amount will be transferred at the end of, while you sold the asset only, total amount will be transferred. Sir, what is the second alternative? Check that. Transfer some portion of that surplus every year to retained earnings. So in step number 2, what I have to do? Transfer some portion of that surplus every year to retained earnings. This is also not a reclassified item only. Sir, how much amount you have to transfer? Read these 3 items, what they are saying. With example, you will understand exactly whatever I am trying to say. We will solve one question. In that question, you will understand. But read this point. First, what I have to calculate? Depreciation on revalued amount. First, what I have to calculate? Depreciation on revalued amount I have to calculate. From that, I have to deduct something. What is that? Depreciation on original cost. Which means, sir, if revaluation itself is not taken place, if there is no revaluation, what is the amount of depreciation which you have to charge? You have to calculate. Sir, what are you saying? Please give us an example. Understand. Asset is revalued. Asset is revalued, and on that revalued amount, my depreciation is 3 lakh rupees. Asset is revalued, and on that revalued amount, depreciation is how much? 3 lakh. Sir, if the asset itself is not revalued, for example, there is no revaluation, then still I have to charge some depreciation as 2,50,000. Even though if any asset is not revalued, still we have to charge some depreciation, correct? Sir, here, what is the difference? Tell me. 50,000 is the difference. What the standard is saying is, first of all, this 50,000 represents excess depreciation due to revaluation. Understand whatever I am saying? This 50,000 is nothing but what? Excess depreciation due to revaluation. Sir, how you are saying? See, with revaluation, my depreciation is 3 lakhs. Without revaluation, my depreciation is how much? 2,50,000. Which means, can't I say that this 50,000 is excess depreciation due to revaluation? Sir, first of all, why you have created OCI balance? Tell me. Why you have created OCI balance? Because it is upward revalued. Because it is upward revalued, therefore, what I have to do? Every year, I have to transfer excess depreciation due to revaluation to retained earnings directly. If you don't understand this question, we will have one beautiful question. In that question, you will understand the treatment. Okay? So, fine. Now, what we'll be doing is, but last concept is there. After that last concept, we will move to problems. 3 important problems are there. We will discuss those problems. Come to this concept number 19. Come to this concept number 19, subsequent costs. Subsequent costs. See, you have purchased one car. Car is a capital asset. Assume you have decided to give that car as rent, therefore it will become your PPE also. Now what have happened is, after I purchase the car, I have to do something which is called as servicing. For that, I will incur some expenses. At the time of servicing, some consumables also may be used. Some parts they will change. Some day-to-day servicing they will do. Small parts they will replace. Labor charges also they will charge. If you observe carefully, sir, what is the treatment of all these items? What is the treatment of all these items? Sir, do I capitalize these items or should I charge this item as P&L? Simple logic. All these expenses are incurred after your asset is ready to use. After your asset is what? Ready to use. All subsequent costs will be expensed off in P&L account. All subsequent costs, whether repairs, consumables, day-to-day servicing, small parts, what is the treatment we have to do? Recognize as expense in P&L account. Important point, most important. And one more thing. Replacement of parts will be there. For example, if you observe airplanes, etc., those interiors needs to be frequently replaced. Airplanes interiors needs to be frequently replaced, and not only that, outer body of the airplane also, they have to go major inspections. See, some standard weight should be there of the aeroplane. If it exceeds that weight, it cannot go smoothly in the air. So what they will do? They will do too many inspections and too many replacements will be done. Sir, what we have to do is, some items may require frequent replacements while others may not require frequent replacements. For example, if you construct a building, and if you do interiors, generally we will not replace it every year. Correct? If you generally construct any building, generally I will not do replacement every year. For example, 3 years to 5 years, I will keep same like this. Some, for example, if you observe airplanes, etc., you have to do regular replacements. Sir, whatever it is, what you have to do is understand. Read this point. Read this point. If any expense increases the capacity of PPE beyond its originally assessed standard of performance, what you have to do? You have to calculate. They are saying some new point. Let us try to understand. Sir, first of all, one PPE is there. One PPE is there. In that PPE, one component is there. That component is able to produce 10,000 units. One component is there. That component is able to produce how many units? 10,000 units. I have started using the asset. I have already started using the asset. Now what have happened? After 6 months, I have decided to replace this component. After 6 months, what I have did? I have decided to replace this component. Now I have purchased a new component which is capable to produce 15,000 units. I have purchased a component which is capable to produce 15,000 units. What I will do? I will remove this component and I will keep this new component which is called as 15,000 units. I mean, which component will produce 15,000 units? I will keep that component. Think and tell me, sir, do I have to capitalize or do I still have to charge this item to P&L account? Logic is simple. Earlier, I am able to produce only 10,000 units, but now my capacity is increased. Sir, if your capacity is increased, obviously my future economic benefits also will be increased. Therefore, my recognition criteria is met. Therefore, I have to capitalize this new component. Therefore, what I have to do? I have to capitalize this new component. And one last point we have to write somewhere. Just copy this point. At the end of 24th page only, please write. In case of replacement of a part, existing component will be de-recognized at carrying amount, and new component will be recognized at cost. New component will be recognized at cost. Okay, simple. In case of replacement, I will add that new component at cost. Old component should be removed at what? Carrying amount. Old component should be removed at carrying amount and new component should be added at a cost. One question is there. Through that question, you will exactly understand whatever I am trying to say. All these are points which we will combine all these points while solving questions. Okay, easily you can solve the questions. Don't worry. Copied everyone this point? Now, okay, check this concept of depreciation. We have completed this standard. This is the last point which we will check. So fine, check this. Depreciation concept. Sir, depreciation is very simple. First, we will find out something which is called as depreciable value. That depreciable value, I have to allocate this depreciable value over what? Useful life of the asset. Sir, what is the meaning of depreciable value? Carrying amount or cost minus residual value. See, you have purchased an asset at 10 lakh rupees. Sir, at the end of year, I will get 1 lakh rupees as residual value. If someone asks me what is my cost, I will say how much? 9 lakh. I will depreciate this 9 lakh only because 1 lakh I will get at the end of year 10. Correct? So what I will do, I will depreciate only how much? 9 lakh only I will depreciate. Sir, have you got this 9 lakh? This 9 lakh is nothing but cost minus residual value. Okay, easy point. Next, what they will say is, see, if one asset is there, that asset's useful life is 15 years, for example. One asset useful life is 15 years. In that asset, one major component is there. Major component means its price is very significant. Component price is very significant. Sir, for example, if the cost of the asset is 1 crore, component price is only 10 lakhs. Sorry, component price is 10 lakhs, which means it is 10% of the cost of the asset, which means it is significant. Standard is saying very simple. Sir, overall cost of the asset is 15 years. Sorry, overall useful life of the asset is 15 years. But this component should be replaced every 5 years. This component should be replaced every 5 years. Like this can happen. Total asset I can use for 15 years, but that component I can use for how many years? 5 years only I can use. Standard is saying depreciate this 1 crore separately based on useful life of 15 years. Depreciate this component separately based on the useful life of 5 years. If separate useful life is determined and if separate cost is also identified, what I have to do? I have to charge something which is called as component wise depreciation. What I have to charge? Component wise depreciation. The name is fancy, but nothing is there in that. So just read this point. Second point, please read this. Depreciation can be charged separately for each component depending on the cost of those. And read this third point also. Significant item of PPE may have a useful life and a depreciation method similar to another significant item of PPE. Two items may have similar useful life, then I can combine those two items and I can charge the depreciation. Okay, simple point. In that case, grouping is also possible, they are saying. This is totally fine. Fourth point is self-explanatory. We know that land will not be depreciated, but building will be depreciated. The same point they will explain here. Okay. So now, fine, these points are totally fine. Read this last sixth point, then we can start with question. Commencement of depreciation. Sir, from which date onwards we have to commence the depreciation? Date when the asset is available for use. Don't confuse with income tax. In income tax, depreciation will charge it from the asset, the date put to use, but accounts ready to use or available to use. Okay, very important point. Fine, we will solve questions. So quickly come to question number. Shall we solve easy question or toughest question? First easy solve though. Slowly we will develop. Okay, don't worry. Come to question 4. Easiest question. I think no other question is there than this much easiest question. This question also they have asked in exam. Okay, I have selected this as super 75 question. So let us solve this question. Carefully understand. At the time of reading only I will explain most important points. Let us calculate also at the time of reading the question. Very important question. This is there in super 75. I think the first question it is only. Ind AS 16. No, I have given third question, but fine. Let us solve this fourth question first. Ind AS 16, question number 4. Okay, fine. L Limited purchased an aircraft at a price of how much? 6,300 crores, which requires major inspection and overhauling. Remember, whether it is major inspection and overhauling or whether it is replacement of major component, treatment is same. Treatment is same whether it is major inspection and overhauling or replacement of major component. They will give separate useful life, so I will depreciate separately. That much simple. Let us understand. Overhauling should be done every how many years? 4 years. Which means, sir, what is the useful life of this overhauling? 4 years. But they will say estimated life of the aircraft is how much? 15 years. 2 assets, 2 useful lives they have given. What we have to do? I have to separate them. Separately, I have to charge the depreciation. So once again, I am reading the question. Aircraft useful life is how much? 50 useful life. 15 years. Sir, overhauling useful life is how much? 4 years. They are saying aircraft is purchased in 2015. Aircraft is purchased in 2015 and major inspection and overhauling is made in how much? 2019, after 4 years. 2015 they have purchased. Now after 4 years, what is happening? Inspection and overhauling they are incurring. Sir, cost is how much? Cost is 100 crores. Understand what has happened in this case. First of all, I will directly show you the solution. This PDF I have already shared in the group. You will calculate and tell me the answers. Okay, see, first of all, I want, have they given any residual value for the aircraft? Check the question and tell me. Read the entire question and tell me, sir, have they given any residual value for the aircraft? Where they have given? Last line they have given residual value is how much? 300 crores. See, tell me whatever the things which I am asking carefully. Sir, what is the cost of the aircraft? What is the residual value of the aircraft? Sir, what is the useful life of aircraft? Can you tell me what is the annual depreciation? Annual depreciation of aircraft. Have you got? 6,300 minus 300 divided by 50. How much? 400 crores. Sir, 4 years are completed. If 4 years are completed, 4 years depreciation I have to charge. Correct? 4 into 400, Japan. Sir, cost is 6,300. Cost is 6,300. Depreciation is 1,600. Can you tell me what is the carrying amount? Once again. What is the carrying amount? 4,700 crores is the carrying amount. Sir, why I have calculated carrying amount on this date is, on this date something have happened. Some adjustment is happened. So let us understand what is the adjustment also. Very easy question this is. They have incurred major inspection and overhauling at a cost of how much? 100 crores. Understand? Sir, for this inspection, what is the useful life? Which means very simple. Sir, this 100 will be depreciated for 4 years. This 100 will be depreciated for 4 years and balance 4,700 is there now, carrying amount, whatever you have calculated. That will be depreciated for how many years? Total life is 15 years. 4 years are completed, therefore balance 11 years. Aircraft will be depreciated, but overhauling expenses will be depreciated for how much? 4 years only. Sir, what exactly you are trying to say? Understand here. Sir, carrying amount is 4,700 plus inspection cost is incurred. Sir, how much cost is incurred? 100 crores I have incurred. Sir, what is the total carrying amount if I add this inspection? 4,800 crores. What is the inspection cost? Sorry, what is the total carrying amount? 4,800 crores. Sir, now what have happened? Let us read the question and then come to the solution. See, sir, in 2020, next year, what have happened? A Limited further increased repairs and maintenance in the engine to raise its capacity, something they have given. Because of this expense, what is happening? Capacity is being increased. Sir, if capacity is increased, do I have to capitalize? Yes, I have to capitalize. Very good. So check this. 70 crores repairs expense they have incurred. This is not replacement. This is repairs. So I will directly add to the cost. 70 I will add. One worn out component in the wing was replaced in 2020 at a cost of 80 crores. Another component is there. That component is damaged. So what they are doing? They are replacing that component. Correct? Sir, this is cost of new component. This is what? Cost of a new component. How much is the cost of new component? 80 crores is the cost of. Sir, in case of replacement, what I have to do? Tell me. In case of replacement, what I have to do? Recognize new component at which value? And de-recognize old component at the carrying amount. That much simple. See, new component 80 I have to add. Carrying amount 30, what I have to do? I have to deduct. Simple question. Nothing is there. Next. Scrap realized they are saying 12 crores. Oh, something they have said. Scrap. Okay, you will do journal entries, then you will understand. What they are asking? Find the amount to be recognized as an expense and as an asset in 2019 and in 2020. First of all, 2019. 2019, whatever the adjustment which is there, we have solved that adjustment, correct? That major inspection cost is there, so 4,800. Understand carefully, sir. This is the carrying amount as on 1st April 2019. Sir, after 1 year, new adjustments are happened. But during this 1 year, what I have to charge? I have to charge depreciation. Here, 2 items are there. Aircraft is also there. Overhauling is also there. Sir, for overhauling, what is the useful life? For aircraft, balance useful life is 11 years. Correct? Super. Sir, for inspection, 100 is the cost, 4 is the useful life. Therefore, what is the depreciation? 25 crore. Sir, but for aircraft, see, this 4,700 is the balance carrying amount, but residual value is also there. Residual value is also there, so minus 300 divided by 11. Minus 300 by 11, how much? My question is, sir, calculate the carrying amount as on 31st March 20. Calculate the carrying amount on 31st March 2020. Just this calculation. How much? Very good. That is only I have written. But in the next year, 2 new adjustments have incurred. In the next year, what have happened? 2 new adjustments. Sir, first one they have increased it. First one, repairs and maintenance is incurred. I have to capitalize. Sir, how much? Plus 70 I will add. And one more thing, component is replaced. Correct? First I will add the new component at cost. Second, I will remove the old component at carrying. Sir, what is the cost of new component? And what is the carrying amount of the old? Do this adjustment and tell me what is the balance. 4495 CR. 4,495 CR. Okay, I will not show you the answer, but you have to calculate and tell me, sir, what is the depreciation for the next year? What is the depreciation for the next year? Just be a little bit careful. This contains 2 items. Overhauling is also there, and aircraft is also there. Do carefully and tell me your next year depreciation. How much for overhauling? Tell me. 25. For overhauling, it is 25. Sir, okay, let us understand. Don't worry. See, inspection and overhauling. Sir, totally initially the cost is 100, correct? But already 25 depreciation is charged in the first year. Therefore, what is the carrying amount? 75. Sir, what is the balance useful life? 75 by 3 if I do, I will get 25 crore. 75 by 3 if I do, I will get 25 crore. This is the depreciation for inspection and overhauling. And aircraft is also there. Na? Sir, aircraft, understand. Sir, this is how much? 4,495. In this, 75 is belonging to overhauling. Because 100 is the cost, but already 25 I had depreciated. Sir, can you say 4,495 minus 75? 4,495 minus 75 is how much? 4,420. Residual value is also the 300 for aircraft. Residual value is there 300, so 4,420 minus 300. This time balance useful life is how much? 10 years. Very good. Therefore, total depreciation 25 plus 412. 25 plus 412 crore. How much it is? 437 crores. 437 crores. Tell me what is the carrying amount as on 31st March 21. 4,495 minus 437. If you do, how much you will get? Once cross check this calculation. 4,058 crores. Easiest question in the planet. 4. This is also 7 marks they have asked in the past. They have asked it. I cannot show you all the items, but they have asked it. Okay, easiest question. Sir, crux of this question, if they have given separate component of an asset, if they have given separate useful life, what we have to do? Depreciate separately. Correct? Very, very important question. You have to practice this. But see what the question is asking. Find out the amount to be recognized as an expense and as an asset in 2019 and 2020, and also show the carrying amount they are asking. Safe side, I will also pass journal entries also. Safe side, I will also pass what? Journal entries also. You will only tell me what is the journal entries. This solution I will keep in front of you. Solution I will keep in front of you. Sir, what are the journal entries which are required? You have to tell me. Let us start from this date. Because our calculations will start from 1/4/2009 only. In the question they have started. Sir, after this date, what have happened? Tell me. Very good. Major inspection and overhauling cost. How much we have incurred? Tell me what is the journal entry. Very good. Asset account debit to bank. Simple journal entry. Sir, we will pass depreciation also. Tell me the entry for depreciation. Asset. Aircraft account. Amount. Directly we will single amount only, but for our internal purpose, we have calculated separately. Depreciation account, debit to asset account, how much? 425 crores. Correct? Easiest question. Sir, some two things have happened. What we have to do? Capitalize means asset will be debited. Asset account debit how much? 70 crore to asset account debit 70 to bank account 70. Ante kada. One more thing, component replacement is also there. Here let us understand a little bit. Sir, what have happened in this? Let us understand. First of all, read the question, what have happened? They are saying, sir, cost of the new component is how much? Old component carrying amount is how much? 30. Sir, but when they sold that old component, have they got the total 30? When they sold that old component, how much amount they have got? Tell me. Scrap is how much? Only 12 crores. Now, which means, sir, are they getting loss or are they getting profit? They are getting loss. Simple point. How much loss? So 30 minus 12, if I do, I am getting a loss of 18 crores. Sir, where I will transfer this loss? P&L account. Simple. Can't you tell me the journal entry? See, I will write. Sir, bank account debit. How much? 2 PP. In brackets, I will write old component. Or aircraft you can write in brackets, you can write old component. Sir, how much is the carrying amount of old component? Sir, is the journal entry matching? Where the difference is debit or credit? Debit. So what I will write? P&L account debit. 18 crores loss. Correct. Simple point. And one more thing also I have to do. Sir, you are purchasing new component also. You are purchasing new component also, which means I have to debit PP. Sir, what is the entry which you have to pass? If I am making payment in cash, I will write to bank. If I am doing credit purchase, I will write to creditor or vendor or whatever it is. How much amount? 80 I will write. Understand this journal entry. If you can understand this combined entry, that is excellent. Otherwise, you can even pass separate entries also. Anything is fine. Okay. I will give 1 minute time. Please go through the solution and check once. Quickly, you have to check because very good questions are there. So we have to complete this Ind AS 16 before lunch only. You can pass this combined entry, or if you want, you can pass the separate entry also. Okay. I recommend you to follow these answers because our ultimate answer will match. But your institute, sometimes they will give some different presentations. It is not required to follow institute presentations in all the cases. Answer should match. Correct? Whatever they are asking, we have to calculate. That we have already calculated here. So that's it. So I'll give 1 minute. Online students, please confirm. If you are fine, please type yes. Then we will move to next question. You also please check everyone. If you are fine, let us move to another super important question. Okay. If you are fine, come to question number 6, page number 24. Start reading those who have completed. I will read the question in next 1 minute. Others also please cross check, online students. Okay. Just cross check the solution, but after going home, you have to practice. Okay. Come to question 6. Question number 6. This is also previously they have asked in the exam. Your study material question. The similar question already they have asked in your exam. See, ICMAI Institute. If they are asking similar questions, they will change the numbers also in a, what should I say, in a sequential manner only. They will change. For example, they will just double the figures, or they will just do half of the figures. That's it. They will not even give new numbers also, because if they give new numbers, they have to give new suggested answers. That much patience they don't have. They will either double or they will either half the numbers. Number of cases I will show where they have given exactly half the numbers and all. I will show. Don't worry. Okay. So here, another question. Alpha Limited has a machinery at a cost of how much? 4,800. And what is this? Provision for depreciation 1,600 as on 1/4/2018. Question, they have given two amounts, which means we can find out what?
Carrying value of the
Cost they have given, depreciation they have given, which means what we can easily find out? Carrying amount we can find out. Sir, what is the carrying amount in this question? 4,800 minus 1,600. How much? 3,200. Very good. They are saying. And then 3,200. On that day, remaining life of the machine is how much? 6 years. Oh, residual value is how much? 800. Residual value is 800 and remaining useful life is how much? 6 years. Okay, sir. Ingo adjustment is charged. On the same date, an adjustment is made. Okay. What they have did? One component is replaced. Oh, if any component is replaced, tell me what we have to do.
we should add the cost.
New component we have to add to cost. I mean, new component cost will be added and old component carrying amount will be de-recognized. Super. Next, check this. Same date అయిపోయింది కదా. On the same date, what they are saying, the price of the new component is 600 and cost of the old component is 500. And one more thing they are saying, accumulated depreciation is how much? Sir, why they have given the accumulated depreciation? See, old component cost 500, accumulated depreciation 200. Can't you calculate the carrying amount of old component? 300, that's it. Which means I will add 500 and I will deduct 300. Sorry, I will add 600. I will add 600 and I will deduct how much? 300. Correct? Correct, everyone? Check the solution. Check the solution till here. Don't see the further answer. Just check the solution till here. Carrying amount on 1/4/2018, cost of new component minus cost of old, carrying amount of old component. 300, which means how much I have got? 3,500 I have got. Let us read the question further. They are saying supplier of the new component took the old component at a fair value of how much? 360. See, what they have did is, carrying amount of the old component is how much? 300. Supplier, one supplier have come and that supplier have taken that component and that supplier have paid you 360, not 300. That supplier have exchanged it for how much? 360. Your value is 300. Supplier have given you 360. Is it profit or loss? So where I have to transfer? P&L account I have to transfer. Very good. I will pass this as an entry. Don't worry. On 31st March 2019, see, we are standing on 1st April 2018. They have given the information as on 31st March 2019. So what have happened on 31st March 2019? Tell me. Revalued as per company policy of how much? 5,000. Understand what is there? The fair value on which date they have given? 31st March 2019 they have given the fair value. See, you have to compare carrying amount also on that date. We have to calculate carrying amount also as on 31st March 19 and we can compare that with fair value. Sir, can you calculate carrying amount on 31st March 2019? Try carrying amount as on 31st March 2019. See, just now we have got some 3,500. Correct? Residual value also, depreciation you have to less, that's it. Residual value is 800. Balance useful life also I think they have given in the question 6. So can you tell me 1 year depreciation? What is the 1 year depreciation? 450 is the 1 year depreciation. Very good. Sir, can't you find out carrying amount as on 31st March 2019? Very good. Carrying amount on 31st March 2019 is how much? 3050 is the carrying amount as on 31st March 2019. Very good. And what they have given? Revalued amount they have given. Sir, what is the revalued amount? 5000. Sir, is it upward revaluation or downward revaluation? If it is upward, what is the journal entry? PP account debit to OCI. Sir, how much amount I have to transfer? Understand. Sir, if I debit my asset to 1950, if I debit my asset by 1950, sir, what is my revised carrying amount? 5000. Correct? See, this is my carrying amount. Now I have increased it by 1950. Now my fair value is how much? 5000. Which means next year onwards, I have to charge depreciation on not 3050. I will charge depreciation on which amount? 5000. I will charge depreciation. Very, very simple. Sir, see, here the useful life is 6 years. 1 year is completed. Therefore, useful life is how much? 5 years. Residual value, there is no change. 5000 minus 800 by 5. 1 year depreciation, 5000 minus 800 divided by 5. How much it is? 840 is the depreciation, sir. Why you are calculating next year? Let us read the question actually. On 31st March 20, 1 more year. What have happened? Impairment loss have happened. What have happened? Impairment loss have happened. Sir, what is this impairment loss? Afternoon only we will discuss in days 36. Don't worry. But now just remember, sir, impairment loss normally we have to transfer to P&L account. Normally, impairment loss where we have to transfer P&L account. But if there is any OCI balance, first I have to adjust that OCI balance. Sir, why? I will explain in days 36. But now just remember, if there is impairment loss, normally what I have to do? Transfer to P&L. But if OCI is there, I will use OCI. Sir, here is there any OCI balance? Yes, there is OCI balance. Sir, how you are saying OCI balance is there? You have created, no? 1950 you have only created. Understanding or not? 1950 you have only created. Okay, sir, now what have happened? First of all, let us read the question further also. Pass the journal entries and show the accounting treatments to be made in the financial statements for the year ending. See, just now I have explained revaluation surplus balance. Treatment of revaluation surplus balance, we are having two methods. First method is just don't do anything. When the asset is de-recognized, I will transfer entire revaluation balance to retained earnings. That is option number 1. Sir, we have second option also. What is that second option? Every year I will transfer some amount from OCI to retained earnings. కొత్త పాయింట్ ఏం చెప్పట్లేదు, ఇందాక చెప్పా కదా పాయింట్ అది. ఒకసారి చూడండి ఇక్కడ ఎక్కడ ఉంటుంది. This one. Option number 1 and option number 2. Correct? In this question, they have selected option number 2. In this question, what they have selected? Option number 2 they have selected. I think in exam question, they have given the word. In exam question, they will give you the word. You can write here only. The company have elected. Please write beside the question. The company have elected. The company have elected to transfer proportionate amount of revaluation surplus to retained earnings. Which means they have chosen second option. Let us understand, sir, what is the second option. First of all, let us do some rough calculations. Sir, we have already calculated this. I will write from here onwards. Carrying amount as on 31st March 20 is how much? 4,160. Let me write those figures. Carrying amount 31st March 20. What is the amount? 4,160 or 1,060? 160. This is my carrying amount as on 31st March 2020. Sir, already I am having some OCI balance of how much? Very good. 1950 OCI balance also I am having. Sir, on which date I have created that OCI balance? Very good. 1 year back. 1 year back I have created how much? 1950 balance. Be very careful with the dates. Easily you can say the correct answer. Don't worry. 31st March 19. Sir, now what have happened is some impairment losses happened. Because of impairment loss, your asset balance have to be reduced. Sir, why and all I will explain in the next chapter. Because of impairment loss, my asset balance will be reduced. Sir, how much is the impairment loss? 900. Very good. I will write 900 here. I will write 900 here, which means, can you tell me what is my revised carrying amount? 3260. Correct. 31st March 20. This is my revised carrying amount, which is nothing but 3260. Next, what have happened? See, which years they are asking us to show the accounting treatment? 31st March 19 also, 31st March 20 and 31st March 21 also they are asking. Sir, first of all, in this question, this is fine. Let us charge depreciation for 1 more year also. You will tell me what is the depreciation. 2021, very good. Sir, 3260 is the carrying amount. Have they given any residual value? Residual value is 800 divided by, sir, balance useful life is how much? 4 years. అంతే కదా ముందు దానికి 5 years. ఇప్పుడు obviously 5 years. ఎంత? 650. Very good. Okay, 615. Okay. How much? Everyone understood till here or not? 2645 is the carrying amount on which date? After charging depreciation for 2021, this will become my balance as on 31st March 2021. Correct, everyone? Sir, now what have happened is, this is totally fine. Let us also find out balance in revaluation reserve. Let us also find out balance in revaluation reserve on which date? 31st March 21. Till this date, let us find out, sir, what exactly have happened in revaluation reserve. Let us understand. Easiest point, don't worry. First of all, sir, how much balance you have created? On which date? 19. How much? 1950. Two options are there. Ignore first option. In this option, I am transferring revaluation surplus every year to retained earnings. Sir, how much amount you have to transfer? That also I have calculated. First, I will calculate depreciation on revalued amount. First, I will calculate depreciation on revalued amount. That I will compare with depreciation on original cost if there is no revaluation. Difference will be transferred to retained earnings. Sir, what you are saying, please tell me with an example so understand. Sir, first depreciation on revalued amount is how much? I think 1920 before we have calculated. See, check this. Sir, after that revaluation, what is the depreciation which I am charging? 840 is the depreciation which I am charging. This is depreciation on revalued amount, which means on 5,000 depreciation is 840. Sir, if this revaluation itself is not there, still I have to charge some depreciation. How much? Understanding or not? Sir, on revaluation, what is my depreciation? Revaluation itself is not there, still I have to charge 450 depreciation. Can you tell me the excess depreciation? 840 minus 450. How much? Sir, what is that 390? Excess depreciation due to revaluation. Sir, what I have to do? Transfer to retained earnings. Understood? Simple. Excess depreciation due to revaluation will be transferred to retained earnings. Sir, అంటే అమౌంట్ ఎంత చెప్పండి ఒకసారి. 840 కదా. Here it is 840 minus depreciation on original cost is how much? Very good. Now how much is the balance? This 390 I have to reduce from my OCI. This 390 I have to reduce from my OCI. Therefore, I will write 390 less here. Next year also there. Next year also some transaction have happened. So here tell me the amount 1560. Minus. Very good. Impairment is also there. Sir, impairment loss of how much is there, sir? 900 impairment is there. Sir, now what is the balance amount? 660 is the balance amount. Still it is not over. Still it is not over. Again we have to calculate the same calculation. Sir, what is that same calculation? This one. Depreciation on revalued minus depreciation on original cost. Sir, one more year. I have got the depreciation amount as how much? 615. This depreciation 615. If there is no revaluation or if there is no impairment, still how much I have to charge? 450 I have to charge. Compare earlier thing, 450. Simple. Excess depreciation is how much? 615 minus 450. How much? 165. In the difference. This is my closing balance of OCI. This is my closing balance of OCI. Extra calculation we have to solve in this revaluation surplus balance. Every year, if I wanted to transfer some amount of balance from revaluation reserve to other equity, I have to find out excess depreciation due to revaluation. You can by heart that part or you can remember that formula also. That formula is also very logical. With revaluation, what is the depreciation? Next, without revaluation, what is the depreciation? Difference is what? Excess depreciation. Correct? Simple point. So check this solution carefully. Here I have presented very nicely. Analysis of revaluation reserve balance. This is initial balance. First year I have to transfer this much. Second year I have to transfer 165. Impairment is also there. Everything is written very clearly. So journal entries we will check. But before that, please check till here. I will give 1 minute of time. Everyone please cross check. Online students also. Open this PDF and cross check. Total question number 6. Easiest question. Revaluation surplus is the only new point which we have to check here. But revaluation calculation is the common thing we have to do here. Online students, you also please cross check and tell me if you are done. Let's move to next part. Okay. So now come to journal entries part. Come to journal entries part. See, first, new component is there, 600 rupees. Carrying amount is 300. But supplier have taken it how much? 360. You can pass two separate entries also, or you can pass this combined entry also. As per your convenience, you can pass separate entry or you can pass combined entry also, totally fine. See whatever I have passed the entry here. New component account debit 600 to, first let us ignore this supplier. To old component is how much? 300. Sir, P&L account difference have to be transferred how much? 60. Understand? Sir, new component cost is 600. Supplier have taken at which value? 360. Sir, is the balance amount discount? We have to pay. For example, if you are buying a new phone and you are exchanging an old phone, differential amount what? It is not discount. You have to pay that amount. Correct? So here what is the differential amount? So that 240. Either I have to pay in cash. If I pay in cash, I will write to bank. If I have to pay, I will write to supplier. Rest of the entries are very simple. See, depreciation account debit to PP account 450. Depreciation account debit to PP account 450. Next one. OCI upward revaluation entry. PP account debit to OCI account 1950. Next one. One more depreciation. Impairment loss. Two entries you have to pass. Impairment loss ultimately will be transferred to P&L account only. But if there is any OCI balance, OCI balance should be adjusted. So check this. First, my asset should be reduced. Sir, how much your asset have to be reduced? 900. This impairment loss will be transferred to. This impairment loss will be transferred to. Total impairment loss will be transferred to retained earnings only. Okay. The impairment loss means, see, impairment loss I have credited. Sir, but along with this 900, see, I also have to transfer 390 from OCI to retained earnings. Therefore, single entry, I will post both the entries. OCI balance ultimately have to be reduced by this much. 2 retained earnings 390, 2 impairment loss 900. Correct? Understand this combined journal entry. Next year, again depreciation normal. One more I have to charge OCI account to retained earnings account. Okay, simple question. Just to check this journal entries. Next we will solve very, very important question. Next we will solve very, very important question. But please cross check the journal entries. Venkateshan, these questions are from your workbook. These solutions I have shared to you. So you can cross check these solutions, but questions are from workbook. Yes, these solutions I have shared in WhatsApp group only. You can check that. Yesterday only I have shared. Okay. So those who have completed, come to question number 8. Question number 8. This also already asked in your past. You have to definitely check this question. Okay. So let us read the question. See, Heaven Limited have purchased a machinery on which date? 1st April 2001. See, we have to be careful with dates. Sir, what is the cost? Which is reflected in its books at a written down value of 17,50,000 on 1/4/2006. 5 years are completed. They have given WDV. Sir, what is the WDV? 17,50,000 is the WDV. Read the total question. Read the total question and tell me, sir, have they given useful life in the question? Have they given directly useful life in the question? Please check. If they have not given, you have to calculate. Think, is the information sufficient to calculate the useful life or not? Try once. Once, check once again. With calculator, 30, no?
From 2001 we need to check.
Total useful life you want.
15 years.
15, no?
First April 2008, 8 years.
2008,
2008.
This is 2006.
But missionary was revived.
I want this date. Whatever you do, I want total useful life. Total useful life. Here also revaluation is happened, correct? So this date also I want. This date also I want. I will share that Venkateshan, don't worry. I'll share that. Okay. Don't worry. So everyone listen. How much? 16 years. Let us check. See. Cost is how much? Cost is how much? Written down value is how much? Can you tell me what is the difference? Is it for 1 year or for total 5 years? 5 years. Can you calculate the annual depreciation? Annual depreciation is 2,50,000. Cost is how much? Annual depreciation is 2,50,000. Can't you find out annual life? So useful life. This is the formula. Annual depreciation equals to cost by useful life. So useful life equals to cost by annual depreciation. Simple point. Which means how much? 12 years. Okay. 12 years is the useful life in this question. Question starts from here. They are saying, but we need, because they have not given useful life. We have to find out. So what is the total useful life? 12 years is the total useful life from the starting onwards. 5 years is completed. Therefore, what is the balance useful life? 7 years is the balance useful life. Understand? The company had estimated an upward revaluation of how much? On which date? 1/4/2006 to arrive at the fair value. First of all, what is the upward revaluation amount? Upward revaluation amount is how much? Have we got 1,75,000? 17,50,000 into 10%. Minus? It's okay. Into plus 10% minus 17,50,000 you can do, or into 10% also you can do directly. Into 10%, how much amount I have got? 1,75,000. That is upward revaluation. So can you tell me what is the journal entry? Here it is machinery. Machinery account debited to OCI account. Very good. First of all, what they are asking, check last, what they are asking us to prepare. They are asking us to prepare machinery account, which means we have to prepare ledger account. Very simple. Journal entries you have to post. Correct? Read what they are saying. Heaven Limited availed the option. What is this? What they are saying? What they are saying? Are they asking us to transfer towards sale, or are they asking second method? Think. If it is not first one, it should be obviously second one. Correct? They are saying some of the surplus have to be transferred by an enterprise. What they are saying, as it is used by an enterprise. See, two options are there. First option is we will transfer revaluation surplus when you sold the asset. Second option, when you use the asset. Every year we are transferring means what? When you are using, you are transferring the balance, which means company is using second alternative, which means one more calculation we have to do. What we have to calculate? Excess depreciation due to revaluation. How much is there? We have to calculate that. Don't worry, very easily we can calculate. Okay, fine. First, let us prepare the ledger. This is the ledger. This is the ledger. See, first, they are asking us to prepare machinery account. We cannot prepare from 1st April 2006. They are asking over its useful life, which means total useful life we have to find out. Therefore, from 1st April 2001 onwards, we have to pass the entries. See, nothing is there. Every year, what I will charge? Depreciation. See, first year 2,50,000, second year 2,50,000, third year like this till 1st April 2006. Every year 2,50,000, 2,50,000 we have to pass. After passing 2,50,000 on my 1/4/2006, what is the balance? This also nothing we have calculated. They have given in the question only. Correct? Plus what I have to do? Upward revaluation I have to do. Sir, how much? This is totally fine. But how much is OCI amount? 1,75,000 is the OCI amount. Correct? Carefully tell me. Sir, what is the depreciation for 2006-07? What is the depreciation for 2006-07? This figure? Have they given any residual value in the question? If they have not given, don't take. By what is the balance useful life? 7 years is the balance useful life. Therefore, 19,25,000 divided by 7 if you do, how much? Smart student will understand. Sir, after revaluation, what is the depreciation I am charging? After revaluation, what is the depreciation I am charging? 2 lakhs. Sir, if no revaluation is there, what is the excess? Which means what I have to do with the 25,000? 25,000 should be transferred from OCI to retained earnings. That much simple question. If ledger is asking, nothing we have to do. First year is done. 1/4/2007 will happen. One more thing is happened. On which date it is happened? 1/4/2008, which means 1 year is completed. Correct? So after 1 year, which means one more year I have to charge normal depreciation. Correct? One more year I will charge normal depreciation. Therefore, my 1/4/2008 opening balance is how much? 1/4/2008 opening balance is how much? 13,75,000. Sir, one more thing have happened. What have happened? On 1/4/2008, they are saying machinery was revalued downwards by how much? 15%. You have to tell me, sir, what is the downward revaluation amount? Huh? This into 15%. And then how much? I have one doubt. Sir, what I have to do? Earlier I have got upward revaluation. Earlier I have got upward, now it is downward, which means first I have to check what is the balance of OCI. Sir, why you have to check balance of OCI? Correct. First I have to adjust OCI balance. Balance amount will be transferred to, which means first I have to find out what is the OCI balance as on 1/4/2008. OCI balance as on 1/4/2008. So first of all, have you got the answer? Tell me. See. Sir, what is the OCI balance which you have created? First year I have transferred 25,000. Another year also I have transferred 25,000. Therefore, sir, what is this 1,25,000? On which date? Very good. So this is my closing balance of OCI. But on this date, downward revaluation have happened. Sir, how much amount of downward revaluation has happened? This is the amount, correct? I think something we have calculated. 2,06,250. Sir, my total loss is this much. Out of which I have to set off 1,25,000. And what about balance? Now I want journal entry. Carefully tell me the journal entry. That's it. Answer is done. Brilliant. OCI account debit how much? P&L account debit? 2. Which account I am preparing? Therefore, I will post these 2 items to the credit side of the machinery account. Simple ledger. So check this. OCI account debit 125,000, P&L account debit 81,250, 2 PP account 2,06,250. Correct? Simple entry. This entry I have to post also, correct? One more thing has happened in this year. Check this. And company also estimated the machinery's remaining useful life is how much? First of all, initially, what is the total useful life? How many years are completed? I think 7 years are completed. Which means normally what should be the balance useful life? But the company is saying we have re-estimated the useful life, and now the re-estimated useful life is how much? 8 years. Which means whatever the useful life which I have estimated earlier, that is wrong. Sir, that is an, understand, change in accounting estimate. See, residual value, useful life, those are accounting estimates. Sir, if there is any change in accounting estimates, always remember I have to give prospective effect. What effect I have to give? Prospective. I think you know the difference between retrospective and prospective. Retrospective means previous years I won't change. When the change is there, from that date onwards, I will recalculate using using the new useful life I will calculate. Sir, what you are trying to say? Very simple. What is the balance useful life? 8 years. New useful life is 8 years. First of all, tell me this value. Sir, which value I have to depreciate? 13,75,000 minus 2,06,250 we have to do. This only I have to depreciate. For how many years? 8 years. So this is the depreciation amount. Calculate this, everyone. 146,094. Cross check this closing balance also. This minus these 3. $10, $22, $656 will become next year opening balance. One thing have happened in the last year. Check the question. 31st March 2010, machinery was sold for 9,35,000. First of all, understand, even if there is any sale, we have to find out the carrying amount till the date of sale. Which means I have to charge depreciation for 1 more year. I think 2 years, sir. 2 years, I think we have to charge depreciation. 1 year we have charged it, that's it. From the date of revaluation, I am saying 1 year we have already charged it, so 1 more year I have to charge the depreciation. Sir, useful life is not changed, therefore same depreciation will continue. Same depreciation will continue. ఒక్క నిమిషం WDV అని చెప్పాడు ఎక్కడ క్వశ్చన్లో మనం ఎవ్రీ ఇయర్ 2,50,000 తీసుకున్నాం కదా, విచ్ మీన్స్ ఇట్ ఇస్ SLM. యాన్యువల్ యూస్ఫుల్ లైఫ్ ఇవ్వలేదు కదా క్వశ్చన్లో, అందుకని. ఓకే, ఫైన్. నెక్స్ట్, tell me what is the carrying amount on the date of sale? 10,82,081. Minus depreciation we have to do. 10,80,000 వచ్చిందా? 10,22,656 minus 146,094. Something you will get. How much? 8,76,560. I want the journal entry. Think and tell me the journal entry. That's it. Sale journal entry I want. Depreciation is fine. I want a sale entry. Bank. 2 machinery account. How much? Bank how much? Carrying amount of asset? 876,564. Difference? Credit side, how much? That's it. Ledger will be closed. You have sold the asset, therefore ledger should be closed. Understood? Easy balance. Easy question. This ledger posting I have to give here. Okay? Very easier question. Still 8 minutes left. Should we solve some easy question? Or one more tough question, let us start. Easy question we'll solve and then we'll go for break. So come to question number 3. 7 marks question. Already asked in the past. Question number 3. B Limited has incurred the following transactions in respect of acquiring a plant in exchange of an old plant. 1 second. B Limited has incurred the following transactions in respect of a plant in exchange of an old plant. What they are saying? The old site was dismantled at a cost of 8,000 rupees. No estimated. What is this? This is the important point here. Very good. See, normally we know that morning only I have said that if there is any liability to dismantle an asset, you have to calculate present value and you have to recognize in the cost. That is a normal treatment, but what they are saying, they have not recognized earlier. If they have not recognized earlier, let us recognize now. Let us recognize now. Okay, simple thing. Sir, what they have did, tell me. 8,000 is the cost. 1,000 is the scrap. Sir, what is my net cost? 7,000. What is my net cost? 7,000. So entry what I will be passing is old PPE will be debited. If at the time of initial recognition only I am passing the entry, I will pass PPE account to debit to provision account. PPE account debit to provision account I will pass. But here there is no need of creating provision because I am paying in cash. Therefore, entry I will pass PPE account debit to bank because I am paying right now. Sir, let me write old PPE because it is old site related about. So entry old PPE account debit to bank account. How much I have to write? 7,000 I have to write. Remember this amount 7,000. I will ask you at one place. The new site is constructed at a cost of 48,000 rupees. This is site construction expenses or site preparation expenses. I have already given, we have to include in the cost of the asset. Read this. Read what they are saying. Old plant is taken by the supplier. First of all, tell me what is the carrying amount of old plant. Next time, it should.
1 lakh.
But one more thing we have to do.
7,000.
7,000 also adjustment we have made now, which means 1,07,000 will become the carrying amount of the old plant. Supplier have taken at which value? Profit or loss? How much profit? 19,000 profit. Understand? 7,000 I have not passed earlier. Therefore, I have passed it now. So my revised carrying amount is 1,07,000. But supplier have taken it 1,26,000. So the difference is 19,000. Easiest question. Next. New plant price is 3,20,000. We know that new plant should be recognized at cost. New plant should be recognized at cost. So this 3,20,000 will be recognized at cost. One more thing they are saying. What is it? Present value estimate of dismantling. Do I have to include this also? Yes. Earlier they have did the wrong treatment, but that doesn't mean now also we have to do the wrong treatment. We can do the correct treatment right now. So that 16,000 will be added. One more item. Read it and tell me what we have to do. Wages paid for installation of the plant also I have to capitalize because without those installation I cannot function my asset. Trial run what we have to do? Just now I have said trial run expenses also will be capitalized. Next one. Freight also we have to add, because without freight I cannot function my asset. Read those 3 points and tell me what we have to do. GST, if nothing is said, I will assume credit will be given. They will specifically give if credit is not applicable. If credit is not given, sorry, if credit is given, will I include that in my cost or do I have to exclude that from my cost? I will not include. I will not consider only. Okay, fine. Second point, please. 1 second. Just add one more item here. Following expenses should not be capitalized. In this also write initial operating losses. Initial operating losses. I think I have included somewhere. Okay. Initial operating losses also will never be capitalized. Reason, understand. Your asset is already ready to use. You have already used that asset and you have produced some goods, but you have got losses. Entity is saying, I will capitalize those losses. I will capitalize those losses, because if the entity shows those losses in P&L account, its net profit will be impacted. Investors will feel that, oh, the company is not performing well. Therefore, the company have decided, I will not capitalize. I will not transfer those initial operating losses to P&L account. Let me capitalize that. Like that, the company is saying, but the standard is saying your asset is already ready to use. After that, you have incurred those losses. Therefore, those losses will never be capitalized. So what we have to do, those losses will be transferred to P&L account only. Okay. So check this part. Loss amounted to 40,000 rupees for low capacity utilization will be transferred to P&L account. Important point, initial operating losses. Last point, what we have to do, tell me? Cost of launching means inauguration expenses. Inauguration expenses will be always transferred to P&L account. Okay. What you have to do is open your calculator and tell me, add all the amounts which we have to capitalize. Add all the amounts which we have to capitalize and tell me what is the total. I want new plant. New plant, what we have to add, do the total and tell me. Very good. A new component add cheyali kada. This 48,000, okay. This 320 also we have to add. Okay, easiest question. See, 48,000 I will add. 3,20,000 I will add. 16 I will add. 4,000 I will add. 1,600 I will add. 8,000 I will add. Will I add these items also? That's it. 3,97,600 should be your new cost of the new component. Correct? Now, one more thing. Check whatever the journal entries which they have written. Check the first journal entry. We have recognized net scrap of 7,000. You can pass separately also. Anything is fine. Since your institute have passed it separately, let us also pass separately only. Old machine account debit to cash, cash account debit to old machine, which means what happens to the total cost of capital, total cost of old machine is how much? It will increase by 7,000. Correct? Very good. Now, this journal entry you can pass like this also, or I can show you one shortcut. You can pass like that also. Let me show you that part. See, understand this. New PP value is how much? 3,97,600. You only said that value. New plant value is 3,97,600. Correct? This value. I have to recognize at that value. 2, sir, I have to remove old PP. What is the carrying amount of old PP? Supplier have taken at 1,26,000. Supplier have taken at 1,26,000, which means I have got a profit of how much? 19,000. Understand? Now only I am creating provision also. For new asset also some provision is there, correct? Sir, how much is the provision for new asset? This amount I am not paying right now. This amount I will pay after some future, correct? So I will create provision. I will create provision for how much? 16,000. See, they have directly given the present value. If they have not given, we have to calculate. But they have directly given. So I will take 16,000 to provision. Tell me the balancing figure. I mean, these figures and these figures. This minus these figures plus this figure. Two lakh 55,600. Correct? If you observe carefully, you can pass like this also. You can pass like this also, or they have given even more detailed. Sir, what they have did is, see, out of this total expenses, what they will be doing is, see, freight cost will be paid to some outsider. Freight cost will be paid to outsider. And one more thing, wages, trial run also will be paid to outsider. Because you will purchase the asset from some another person and you will do installation from some another. You can do anyways. You can pass this separately also. You can pass this separately also, or you can directly pass net entry like this, which will include all the amounts. 2,55,600. Anything is fine. Okay. Here what they have did is, see, just to do whatever I am saying, just calculate and add the amounts. 48,000 plus 4,000 plus 1,600 plus 8,000. How much you have got? Those also you have to pay in cash. You cannot say if any person have transported your item, I will pay on credit. Like this you cannot say. You have to pay in cash. Correct? So those items I will freight to installation to construction, I will pay in cash. Balancing figure will be transferred to creditor or vendor account. Okay. So fine. Very, very important question. This is very, very important question. I have said that your institute will just double the figures, correct? So this is your study material question. The question which they have asked in your exam, let me show you that. Check this, question number 11. This is exam question. Doubled. I will show 10 questions like this. 10 questions, they are just only doubling or they are just doing the half. That's it. Okay, I'll show those. So that's it. One more question is there. One more question is there. We will complete that question after lunch. And after that, we will complete another super important Ind AS 36, because without 36, your next question paper will not be there. Ind AS 36 compulsory question, and one more standard 38 also I will complete, and 23 also I will complete. Okay, so that's it. You can go for lunch. Time is 1:05. Let's meet at 2:05. Try to come on point. Okay, so that's it. We'll meet after lunch. ఓకే సో గుడ్ ఆఫ్టర్నూన్. లంచ్ మరీ ఎక్కువ తినేయకండి, మరీ ఎక్కువ తినేస్తే నిద్ర వచ్చేస్తుంది. అలానే మరీ తక్కువ తినేయకండి, పడిపోతారు అప్పుడు. ఓకే, సో లైట్. No, 50-50. Okay. So online students, please confirm the audio. We'll start with last problem in this chapter, which is come to question number 12. Okay, so come to question number 12, last question in this standard. Okay, so quickly open this question number 12. So they will say that Paramatma Tulsi Limited provides you the following information. This is a little bit important question, so let's carefully understand. See, first of all, on 1st April 2015, they have borrowed 5 lakh rupees at the rate 12% per annum to construct how many machines? 10 machines, and incurred 8 lakh rupees on materials, 2 lakh on labor, 50,000 towards freight and insurance, 20,000 towards carriage inwards, 10,000 on site preparation and installation. Estimated total physical life is how much? 10 years. But the company considers it is likely that it will sell the property after 4 years. In this question, too much information they have given. But first, let us understand. They have given loan amount. Morning only I have said that interest we have to capitalize for only one asset. What is that one asset? Morning. Okay. So morning I have said that interest will be capitalized only for one asset, which is nothing but a qualifying asset. Still, we have not covered qualifying asset standard, but once we complete that Ind AS 23, you will easily connect that point. But fine. If the asset is qualifying asset, then I have to include interest also to the cost of the asset. Sir, what is the meaning of qualifying asset? Let us understand. Qualifying asset means such asset which takes a substantial period of time to get ready to use. Any asset which takes what period of time? Substantial period of time to get ready to use. For example, if I am constructing one building, it will not be ready in a single day. Correct? It will take some time. Let us say it will take 12 months or 15 months or 18 months. So what they will say is, if any asset is taking substantial period of time, that will be called as what? A qualifying asset. For the time being, just remember, qualifying asset substantial period means more than 12 months. But in Ind AS 23, I will explain what exactly is the meaning of qualifying asset. But as of now, you can just remember like this. If the period to get ready to use is more than 12 months, just assume that asset as qualifying asset. Okay, let us understand. Materials they have given. Materials cost will be included in the cost of asset. Labor also will be included. Freight also will be included. Carriage inwards will be included. 10,000 on site preparation. This also will be included. So just take the total of all the costs and tell me what is the amount which should be capitalized. Take the total and tell me what is the amount of interest. What is the amount of total cost which should be capitalized. $11. Just tell me some random figure. 11 lakhs. 11 lakh 40. Have you added this interest also? In this question, by studying the first point, I don't know whether the asset is a qualifying asset or not, because they have not said on. See, this 1/4/2015 is loan amount. This is loan date, but we should compare when the asset is ready to use. If the period is more than 12 months, then only the asset will be called as qualifying asset. So still by reading this point number 1, I can't find out whether the asset is a QA or not a QA. So this interest part, let's keep pending. Let us read the second point. What is the second point? 1st October 2016, what have happened? Machines became ready for trial run production after incurring expenses on trial run. How much? 20,000. Sale proceeds 5,000. What is this? Tell me. Trial run expenses they have given how much? 20,000. Some scrap also they have generated. How much they have generated? 5,000 scrap they have generated, which means we already know that net cost is how much? So that 15,000 should be what? Capitalized. Correct? Fine. My question is, okay, here what they are saying, 1st January 2017, machines became ready for commercial production. Machines are became for commercial production from 1st January 2017 onwards. The estimated residual value is how much? 2 lakhs. Government grant is also received. How much? 2 lakhs. By reading these 3 lines, from which date onwards do I have to charge depreciation? Calculated, tell me. From which date onwards I have to start charging depreciation? From 1/1/2017. Let us read next line also and let us check. 1/4/2017 they are saying the company does not begin using the machine until 1st April 2017. On this date, company is actually putting the machines to use, which means this is put to use. 1st January is ready to use. Onwards we will charge depreciation. Ready to use, which means how much? 1st January 2017 only we will start charging depreciation. And one more point. Till this 1st January 2017, all the costs will be what? Capitalized. Because whatever the costs which are essential to bring the asset to the intended location and condition, adi manaku akkada cheptadu point, everything will be capitalized. Here they will use that words. This one. All directly attributable costs to bring the asset to its intended location and condition to be used by the management. Ikkade last lo kuda em cheptadu? Borrowing cost if the asset is a qualifying asset. Understand carefully. From 1st April 2015 onwards, you have started construction. When the asset is completed? Asset is completed on 1st January 2017. Is it more than 12 months? Therefore, the asset is a qualifying asset. Therefore, asset is what? Qualifying asset, which means what? First 5 lakh into 12%. From the date of loan onwards, I will calculate the loan and I will capitalize that interest. Okay. First, what we'll be doing is, let me open the solution and then let us understand what exactly we have to do in this question. See, first of all, as you have said earlier, initial recognition amount, how much we have to write, I have calculated here. So carefully understand this. Material cost is 8 lakh rupees. In the first point they have given. Labor cost 2 lakhs. Freight and insurance 50,000. Carriage inwards 20. Site preparation 10. And most importantly, interest also I have to add. What is the amount of loan? Tell me. 5 lakh is the amount of loan into how much is the interest? 12%. Which means how much? 60,000. Just take the total of all these amounts. 11 lakh 40,000. Just read this note. Interest on loan taken for purchase or construction of a qualifying asset will be added to the cost of asset till the asset becomes ready to use. I will start capitalizing. Sir, one more thing, what have happened? Understand this journal entry also, what I have passed. All these costs I have incurred, which means I will debit machinery account and I will write to bank account. Okay, I will debit machinery account and I will write to bank account. So the first entry I will write like this. See, understand, depreciation will be charged from which date onwards? Depreciation, check. From 1st January only we will charge depreciation, which means will I charge depreciation in this year? No depreciation. So these balances will be exactly carried forward. Okay, no depreciation. So same opening balance will be even carried down also because this is asset. Next year, what will happen? They have incurred some expenses. Scrap expenses, they have testing expenses, they have incurred. Scrap amount also they have realized. See, if they have incurred testing expenses, tell me what is the entry which they have to pass? machinery account debit to bank. Sir, how much they have incurred? 20,000 they have incurred. And one more thing, they have received scrap. Sir, scrap, what is the journal entry? Bank account debit to machinery account. Ultimately, I can write net entry also. 15,000 also I can write, but here they have passed the both entries, totally fine. 5 lakh rupees done. Next thing what have happened is, understand, till this 1st January, I have to do capitalization. Till this 1st January also what I have to do? I have to do capitalization, which means what? See, our year is completed from 1st April 15 to 31st March 16. This is completed. Next year will start from which date? 1st April 16 to 31st March 2017 is there, but we have to charge only capitalization till which date? 1st January 2017 only. How many months are there counted? Tell me. 6, huh? This period. 1st April to 1st January. How many months? 9 months are there. So tell me 5 lakh into 12% into 9 by 12. This 45,000 also I have to capitalize. This 45,000 also I will capitalize. To bank interest 5 lakh into 12% into 9 by 12, which will give me. So just take these totals. Take these totals. 12 lakh 5. Now what have happened is they have also given government grant also. Morning I have explained, if they have given any government grant, what I have to do? Deduct from the cost. Deduct from the cost means I will edit credit side. Credit side means what is the entry? Bank account debited to machinery account. So entry is how much? Entry is how much? 2 lakhs. Now you have to do carefully. You are saying depreciation I will only charge from which month onwards? 1st January onwards only. Till 31st March. Which means how many months? 3 months only I have to charge the depreciation. Use your brains and calculate and tell me, sir, how we will get depreciation? I will give 1 minute of time. Think and tell me. I will explain. But others, please try. How to calculate that 3 months depreciation? First of all, you have to find out the total cost. Total cost is how much? 12 lakh 5,000 minus 5,000 minus 2 lakhs. How much? 10 9 ఎంత వచ్చింది? 12 lakh 5 minus 5 minus 2 lakhs ఎంత? 10 lakhs. 10 lakhs is net cost. Minus what I have to do? Residual value also they have given, correct? Just a second. See, you are saying 12 lakh. You are saying 12 lakhs minus what they are saying? They are saying residual value is how much? Oh, sorry, 10 lakhs. 10 lakhs minus residual value is how much? 2 lakhs. Now tell me what is the depreciable value? 8 lakh is the depreciable value. Now my question is, in the question they have given total useful life of the asset is how much? But they are saying the entity wants to sell the asset after 4 years. You have to tell me, sir, which useful life we have to take? Do we have to take 10 years or do we have to take 4 years? 10 or 4? If 4, why 4?
So they are already planning to sell it after 4.
Depreciation means how many years I am expecting the benefits. Those many years only I will write off the asset. Correct? Okay, it's okay. Entity may use for 10 years. Other person may use the asset for 10 years, but entity is wishing to use the asset to use only for how many years? 4 years. Therefore, how much useful life I will consider? 4 years only I will consider as the useful life, which means 8 lakh is the depreciable value minus 4 years is the useful life. So can you tell me annual depreciation? Annual depreciation is how much? 2 lakhs. This is for how many months? per year, but we want only for 3 months. So into 3 by 12. 2 lakhs into 3 by 12, how much? This is the depreciation from 1st January till 31st March 2017. Easy calculations, but you have to definitely practice this, otherwise you will forget this. Check this. 50,000 is the depreciation for from 1st January 2017 till 31st March 2017. This is the depreciation. Calculate the closing figure. Calculate the closing figure. Is it correct or not? Close the ledger. Okay. 9,50,000 is the closing balance. That will become opening balance for the next year. Correct? That will become opening balance for the next year. Let us check the question further. Check this date. On 1st October 2017, what they have did? They have sold one machine for 93,500. First of all, tell me how many machines are there? Where they have given? First line only they have given 10 machines. Now they are selling how many machines? Which means you have to think in your mind. First of all, I have to calculate the carrying amount of first machine. I mean, whatever the machine which they have sold, I have to find out the carrying amount. Sir, on which date they have sold? 1/10/2017. See, understand carefully. Sir, this value is on which date? 1st April 2017. This value is on 1st April 2017, which means till the date of sale, first I have to charge the depreciation. 6 months. Till September, it is 1st October. So 6 months I have to charge what? Depreciation on that sold machine. Sir, still whatever balance machines are there. How many balance machines are there? 9 machines. Those 9 machines, I have to calculate the depreciation for the full year. For one machine, I have to calculate depreciation for how many months? 6 months. For balance machines, I have to calculate the depreciation for the total year. Sir, how we are calculating? I have prepared one working note. So carefully understand that working note. So check this. Calculation of, okay, this part. Calculation of depreciation for the machine which is sold, and for balance 9 machines also I have calculated in a single step only. Okay, see what we have calculated. Cost is 10 lakh. Earlier you have said, correct? Cost is 10 lakh. See here I have calculated. You only have said this figure. 10 lakh minus 2 lakh we have did, correct? But this 10 lakh is for how many machines? This 10 lakh is for 10 machines. Therefore, for one machine, what is the cost? 1 lakh is the cost. Similarly, residual value they have given how much? For 10 machines. Therefore, for one machine, what is the residual value? 20,000. Therefore, sir, what is the depreciable value for each asset? 80,000. See, 1 lakh minus 20,000. 80,000 is the depreciable value for each asset. Sir, what is the useful life?
4 years.
If 4 years is the useful life, what is the annual depreciation per machine? 20,000. 80 by 4, I will get 20,000. Sir, but my asset is sold for 6 months. This is annual depreciation, but I have to charge only how many months depreciation? 6 months depreciation. This is for the asset which I have sold. Sir, what about balance machines? How many machines are there? 9 machines. Into each asset, into each machine, how much depreciation? 20,000. So if you do the calculation, you will get 20,000 into 9, which will give me 1,80,000. For the machine which you have sold, what is the depreciation? 10,000 is the depreciation which you have to charge. Okay, carefully understand this calculation. If you understood this calculation, rest of the question is very simple. One asset is sold in the middle of the year. So till that date, I have to provide depreciation for that asset. Balance assets are there till the end of the year. Therefore, I have to provide depreciation for the balance assets till the end of the year. Okay. So just carefully check this question. This working note is very crucial in this part. So this is the thing which you have to understand. And one more thing. If any asset is sold, they will give me sale price. I will compare this sale price with which amount? I will compare this sale price with either carrying amount or book value, correct? Some difference will be there. The difference can be what? The difference can be either profit or loss. I have calculated depreciation to find out the carrying amount, correct? Sir, what is the carrying amount if you ask me? See, if you carefully observe, this 9,50,000 is the carrying value for how many machines? For 10 machines, this 9,50,000 is the carrying value, correct? But for I want only for one machine. Sir, for one machine, how much it is? 95,000 is the carrying value of one machine. See, 95,000 is the carrying value of one machine. For the machine, whatever it is sold, what is the depreciation which I have to charge? 10,000 that I have calculated above. Correct. 95 minus 10 if I do, how much I will get? 85,000. This is the carrying value of the asset on the sale date. Correct. Check, I think in the question they have given you sale amount also. Sale value how much? 93,500. So whatever the difference which is there, tell me, is it profit or loss? Profit is how much? 8,500. See, this is the journal entry which you have to pass. Bank account debit, 2 PPE account, 2 P&L account, 8,500. Now you have to post this. Correct? We are preparing which account? PPE account, machinery account. Therefore, what I will do, see, carefully understand. To P&L account 8,500, by bank account 93,500, and not the question is over. I also have to charge depreciation for the balance 9 machines also. Sir, for 9 machines, what is the depreciation? 1,80,000 is the depreciation for 9 machines which I have to charge. Just close this ledger for this year. Close this ledger for this year. Is the closing balance matching or not? Okay. This is little bit lengthier question. I can say this is trickier question also. So you have to be very careful while solving the question. 31st March 2019, which means one more year have happened. There what they are saying, remaining useful life of the property is reassessed as how much? 4 years. Initially, we have estimated 4 years is the useful life. But I think 1 to 3 years are completed. Again, they are re-estimating the property as how much? 4 more years. Whatever they are saying, this is nothing but a change in accounting estimate. So which effect I have to give? Prospective effect I have to give. Prospective effect means from the date of change only I have to do the accounting. Which means what? Carefully understand. See, what is the residual value? Residual value. 2,20,000 is the residual value. And they are also saying property is revalued upwards by 45,000. First, I will revalue my property by 45,000. Upward revaluation means what I have to write? Entry, tell me, upward revaluation. Very good. Machinery account debited to OCI account. How much amount I have to write? 45,000 I have to write. Carefully understand. So first, let me pass that to revaluation is at 45,000. Now, see, add these two figures. 675 plus 45,000. How much? Minus residual value. How much? Residual value change is also accounting estimate change only. Therefore, I have to give prospective effect only. Minus 2,20,000. How much you have got? Divide by 4. Because balance useful life is 4 years. If balance useful life is 4 years, how much is my depreciation? 1,25,000 is my depreciation. Okay, important adjustment. If this is 1,25,000, close this ledger. Close this ledger. Closing balance should be 5,95,000. It will be carried forward to next year. It will be carried forward next year. Next year also they have given some adjustment. Read this. Adopt the written down value. This time no useful life. They are saying now the company wants to choose which method? Written down value method, which means into 20%. Whatever the balance into 20% you can do. What is the balance which is there? 5,95,000 into 20%. Calculate and tell me what is the amount. 1,19,000 is the balance. Just calculate one more time. Sorry, close the ledger. This will be carried forward to next year. Correct. Now, what they are saying, first read this. 31st March 21, what they are saying? The machines became idle and are retired from active use but not held for disposal. What they are saying? The machines became idle and are retired from active use but not held for disposal. My question is, sir, if any machine becomes idle, if I am not using that machine, will I still charge depreciation or do I have to stop charging depreciation? You will still charge depreciation. Till when you will charge depreciation? Very good. That's what morning I have explained. Depreciation will be charged till the asset is de-recognized or check this part. This is the only point which you have to remember in this question. Date when the asset is classified as held for sale or date when the asset is de-recognized, whichever is earlier. Whichever is earlier. See, understand. Depreciation, the purpose of the depreciation is I am using the asset. If I am using the asset, then only I have to charge the depreciation. If my intention is not to use the asset, which means if my intention is to sell that asset, then only I have to stop charging depreciation. Even if I have stopped using the asset, still I have to charge the depreciation. Okay, here I have written that point also. Even if the asset is idle or retired from use, the depreciation will be still provided. Important point, so you have to understand this part. Okay, so in this question, they are saying on 31st March 21, asset is idle, but still what we have to do, you have to charge depreciation even for this year also. Correct? What is the rate of depreciation? We can continue. 20% is the rate of depreciation which we have to continue. Okay, so one more year I will charge the same depreciation. So check this, 4,76,000 into 20%, which means how much? 95,200. Close the ledger for one more year. 3,80,800 will become the next year balance. Correct? Okay, next. Read this point. 31st March 22, what they are saying is idle machines are held for disposal, but machines could not be disposed of till the end of the year. They are saying when the realizable value is 75% of the carrying amount subject to 10% realizable expenses. So what they are trying to say is, I will show you something, just read that part. So read this point. As per Ind AS 105, if any non-current asset is held for sale or disposal, we have to stop charging depreciation, and whatever the asset which is there, we have to bring that asset to this value. Sir, what is this value? FVLCTD. Sir, what is the full form of FVLCTD? Fair value less cost to disposal. Whatever the value which is there in your books, you have to forget that value and you have to bring your asset to this value, which is FVLCTD. In the question, I think they have given you the fair value. How much is the fair value they are saying? Realizable value is 75% of the carrying amount. Tell me what is the carrying amount? Just now we have calculated some 3,80,800 into 75%. Just calculate this amount. 3,80,800 into 75%. How much? 2,85,600. Minus what I have to do? 10% of expenses. Just do it, calculate and tell me. 28,560. 2,85,600 minus 28,560. What is the value? 257,040. See, if any asset is held for sale, I have to record my asset at this value only, because you are saying you wanted to sell that asset. If you sell that asset, you will recover this much only. So please bring your asset to this value. Correct, sir? But my book value is already how much? Correct. This is your already existing value. Now I have to bring this value to 2,57,040. How much is the difference? 380,800 minus 257,040. How much is the difference? The difference should be transferred to P&L account. The difference should be transferred to P&L account. Okay. That's what they will pass by P&L account, 1,23,760. And last but not the least, two balance brought down for next year. What is the balance? If you close the ledger, this will become my opening balance for the next year, 2,57,040. Now what will happen? I think they have said that asset is sold. The idle machines held for disposal are disposed, and they have realized only how much? 75% of the carrying amount only they have realized. So tell me, what is the carrying amount in this question? This is the carrying amount. Into 75% is how much? That much only they have received. Balance amount is loss. Balance amount is loss. It will be transferred to 64,260. Okay, simple question. I know that I have gone a little bit faster this question, but very, very important question. In case if you want to watch this question once again, this is already uploaded in marathon. Previous marathon you can check. In that marathon, I have written and solved this question. It will take some 40 to 50 minutes. So that is the reason I am not writing now. If I start writing, it will easily take some 40 to 50 minutes. But in case if you want, you can watch that video. You can keep it 2x, so you can easily complete that video in 20 minutes. Okay, but definitely you have to check because it is very, very important question. Okay, fine. So with this, we have completed Ind AS 16 super 75 questions. These 5 questions along with that standard also we have seen. Now the next standard which will be starting is this Ind AS 36. Impairment chapter we will start. I am expecting a compulsory question from this standard, Ind AS 36. So quickly open Ind AS 36. Quickly open Ind AS 36. Okay, carefully understand Ind AS 36. See, first of all, meaning of impairment is nothing but a reduction in value of the asset. What is the meaning of impairment? Reduction in value of the asset, which means indirectly it will say that impairment testing we have to do for assets. This asset can be either tangible asset or this asset can be either an intangible asset. Okay, so carefully understand about this impairment. So when this impairment will be applicable is, first we have to calculate something which is called as carrying amount. What is the first item which we have to calculate? We have to calculate something which is called as a carrying amount. Let us assume, so the carrying amount whatever I have got is 10 lakh rupees. Carrying amount whatever I have got is how much? 10 lakh rupees is the carrying amount which I have got. Now I have to compare this carrying amount with one more amount. I have to compare this carrying amount with one more amount. Sir, what is that one more amount is? I have to calculate something which is called as recoverable amount. Carrying amount will be easily given in the question. One more item I have to find out. What is that one more item I have to find out? Recoverable amount. Understand. See, you are having one asset. You are having one asset. Tell me, from that asset, you have to recover the cash flows. From that asset, you have to recover the cash flows. Sir, what are the ways through which I can recover the cash flows from that asset? You are having an asset. One option is what? You can do the production. You can do the production. You will get some goods. What you have to do? You have to sell these goods. You have to sell these goods, and what you will get? You will get some cash flows. That is one value through which you can recover cash flows from your asset. Another value is you can sell your asset. If you sell your asset directly also, still what you can do, you can recover some cash flows. This recoverable amount means they will say you have to calculate two amounts. First amount is FVLCTD. First value, what I have to calculate? I have to calculate FVLCTD. Sir, what is the full form of FVLCTD? Fair value less cost to disposal, which means if I sell the asset right now, whatever the amount which I will be recovering, that is called as fair value less cost to disposal. Sir, this amount should be compared with this amount should be compared with right now you have said that, sir, if I sell the asset, I will receive something called as I have to produce the goods and I will sell those goods and I will receive cash flows. Which means what? For example, if one machine is there, while using the asset, I will generate some cash flows. Sir, whatever the cash flows which you are going to generate while using the asset, that is called as value in use. Second item is what? Value in use. Sir, value in use means very simple. What you have to do is you have to find out, for example, if you are having one asset, sir, what are the cash flows which I am expecting from that asset in the future? We have to calculate. Generally, asset means more than 1 year you are expecting some cash flows. For example, year 1 you are expecting 100 lakhs. Year 2 you are expecting 200 lakhs. Year 3 you are expecting 150 lakhs. Like this, they will give some projections. What you have to do? You have to calculate simply the present value of these future cash flows. Because we are finding out this value in use on a particular date we are finding out. Therefore, what we have to calculate, I have to calculate something which is called as value in use. Sir, how I will get value in use? Value in use is nothing but present value of future cash flows. Okay. Sir, which standard we are studying? We are studying impairment. Impairment, we have to calculate two amounts. Sir, what are those two amounts? First one, carrying amount. Second one, recoverable amount. Sir, how I will get recoverable amount? Tell me. Recoverable amount means two values I have to calculate. Sir, what are those two values? Fair value less cost to disposal or value in use we have to calculate. What the standard is saying is, assume I have got fair value less cost to disposal as 10 lakh rupees. Value in use I have got 12 lakh rupees. Sir, what does it mean? Understand. If I sell the asset, how much I will get? I will get only 10 lakhs. But if I use the asset and if I produce the goods and if I get the cash flows, how much I will get? I will get 12 lakhs. Any common sense person, what he will do? He will not sell the asset. He will use the asset and he will generate how much? 12 lakh rupees. Correct? One more example. Sir, value in use is 12 lakh only. But FVLCTD, I have got 14 lakhs. One person is thinking, if I sell the asset right now, I will get 14 lakh rupees. But if I use the asset, how much I will get? I will get only 12 lakhs. Any person with common sense, what he will do? He will sell the asset and he will realize how much? 14 lakhs. Recoverable amount is very simple. Recoverable amount is saying, take whichever is higher. Because obviously whatever is higher, that is only beneficial for the person. Correct? So we have to calculate two amounts. Sir, what are those two amounts? Fair value less cost to disposal. Value in use, whichever is higher I have to take. Whichever is higher will be called as what? Recoverable amount. Correct? So let me change the example a little bit. Now what the standard is saying is, sir, full value of fair value less cost to disposal, assume it is 6 lakh rupees. Value in use is 8 lakh. Fair value less cost to disposal is 6 lakh, value in use is 8 lakh. Tell me what is the recoverable amount? Very good. Recoverable amount is 8 lakhs. Understand what the impairment standard is saying. You are saying your carrying amount is how much? 10 lakhs. But once again you are saying my recoverable amount is only 8 lakhs, which means in my books of accounts, this much value is there, but I cannot recover 10 lakh rupees from the asset. Maximum how much amount you can recover? 8 lakh only you can recover. Sir, how you are saying because I have taken whichever is higher. More than this, I cannot recover. Correct? I have already taken whichever is higher, and whichever is higher amount itself is how much? 8 lakh rupees. Sir, what the standard is saying is, if you are only saying you can recover only 8 lakhs, in your books of accounts, if this value is more than 8 lakhs, it is not correct. Because ultimately, it's okay, in your books of accounts, the value is 10 lakhs, but you are saying you can recover maximum 8 lakh rupees from that asset only, which means what? How much is the loss is there? Tell me. Which means 2 lakh rupees you cannot recover from the asset. Correct? 2 lakh rupees you cannot recover from the asset. So those 2 lakhs, that 2 lakhs is only called as impairment loss. That 2 lakh is called as what? Impairment loss. Which means what I have to do means I have to write off that 2 lakh rupees. What I have to do? I have to write off that 2 lakh rupees to P&L account as impairment loss. Okay, simple. What we have to calculate? We have to calculate two amounts. What are those two amounts? First one, carrying amount. Second one, recoverable amount. Sir, how I will get recoverable amount? Fair value less cost to disposal or value in use, whichever is higher I have to take. Understand? Sir, if my carrying amount is more than recoverable amount, something is lost because I cannot recover that much. Yes, my books is having 10 lakhs, but I can recover only 8 lakhs. Therefore, how much you cannot recover, don't keep that value in your books of accounts. How much I cannot recover? 2 lakhs I cannot recover, which means I have to reduce 2 lakhs. Sir, reduce 2 lakhs means you have to tell me the journal entry. Reduce 2 lakhs, asset value is 10, asset value should become 8, which means what I have to do? I have to credit the asset. Very good. To PP account, how much I have to write? To PP account, how much I have to write? 2 lakhs. Sir, debit will be impairment loss account debit. Debit will be impairment loss account debit to PP account. Sir, how much is the impairment loss? Year end will come. Whatever the losses are there, those losses will be transferred to P&L account. Correct? So tell me one more journal entry. One more journal entry, if you observe, P&L account debit to impairment loss account. So the total impairment loss of 2 lakh rupees will be transferred to P&L account. Correct? Simple. That's what I have said in the morning. If any impairment loss is there, that impairment loss should be transferred to P&L account. But if there is any OCI balance, first what I have to do? I have to adjust that OCI balance. Balance impairment loss, if there is any, that will be transferred to profit and loss account. Correct? Simple calculations. So see, one final time I will say, in Ind AS 36, we have to find out two amounts. What is the first amount? Carrying amount. Second amount, recoverable amount. So how I will get recoverable amount? Fair value less cost to disposal or value in use, whichever is higher I have to take. Sir, if my carrying amount is more than recoverable amount, then the difference between carrying amount and recoverable amount is called as what? Impairment loss. Sir, how I will get value in use? How I will get value in use? Present value of future cash flows I have to take. Correct? That will become my value in use. Fair value less cost to disposal means in the question they will give you the fair value. Some expenses also they will give. You can easily find out FVL CTD. Okay. Sir, impairment loss, what is the treatment I have to do? Tell me. It will be transferred to P&L account. Sir, if there is any OCI balance, first I will adjust with that OCI balance and balance impairment loss will be transferred to profit and loss account. One doubt I am having. Same asset. Same asset. OCI means other assets also can happen. If other assets are upward revalued only, don't adjust it. But for same asset, if there is any impairment, if there is any OCI, then we have to adjust. Okay? See, carrying amount is 10 lakhs. Recoverable amount is 12 lakh. Carrying amount is 10, recoverable amount is 12. What I have to do? Understand carefully. See, carrying amount is how much? 10 lakhs. Recoverable amount is how much? 12 lakhs. Carrying amount is 10 means I can recover maximum. Sorry, carrying amount means in the books my value is how much? Only 10 lakhs. But recoverable amount is saying you can recover 12 lakh rupees. Understand? You can never increase, you can never record more than the cost. This is not fair value. Correct? This is recoverable amount. Correct? If it is fair value, then if the question asks you to do upward revaluation, then you can do. But it is clearly recoverable amount. Understand, impairment gain is not there. Impairment gain is not there. If carrying amount is only 10, if the recoverable amount is at 12, continue your account at 10 lakh rupees only. You have to continue your asset at which value? 10 lakhs only. Don't recognize any impairment gain. Okay, impairment gain is prohibited, which means if carrying amount is more than recoverable amount, then only what I have to charge? I have to charge impairment loss. Correct? Otherwise, impairment gain will not be there. Okay, fine. Now come to concept book. Come to concept book. Just read this point. Concept number 2. Concept number 2: impairment of an individual asset. Impairment of an individual asset. Just read the first line. An asset is said to be impaired if its carrying amount is more than recoverable amount. Okay. Let's read the another line. Entity should bring the carrying amount to its recoverable amount and it shall recognize impairment loss. Sir, what is the formula for impairment loss? Carrying amount minus recoverable amount. Sir, what is the journal entry? Impairment loss account debited to asset account. Normally, this impairment loss should be transferred to P&L account. But if some OCI balance is there, I will adjust that OCI balance also. Correct? Simple point. Let us solve some. Come here. Concept number 3. Concept number 3. Concept of recoverable amount. Sir, how I will get recoverable amount? Tell me. FVLCTD or value in use, whichever is higher I have to take. Sir, FVLCTD means, see, fair value will always be given as per Ind AS 113 minus cost to disposal I have to do. Then what I will be getting? FVLCTD. This is FVLCTD. Correct? What is the next thing which we have to calculate? Value in use. Sir, how I will get value in use? Present value of future cash flows expected to be derived from what they are saying, assets use and disposal, which means understand. For example, one asset is there, that asset is having 3 years useful life. Since that asset is having 3 years useful life, that asset can generate 1 lakh rupees in year 1, 2 lakh rupees at year 2, 3 lakh rupees at year 3. These are the normal cash flows which are generated from the asset. But what have happened is last year, the company's useful life is completed. Therefore, the company is expected to receive residual value of 50,000 rupees also. Understand? Since the life of the asset is over, whatever the amount which I will be receiving from the sale of that asset 50,000, that residual value also should be included while calculating value in use. Last year residual value also should be included in finding out this future cash flows. Okay, that is the thing which you have to remember. So that's it. Now we can solve some questions. So impairment chapter. Open question number 6. Okay, come to this question number 9, not 6. Come to question number 9. Okay. So check this question number 9. A major depreciable asset of Padma Limited was purchased at a cost of how much? 45,000 millions. On which date? 1st July 2021. Carefully understand. The asset has a useful life till how much? 31st March 2029. You have to tell me, sir, what is the useful life in this question? You have to calculate and tell me what is the useful life in this question. Useful life. 8 years.
8 years minus 3 months.
Which means how much?
7 years, 9 months.
How much?
7 years.
7 years, 9 months is the useful life in this question. Because they have purchased asset somewhere in the middle of 1st July 2021 and useful life is till 31st March 2029, which means 7 years, 9 months. I want this in years. I want this in years. Therefore, do 9 by 12.
7.75 years.
So it is 7.75 years is my useful life of the asset. Correct? So carefully check this. Useful life is 7.75 years in this question. 7.75 years. The estimated residual value is how much? 650 millions. The selling price of the asset on 31st March 24 is 25,000 million. And the cost of disposal they have given 500 million. Use your brains and tell me what is FVLCTD.
24,500.
What is FVLCTD? How much? Have you got that? 25,000 minus, which means how much? Correct. This is FVLCTD on which date? 31st March 2024. This 45,000 million is on which date?
1st July 2021.
On which date they have given full value? I mean, on which date they have given fair value less cost to disposal? On the same date we have to calculate value in use also. And on the same date also I have to calculate carrying amount also. Correct? So first let me calculate carrying amount. I have to calculate carrying amount as on 31st March 2024. So do the calculation and tell me what is the carrying amount on 31st March 2024. Cost is there, depreciable value, residual value is also there, and one more thing, useful life is also there. Depreciation, right? Carrying amount. So check this calculations. We have to calculate depreciation till 31st March 2024. Very good. 45,000 is the cost. Residual value is 650. Total useful life is how much? 7.75. How many years are completed? 2.75 years are completed, which means 2 years, 9 months is completed. Correct. Therefore, what is the depreciation? 15,737 million is the depreciation. And sir, carrying amount as on 31st March 24 is how much? 45,000 minus 15,737, which means how much? 29,263 million is will become my carrying amount as on this date. Okay, very good. Let us also find out value in use also. So see, they have given discount rate is 9%. Discount rate is 9%. Below they have given the discounting values also. So let me directly take those values. First year 0.917, 0.842, 0.772, 0.708, 0.650. Find out the present value. 7500 into 0.917. That's 7,000 into 0.842. Hmm? 6877. Total I want. Total. But last year I have also add what? Residual value also I have to add. Correct? So extra 500 also I have to do. Very good. Value in use equals to enta 25,007 point anochunna exact na 25,000. It's okay. So malli calculate chesko. 25,612.5 is my value in use. $25,710 710 వచ్చింది లాస్ట్ రెసిడ్యువల్ వాల్యూ ఎంత సారీ 650 కదా మనం కాస్ట్ డిస్పోజల్ తీసుకున్నాం ఇది కదా రెసిడ్యువల్ వాల్యూ 650 ఓకే 650 25,710 25,710 is my value in use. So see, this is carrying amount. Fair value less, this is value in use 25,710. Fair value less cost to disposal is 24,500. Tell me what is the recoverable amount? Recoverable amount is 25,710 million. Correct? Sir, but what is the carrying amount? 29,263 million is the carrying amount. Sir, what is the difference? Which is more? Is carrying amount more or recoverable amount more? If carrying amount is more, therefore we have to charge impairment loss. Therefore, how much is the impairment loss? 553 million. Correct? Last, sir, this is my carrying amount. If I charge this impairment loss, my carrying amount will be how much? Recoverable amount. Okay? If you deduct 29,263 minus 3,553, obviously you will get this 25,710 million. Okay? Once check the total solution. See, if you check the question, they have asked you to find out carrying amount, value in use, impairment loss, and last one, revise the carrying amount after the impairment. Easiest question. This is also exam question, by the way, so you have to check this question. Very important. So after going home, definitely you have to practice this question. Okay, next. Tell me what is this value in use? How you will get this value in use? Present value of a future cash flows. Very good. Now the point is, see, if for any asset you cannot find out FVLCTD. For example, what is this FVLCTD? Tell me. Fair value less cost to disposal. In order to calculate this fair value less cost to disposal, first of all, you should want fair value. Sir, what is the meaning of fair value? Fair value means if similar asset is sold between any two market participants, what is the value which will be getting? That is called as market value. Sir, this, for example, one machine is there which is highly customized machine. No person is ready to purchase that machine. If no person is ready to purchase that machine, how can I get the fair value of that machine? It is impossible to get the fair value of that machine. If I cannot get fair value, I cannot get this FVLCTD. Therefore, if it is not possible to find out FVLCTD, you can take value in use as your recoverable amount. Because it is not possible. Not possible means I can write 0. 0 or value in use, whichever is higher. Obviously, which will be higher? Value in use only will be higher. Therefore, recoverable amount will be value in use only. Correct? Sometimes. For example, one factory is there. That factory contains 3 machines. Machine 1, machine 2, machine 3. The job of this machine 1 is it will manufacture empty bottles. Machine 2 manufactures bottle caps. Machine 3 will assemble empty bottle plus bottle cap plus pulpy orange also. If you observe carefully, they are having totally 3 machines. Machine 1, machine 2, machine 3. Sir, what is the job of machine 1? Empty bottles. Machine 2 job, bottle caps. Machine 3 job, it will take empty bottles and it will fix the bottle cap and it will pour pulpy orange into that bottle. Sir, what is the meaning of value in use once again? Value in use, present value of future cash flows. This machine 1 cannot sell its output to outside customers. This machine 1 have no option. It cannot sell to outside customers. What it can do, it can process to machine 3. Machine 2 also cannot sell its output to outside customers. Sir, what it can do, it can sell to machine 3. That's it. Machine 1 and machine 2 cannot generate independent cash flows. Understand the word, whatever I am saying. Machine 2 and machine 3 cannot generate what? Independent cash flows. Which means, sir, it have to be combined with one more asset to generate independent cash flows. Correct or not? 1 cannot generate future cash flows independently. 2 also cannot generate future cash flows independently. But if 1 and 2 are combined with 3, understand machine 3 perspective. Machine 3 can take empty bottles plus bottle cap plus pulpy orange. It can sell to outside customers. If it is selling to outside customers, it will recover some cash flows. It will recover some future cash flows. If future cash flows are there, what I can calculate? I can calculate value in use of that future cash flows. Correct? Understand. One more example I can take. I am having this tab. This tab is in PPE morning only. I have said that. With this tab itself, can I generate future cash flows? Answer is no. Multiple assets are there. Laptop should be there. Tab should be there. Projector should be there. Screen should be there. All these items, if I combine together, then only I can generate future cash flows. Correct? Which means with the tab itself, I cannot generate future cash flows. If I can't generate future cash flows, I cannot find out value in use. Correct? In order to, if value in use is not determinable, if you cannot find out value in use, you cannot say that there is no impairment. You cannot say that there is no impairment. What you have to say, there are no independent cash flows. That's what you have to say. So then what we have to do means we have to add group of assets. We have to add group of assets. For example, for this machine 1, if I add this machine 2. For this machine 1, if I add this machine 2. Again, machine 1 and machine 2. Will these two machines, are these two machines capable of producing independent cash flows? No. Which means these two items also I cannot find out recoverable amount. I mean, these two items also I cannot find out value in use. If value in use I cannot find out, I can't find out recoverable amount also. What is the one more option which I have left? Machine 1, machine 2 plus machine 3. If I combine these three, can I get future cash flows? Which means I can find out value in use for these three machines put together. For these three machines put together, I can find out value in use, which means I can find out recoverable amount also. The meaning of combining each assets to generate the future cash flows is nothing but CGU. What is the full form of CGU? Cash generating unit. Simple. Cash generating unit is nothing but smallest group of assets which will generate future cash flows independently. It should generate future cash flows independently. Otherwise, this is also impairment is not possible. You have to add one more asset. Like this, I have to keep on adding multiple assets such that it should produce future cash flows independently. Okay, that is the meaning of what CGU. So come to the concept CGU. Come to the concept CGU. This one, impairment loss of CGU. Impairment loss of CGU, if you observe, CGU means what? Smallest identifiable group of assets generating largely independent cash flows. Sir, what they are saying, read the first point. If recoverable amount of an individual asset cannot be determined, what I have to find out? Recoverable amount of CGU. Recoverable amount of what I have to find out? CGU I have to find out. See, understand this. Sir, in this case, three machines are there. Tell me, is machine 3 itself can generate future cash flows independently? Machine 3 itself also, if you observe carefully, even without combining machine, see, output it have to combine. Machine 1 and machine 2 output it have to combine. But if you observe carefully, even without, sometimes it is possible, sometimes it may be possible. See, for example, this machine number 1 will produce empty bottles. It can either give to machine 3 or it is having an option to sell these empty bottles in the outside market also. Which means what, if you understand carefully, this machine number 1 is having independent cash flows. This machine number 1 can generate independent cash flows, but if you observe machine 2 point of view, machine 2 with its bottle caps, it cannot produce to others. It cannot produce to others, which means M2 cannot generate future cash flows independently, which means M2 have to be compulsorily combined with what? M1 and M3. Which means what? My CGU sometimes contains those assets which may be individually impaired also. Which means, see, if machine 1 is having future cash flows independently, I can find out value in use for machine 1 independently. If I can find out value in use for machine 1 independently, what I can also find out? Recoverable amount also I can find out for machine 1. Correct? Simple point. Therefore, what the standard is saying is, your CGU sometimes may contains those assets which are individually impaired also. First, you have to test those assets and recognize impairment loss. Okay, this point we can see. But before that, so check this part. Goodwill and corporate assets. Some discussion you have to understand with respect to something which is called as goodwill and corporate assets. So let us understand. See, goodwill, it can be two types of goodwill. First type of goodwill is self-generated goodwill. Second type of goodwill is purchased goodwill. If any one person is there, if any one person is doing the same business for the past 20 years, for example, that person have developed something which is called as what? Goodwill. But that goodwill is called as internally generated or self-generated goodwill. See, if you observe, morning I have explained recognition criteria of PP. Correct? Two conditions are there for recognition criteria of PP. What are those two conditions? Future economic benefit should be probable. Second item is what? Cost can be measured reliably. Sir, if you observe this is self-generated goodwill, I cannot say that how much cost I am incurring to generate this goodwill. how much cost exactly I have incurred to prepare this goodwill, how much cost I have incurred to find this goodwill, it is impossible practically. Therefore, if it is self-generated goodwill, standard will ask you to ignore. So don't account for self-generated goodwill in the books of accounts, because you cannot measure the cost reliably. See, over the 20 years, that person have did too many good things, and because of that, the company have generated some goodwill. You cannot say I have incurred 10 lakh rupees to generate that goodwill. You cannot say I have incurred 20 lakhs. Like this, you cannot say. But if it is purchased goodwill, sir, what is the meaning of purchased goodwill? If you observe, see, for example, A Limited have purchased one entity which is B Limited. Sir, it have paid a purchase consideration of 50 lakh rupees. A Limited have paid 50 lakh rupees purchase consideration to acquire B Limited. B Limited is having its separate balance sheet. I have calculated net assets of B Limited. I have calculated net assets of B Limited. Sir, what is the meaning of net assets? What is the meaning of net assets? Net assets is nothing but total assets minus outside liabilities. If I do, I will get net assets. Sir, net assets of the B Limited I have calculated and I have got only 30 lakh rupees. Which means worth of B Limited is only how much? 30 lakhs. But A Limited, in order to purchase B Limited, have to pay 50 lakh rupees. Sir, the worth of B is only 30, but A is paying 50. Why A is paying 50? Why A is paying 50? See, A is paying premium amount. A is paying excess consideration. Sir, why A is paying excess consideration is, if you carefully observe, this B Limited is having something which is called as goodwill. Here I can measure 20 lakh is only goodwill. Because I am paying 50, I am getting assets of 30. Therefore, what is that 20? That 20 is clearly goodwill. Which goodwill? Purchased goodwill. Which goodwill? Purchased goodwill. But if I am doing the business from the last 20 years, I cannot say this is the 20 lakhs, this is only for the value of goodwill. Like this, I cannot say. That is the reason self-generated goodwill will never be recorded in the books of accounts. But if it is a purchased goodwill, what it will happen? It can be recorded in the books of accounts. For this only, we are having a separate chapter, business combinations. We will do this calculation number of times. We will compare purchase consideration with net assets. All this goodwill will be called as purchased goodwill only. Okay. One more question I have. See, this goodwill also, this goodwill itself cannot generate future cash flows independently. See, this goodwill should be combined with your business. You cannot sell that goodwill to any person without selling the business. Similarly, that goodwill itself will not generate future cash flows independently. Therefore, sir, what I have to do is I have to allocate this goodwill. I have to allocate this goodwill between different CGUs. Because goodwill itself cannot generate future cash flows independently. But if this goodwill combined with other assets, then it will give me future cash flows. Correct? One more asset is also there, just like goodwill, something which is called as head office building. Head office building also cannot directly generate its future cash flows independently. But if it combines with other assets, what it can generate? It can generate future cash flows independently. Which means what? Assets like head office building and goodwill, what we have to do is I have to allocate to other CGUs. I have to allocate to other CGUs because those two assets itself will not produce future cash flows independently. But if they combine with other assets, they can give me future cash flows. Correct? So with this understanding, let us see this point also. So check this part, concept number 7. Concept number 7, there is one question based on this so that you will get a proper clarity. Allocation of goodwill and corporate assets to multiple CGUs. Allocation of goodwill and corporate assets to multiple CGUs. Read the first part. Goodwill and corporate assets are allocated to multiple CGUs based on ratio given in the question. If they are saying allocate between 50, 20, 30, then do in that ratio. If nothing is said, sir, they are asking me to allocate on pro rata basis, use the following ratio. Sir, what is the ratio which I have to do? Carrying amount of other assets in CGU multiplied by useful life of CGU. What I have to do? Carrying amount of other assets into useful life of CGU. Okay, one question is there. Through that question, let us understand the concept. Okay, so come to question number 6. Very, very important question. This question can as it is come. Okay, so check this. ABC Limited is having how many CGUs? 3 CGUs. What are those? A, B, and C. They have given carrying amounts of each CGU. A, B, C. A, how much is the carrying amount? 500. B, 750. C, 1100. Useful life they have given. 10 years, 20 years, 20 years. They are saying 2 assets are there. What are those 2 assets? What is the carrying amount of X? 600. In remarks, they are saying something. What they are saying? Carrying amount of X can be allocated on what basis? Reasonable basis. In brackets, they are saying pro rata basis to the individual cash generating units. First of all, how many cash generating units are there? 3 CGUs are there. They are saying X can be allocated. X can be allocated on what basis? Reasonable basis. In brackets, they are saying pro rata basis. Sir, here they have given carrying amount also and useful life also. Just now I have said, sir, if both are given, what we have to do? See, that's what I have written here. If both are given, I have to do carrying amount of other assets into useful life of CGU. I have to find out, which means what? 500 into 10, 750 into 20, 1100 into 20. Okay. So just check the solution. Just check the solution. First, I have to allocate this X to existing CGUs. First, I have to allocate this X to existing CGUs. Sir, first of all, I am having 3 CGUs A, B, and C. Carrying amounts of A I have written here. Useful life of CGUs I have written here. Just to find out this ratio, carrying amount into useful life ratio. Carrying amount into useful life, if I calculate, I will get the ratio 5,000 is to 15,000 is to 22,000 is the ratio. Correct? Sir, what is the total value of X? Total value of X is how much? 600 is the value of the X. I have to bifurcate this 600 in the ratio of this 5 is to 15 is to 22. Correct? Do the calculations, sir. How much for A, how much for B, how much for C? Is it correct or not? Please cross check. For A, for B, and for C. 71.4 వచ్చిందా? Next. $600 into 5/40 71.4 వచ్చిందా? అవునా? వాడు క్వశ్చన్లో ఏం చెప్పాడంటే ఇగ్నోర్ డెసిమల్స్ అని చెప్పాడు. Ignore decimals అన్నాడు కాబట్టి we have to take 71. I can take 71. Next. 214. Last. 314. ఒకసారి 3 యాడ్ చేయండి. వచ్చిందా? అందుకే ఇక్కడ 72 వేసినట్టుందన్న తెలిసి. ఇవి కరెక్టే వచ్చాయి, ఇవి కూడా మీరు రౌండ్ ఆఫ్ చేశారా? సో అయితే దీన్ని ఇంకా రౌండ్ ఆఫ్ చేసేసాను, 72 చేసేసాను. ఓకే, ₹1 ప్రాబ్లం ఏం లేదు, ఇట్స్ ఓకే. ఇప్పుడు చూడండి నెక్స్ట్. నౌ A contains this 72 also. A contains this 72 also plus 500 also. Other assets are also there in A. Similarly, B contains 750 also plus 214 also. C contains 1100 plus 314. Correct. So in next step, I have calculated these two items. Carrying amount and I have added X value. Just cross check this carrying amount of assets. Cross check this carrying amount of assets. $500 plus 72, 750 plus 214, 1100 plus 314. 1414. Read the question. I think they have given you recoverable amounts. They have given recoverable amounts. I think recoverable amounts they have given 600, 900, 1400. Correct. So see, I have written 600, 900, 1400. See, carrying amounts are these amounts. Recoverable amounts are just below yours. Tell me which CGUs are impaired. Which CGUs are impaired? Carefully, you have to find out. You have to compare carrying amounts and recoverable amounts. If carrying amount is more, then only impairment will be there. If carrying amount is less, there is no impairment gain. Correct? So if you check carefully, here the carrying amount is 572, recoverable amount is 600, which means it is not impaired. Recoverable amount is more. If recoverable amount is more, don't do anything. But if you observe B and C, carrying is 964, recoverable is 900, which means impairment loss is how much? 64 is the impairment loss. Similarly, if I check C, impairment loss is how much? 14 is the impairment loss. Correct. So now, see, how you have to solve this question is, for this B and C, I am having some impairment losses. Correct. What I have to do is, I have to allocate these impairment losses. I have to allocate these impairment losses to the existing assets. Sir, what assets I am having? Tell me. B is having what assets? 750 and X. Similarly, C is having 1100 and X of 314. Correct? Which means next step what I have to do is, whatever the impairment loss which I have got, I will be adjusting that impairment loss. First calculate and tell me, this is 64. This is the total 964. This is the total 964. So just in your calculator, 64 by 964 into 750. How much we are getting? In the 49.74. What is the balancing figure? Balancing figure? 64 లోంచి 49.74 ఎంత తీసిన తర్వాత బ్యాలెన్స్ అమౌంట్ చెప్పండి. 15 వచ్చిందా? ఒకసారి చూడండి. Same calculation. 64 by 964 into 750. 64 by 964 into 750. And 64 by 964 into 214. Impairment loss allocated to other assets and impairment loss allocated to X. Similarly, you have to also do for C also. Similarly, you have to do for C also. For C, what is the impairment loss? 14 is the impairment loss. What is the total carrying amount? 14 is the total carrying amount. So out of this 14, 1100 is for other assets and 314 is for X. Okay, so just do the calculations. Just do the calculations. Okay, So after this, what we have to do is, these are the impairment loss which we have to adjust. Next, I have written carrying amounts after adjusting impairment losses. Other assets, for A, there is no impairment. See, A, 572 will continue as it is. But if you observe for B, 750 is the earlier carrying amount minus 50 is the impairment loss. Therefore, how much is the revised carrying amount for B? 700 for other assets. And 214 is for X. 14 is impairment loss for X. So do the 214 minus 14. If I do, I will get 200 as X value. Correct? Similarly, if I calculate C, 1100 is the other assets carrying amount minus 11 is impairment loss of other assets, which means I will get how much? 1089. Similarly, X value is 314 minus 3. If I do, I will get 311. After impairment loss, these are the carrying amounts of each CGU, A, B, and C. Okay, carefully understand this. One more thing, what will happen is, in the question, they have given another asset also, which is nothing but what? Y also they have given. Sir, what is the carrying amount of Y? They are saying 200 is the carrying amount of Y. But they have given the carrying amount of Y. Are they saying it can be allocated, or they are saying it cannot be allocated? It cannot be allocated on a reasonable base to the individual cash generating units is what they are saying, which means what? Like X, I cannot allocate Y. Like X, I cannot allocate what? Y. So what we have to do in this case is understand overall entity point of view. Overall entity point of view, how many assets we are having? Tell me. See, 3 CGUs we are having overall entity point of view. Plus we are having X also. Plus you are having what? Y also. Correct? For overall XYZ Limited, we are having 3 CGUs plus one X is also there, and one more thing, one Y is also there. So what we have to do is, sir, if any asset is unallocable, if any asset is unallocable to existing CGUs, what I have to calculate is, I have to do impairment testing for the overall entity. I have to do. For the overall entity, sir, how we have to do for overall entity is, if you observe, see, calculation of impairment loss of ABC Limited entity level, I have to do the calculation. Sir, entity level means what I will do is, first I will write all the carrying amounts. First, I will write all the carrying amounts. If you observe, sir, for other assets in A, B, C, these are the carrying amounts. 500 for A, 700 for B, 1089 for C. X is only single asset, so take the total of X. X is only single asset, so take the total of X. Take this total, how much it is? 72 plus 200 plus 311. 580, 83, 583. One more asset is also there. What is that one more asset? Y is also there. Sir, for Y, what is the value? Y, the value is 200. Correct? Y, the value is 200. So just take the total of all the assets. Wait a solution. First it's eight chapter. First solution అయిపోయింది చెప్తా. Other assets carrying amounts. Other assets carrying amounts. A presentation is different, but ultimate answer will match. ఒకసారి అయినది cross check చేద్దాం. Other assets carrying amount చూడండి ఒకసారి. A, B, C, X is also 583 and Y is total amount is how much? 200 is the total value of Y. Take the carrying amount of total ABC Limited. Total ABC Limited is how much? 3072. This overall entity's carrying amount should be compared with the overall entity recoverable amount. If you check the question, they have given that overall entity recoverable amount, which is how much? 3200. So I will compare this value with 3200. Carrying amount is 3072. Recoverable amount is 3200. Is there any impairment loss? There is no. If there is further impairment loss, again I have to allocate between all these assets. If there is any further impairment loss, what I have to do? I have to allocate between all these assets. See, impairment loss of CGU means whatever the assets which are there in that CGU, every asset have to take that hit. Correct? Because CGU consists of what number of assets. In your books of accounts, I will not record CGU account debit to bank. Like this, I will not pass. I will pass individual assets wise. But while checking impairment, what I have to do is I have to do CGU level testing. If any impairment is there, assets of that entity is impaired. Okay, assets of that entity is impaired. Therefore, if any impairment loss I am getting, I have to transfer that impairment loss to other assets in that CGU. Okay, fine. They have did some different rounding of అందుకే వాడికి allocation difference వస్తుంది. X allocation difference వల్ల మొత్తం ఆన్సర్ అంతా డిఫరెంట్ వస్తుంది. బట్ ఫైన్, ఓవరాల్ ఆన్సర్ మ్యాచ్ అవుతుంది కాబట్టి ప్రాబ్లం లేదు. We can continue our solution only. Okay, so very very important question. Two assets they will give. One asset can be allocated and another asset cannot be allocated. If any asset is allocated, I have to find out the ratio. Which ratio I have to find out? Carrying amount into useful life. Based on this ratio, I have to allocate the asset. But if any asset is unallocable, I have to test the entity at overall entity level. Overall entity level impairment I have to test. Okay. So fine, one more question we have solved. Now come to concept. Okay, see. I think you know something which is called as Ind AS 2. Ind AS 2 is inventories, correct? If you observe, inventories are valued at what? Cost or NRV, whichever is lower. Already as per AS2, for example, your cost is 10 lakhs. Assume your NRV is 9,50,000. Whichever is lower means what is lower? Tell me. 9,50,000 is lower. Therefore, what I will do in as per AS2, already I have recorded my inventory at 9,50,000 only. Correct? If already as per AS2 you have recorded your inventory at 9,50,000, see this realizable value, net realizable value is also similar to recoverable amount. Because net realizable value also I will do similar calculations, which means realizable value I will take minus expenses. Similar calculation I will do, but not in the name of recoverable amount. Similar calculation will be said in Ind AS 2 also. So what Ind AS 36 is saying is, since you are already doing similar kind of testing in Ind AS 2, once again you no need to check Ind AS 36. Which means again you no need to find out which is recoverable amount, value in use, next fair value less cost to disposal. These calculations are not required once again with respect to this Ind AS 2. Okay, because the reason is simple. You have already in your respective standard, you have already taken the realizable value calculation, but in a different name. Okay, but here once again no need to calculate the value as per Ind AS 36 once again. The same point they will explain in the scope paragraph of the first standard. So you can highlight this first part. Scope applies to all assets except inventories which are covered in Ind AS 2. Other points are also there, but those are not that much important. Highlight the first word. For inventories, what is not applicable? Ind AS 36 is not applicable for inventories. Important point. Okay, and one more thing. See, For example, if your CGU contains goodwill, and 2 machines, let us say, sir, goodwill value is 2 lakh. Machine 1 50,000. Machine 2 also 50,000. What is the total carrying amount? Tell me. Total carrying amount is 3 lakh. But they are saying recoverable amount is only 50,000. Recoverable amount is how much? 50,000. Total CGU. What is the carrying amount CGU? 3 lakh. Can you tell me what is the impairment loss? What is the impairment loss? 2,50,000 is the impairment loss. Understand. In that CGU, what items are there? Goodwill is also there. Machine 1 is also there. Machine 2 is also there. Understand. If in any CGU goodwill is there, if for that CGU impairment comes, I have to completely allocate that impairment to goodwill first. Because understand, what is the meaning of goodwill? If goodwill is there, which means something favorable is there to your company. Something favorable advantage is there for you. That's why goodwill is there. But here what I am saying, impairment is also there. For one CGU, how come both will be there? How come impairment and goodwill both will be there for single CGU? It is not possible. Correct? So first of all, if any impairment comes, if that CGU goodwill is there, I have to completely eliminate that goodwill first. In this case, what is the total amount of impairment loss? Tell me. 2,50,000 is the total amount of impairment. Sir, first how much goodwill is there? So first I will eliminate 2 lakhs goodwill completely. If I eliminate total 2 lakhs goodwill completely, tell me what is the balance carrying amount? Balance, what is the carrying amount? 50,000. How many assets? In the ratio of their carrying amounts. In the ratio of their carrying amount. Simple. Which asset is having highest carrying amount, that should take the highest impairment hit. Correct? So 50-50, which means each will take 25,000 hit. Understand, what you have to understand is, I have to allocate the impairment loss first to the goodwill. First, I have to allocate to which item? Goodwill. After allocating to goodwill, if there is any balance, what I have to do? I have to transfer that to, I have to allocate that impairment loss to other assets in that CGU. In which ratio I have to do? Carrying amounts ratio I have to allocate. Okay, same point they will explain here. So please check this. Please check this. First, it will be allocated by goodwill. First, it will be allocated by goodwill. 1 second. First, it will be allocated by goodwill. Second, if individual asset is impaired already, impairment loss calculated on that asset we have to calculate. Sir, what is this meaning? We have to solve one question, then you will understand. But remember one thing, for inventory, Ind AS 36 is not applicable. If in your CGU inventory is also there, don't allocate that loss to inventory. For example, in this same question, inventory is also there, 20,000. Inventory is also there, 20,000. Now tell me what is the total carrying amount? Tell me what is the total carrying amount in this question? 3,20,000. Let us continue, same recoverable amount. Recoverable amount is 2,50,000 only. Sorry, recoverable amount is 50 only. Now tell me what is the impairment loss? What is the impairment loss? 2,70,000 as impairment loss. First, what I have to adjust? Goodwill I have to adjust. Still, how much is the balance?
70,000.
That 70,000 should be allocated to remaining assets. In which ratio? Carrying amounts ratio. But if it contains inventory, I cannot allocate to inventory because inventory is out of the scope. Sir, other than inventory, what assets are having? Machine 1, machine 2. For those two assets, I can allocate. How much is the loss? 70,000 should be allocated. 35K for machine 1, 35K for machine 2. Like this, we have to do the allocation. Okay. One master question, let us solve. All adjustments will be covered there. Question number 12. Question number 12. Very, very important question. Okay. So read this question. Read this question till here. Oh, sorry, till here. Till the underlined or highlighted part, please read the question once. Online students also. Very, very important question. Very important question. Okay, let us understand the question till here. What they are saying is, Elia Limited is a manufacturing company. It is having some various plants. Machine A in the Baroda plant is used for the purpose of what? Bottling. One more machine B is there, which is clubbed with machinery A. One more point they are saying, machinery A can individually have an output and it can sold independently in the open market. Which means what? Can we find out value in use for machine A separately? Because they are clearly saying I can find out independent cash flows for machine A. But what they are saying, machinery B cannot be sold in an isolation. Which means for machinery B, I cannot find out value in use separately. Value in use separately. Therefore, what I have to do? I have to include in CGU. Correct? I have to combine that item with what? Machine A. And what they are saying, the company considers this group of assets as a CGU and an inventory amounting to 2 lakh and goodwill is also there. How much? 1.5 lakhs. If you observe carefully, this question consists of CGU. Sir, and what are the assets which are there in this CGU? Machine A is there, machine B is there, goodwill is there, inventory is there. Very good. If I got any impairment loss, tell me what is the first asset which I have to adjust? Goodwill. First loss I have to adjust with the goodwill. Very good. Can I adjust with inventory? Inventory is not possible. Why? Because it is out of the scope. Because inventory is out of the scope of AS 36. Very good. In AS 36. Now, Now let us come to the question. Machinery A was purchased on 1st April 20x3. Understand these dates carefully. Cost is 10 lakhs. Residual value is 50,000. Residual value is 50,000. Let us check useful life of machine A is how much? Useful life of machine A is 10 years. Useful life of machine A is 10 years. Can you find out what is the yearly depreciation of machine A? Yearly depreciation of machine A is how much? Very good. Have you got that? 10 lakhs minus 50,000 divided by 10. Na? So how much? 95,000 is the yearly depreciation for machine A. Very good. Tell me for machine B also. Machine B, 5 lakhs minus 0. There is no residual value for machine B, but useful life is 10 years. Therefore, what is the depreciation of B? 50,000. Very good. Next, what they are saying? They have given cash flows for which asset? Machinery A they have given, because machinery A can only produce future cash flows independently. Correct? Therefore, for machine A they have given cash flows. In the next 5 years, pertaining to machinery A, incremental borrowing rate is 10%. They have given the cash flows. They have given the cash flows, and last year they are specifically saying what? 1 lakh rupees excluding the residual value. But last year I also have to consider what? Residual value. So tell me, plus what is the residual value? Very good. 50,000 is the residual value. 50,000 is the residual value. Discounting factor is 10%. Discounting factor is 10%. So tell me 1 by 1.1. 1 by 1.1, how much? Our number is 0.909. 3 digits is enough. Equal to next digit. Next number. Next. Last. 1. Round of this. Find out this value and tell me the present value. Tell me the present value. Tell me the present value. $489. 650. No? This is value in use. ఇది ఏ డేట్ ఫైండ్ అవుట్ చేసాం? Which date we have found out this value? 31st. కింద ఇచ్చారు చూడండి ఒకసారి. On 31st March 20x8, the professional valuers estimated that the current market value, which means indirectly they are finding out FVLCTD on which date? 0x8, which means value in use also we have to find out for 31st March 20x8 only. And one more thing we have to find out, carrying amount also on 31st March 20x8 we have to find out. Okay, carrying amount we can find out later, but let us find out fair value less cost to dispose. Check this. What is the fair value which they have given in the question? 7 lakhs is fair value. Correct. Valuation fee is how much they have given? 1 lakh. Next, there is a need to dismantle the machinery before delivering it to the buyer. Dismantling cost is how much? 1.5 lakhs. Specialized packing cost would be how much? 25,000. Legal fees would be 75,000. Calculate the FVLCTD value. Fair value less all the cost to disposal we have to do. 3 lakh. One more thing you have to understand here. Valuation fee means while deducting cost to disposal, I have to deduct only incremental costs. What I have to deduct? I will deduct only incremental costs, which means those costs which I have to incur if I make the sale, those only I have to incur. Valuation fee, if you observe, whether I make the sale or not, if I do the valuation, I have to incur that fee. which means it is not related to my fair valuation of the asset. Therefore, what the standard is saying is this valuation fee you have to ignore, because this is not an incremental cost. Whether you actually sell or not, I have to incur this valuation fees. Therefore, we can ignore that, and other than this, whatever the costs are there, which we have to discuss, which we have to deduct. See, dismantling cost means what? If I am actually selling the asset, then only I am incurring this amount. Packing also, while I am actually selling, then only I will incur. Legal fees also, while I am actually making the sale, then only I will be incurring 75,000. So tell me the value. So 7 lakh minus 1 lakh 50 minus 25 minus 75. So how much you have got? Then 4,50,000 is my fair value as cost to disposal. If you observe carefully, value in use is how much? 4,89,650. This one, fair value less cost to disposal is how much? 4,50,000. Tell me whichever is higher. So 4,89,650 will be called as a recoverable amount. Correct? 4,89,650 will be called as what? Recoverable amount. This recoverable amount is on which date? Tell me. Very good. This recoverable amount is on 31st March 20x8. I also have to find out the carrying amount on this date. Correct? You have already said the yearly depreciation is 95,000 something you have said for A. 1 second. So if you observe this carefully, see, I have to find out the carrying amount as on 31st March 20x8. Because for machinery A, how much it is? Just do this calculation, is it correct or not? 10 lakh is the cost minus 10 lakhs cost minus 50,000 is the residual value divided by 10 into 5, because 5 years is completed. Because 5 years is completed, then is it correct or not? Is the carrying amount on 31st March 20x8? Just do the calculation. Check the B also. B 3 years is only completed, because 1/4/2005 I think we have purchased 20x5. Therefore, for B 3 years is only completed, but zero residual value. Zero residual value. Which means how much? 3,50,000 for machine B. For machine A, how much? 5,25,000. They are saying other two assets are also included in the CGU. What are those other two assets? Inventory is also there. Goodwill is also there. So inventory value is how much? 2 lakh. Goodwill value is 1,50,000. This is carrying amount of all the assets. Correct? Next step, let me write recoverable amount of all the assets. Recoverable amount, if you observe, FVL 4,50,000, value in use 4,89,750. Just now we have calculated. Recoverable amount is 4,89,650. They have also given, if you read the question further, the recoverable amount of CGU is 10 lakh rupees as on 31st March 20x8. This is not for single asset. This is for all the CGU. How much? 10 lakhs. 10 lakhs is the CGU. So next, if you observe, machine A, what is the carrying amount? 5,25,000 is the machine A's carrying amount. Recoverable amount of machine A is how much? 4,89,650. Is there any impairment? How much is the impairment? Carrying amount is more, recoverable amount is only 4,89,650. So tell me, what is the impairment? 35,350 is the impairment. Correct? Understand. Machine A can be individually impaired. Therefore, I have tested machine A first. Machine A, after impairment, what is the revised carrying amount? After impairment of machine A, what is the revised carrying amount of machine A? 4,89,650. If I take the total of CGU, if you carefully observe, machine A is already impaired. Therefore, I can take how much? 4,89,650. Machine B, how much? 3,50,000. Inventory, how much? Goodwill 1,50,000 and inventory 2 lakhs. Take the total of carrying amount. Very good. Take the total of carrying amount. 11,89,650 is the total carrying amount of all the CGU minus recoverable amount is how much? What is the impairment loss? What is the impairment loss? 1,89,650. Carefully tell me what is the first asset which I have adjusted this impairment loss? Huh? How much?
1,50,000.
Inka balance loss ento? 39,650. Still whatever the assets which are there, tell me.
Inventory and machinery.
A, B, inventory, 3 are there. Can I adjust inventory loss to, can I adjust impairment loss to inventory? Not possible. How many assets are there? 2 assets, A and B. Can I adjust further impairment loss to machine A? Why? Because machine A is already impaired, therefore I can't further impair A. If I further impair A, its carrying amount will be even falls below the recoverable amount. That is not necessary because already I have brought my machine A to its recoverable amount. Therefore, don't do further impairment of machine A in this question. Correct? So, what is the only machine which is left? B. Balance loss should be completely transferred to machine B only. Okay, so total 189,650, 150,000 will be transferred to goodwill, 39,650 will be transferred to machine B. Okay, very, very important. So understand this calculation perfectly. In your CGU, if any asset is individually impaired, do that individual impairment and further it will not be tested in CGU. I will just consider that, but I will not allocate further impairment loss to this machine A. Most important point you have to understand. Okay, goodwill first, inventory should not allocate. If any asset is already impaired, further I will not do impairment allocation. Okay, after this point, please open concept book. Please open concept book. Read this. Read this point. First, it should be adjusted with goodwill. Second, what they are saying, if individual asset is impaired already, impairment loss calculated on that asset right here only, and no more further impairment loss will be allocated. You can write the point there. No more further impairment loss can be allocated. No more further impairment loss can be allocated. If any asset is impaired already, it is done. Don't do further impairment. Once again. Inventory also not possible. Inventory also not possible. Okay. Now, still question is pending, but what we'll be doing first is, see, after allocating these impairment losses, I want revised carrying amounts. See, A, we have not allocated further impairment loss. Therefore, this is the revised carrying amount of A. Inventory also I have not did the further changes, but goodwill is 0. Goodwill is 0. B, 3,50,000 minus 39,650 I have did now. Correct? 39,650 I have allocated to B. Revised carrying amounts will be as follows. Revised carrying amounts will be as follows. For machine A, what is the value? 4,89,650. For machine B, what is the value? 3,10,350. Goodwill 0. Next, last inventory 2 lakhs. Inventory I cannot allocate impairment loss. Correct? And one more thing, they are asking, just read this. Prospective depreciation for the next year they are asking. Next year means what? 20, X8, X9, which means these are the revised carrying amounts. Is there any residual value for A?
Yes.
Residual value for A is how much?
50,000.
Minus 50,000 divided by what is the balance useful life? 5 years are completed, therefore balance useful life is 5. Tell me the carrying amount. Sorry, depreciation amount is how much? 87,930 is the value. Machine B, this much. There is no residual value for B. Correct? Divide by 5. Sorry, 10 years is the useful life, I think, for B. 3 is only completed, therefore balance life is 7 years. So 310, 350 by 7, how much it is? 44,336. Carefully understand till here. Depreciation for the year 20x8, x9, we have got these much figures. Correct? Now, one final concept in this standard, which is nothing but see, my carrying amount is 10 lakh. There is some recoverable amount. I have got some 8 lakh rupees as recoverable amount. Tell me, is there any impairment loss? Impairment loss, think. Impairment loss is how much? 2 lakh is impairment loss. After 1 year, after 1 more year, I have calculated depreciation on this 8 lakh rupees and assume my carrying amount is 7 lakh. Assume my carrying amount is 7 lakh rupees. See, once again I have calculated recoverable amount. This time my recoverable amount is 9 lakh. This time my recoverable amount is how much? 9 lakhs. First of all, impairment testing I will not do every year. Impairment testing I will do only when there are indicators of impairment. Impairment testing when I will do only there is indicators of impairment. Sir, what is the meaning of indicators of impairment? For example, I am producing one product. Competitor have produced a competitive product at best price. Therefore, no customer is purchasing my product. If no customer is purchasing my product sales will be decreased. If my product sales are decreased, my product cash flows will be decreased. If my cash flows are decreased, my value in use will be decreased. If my value in use will be decreased, my recoverable amount will be decreased. Correct? Which means if any competitor have launched better product, my indication will be there. Impairment indication will be there. So what I have to do, I will do impairment testing. I have did impairment testing and I have got impairment loss 2 lakh rupees. Later what have happened is in the next year, the government have completely banned my competitor product. Now my competitor cannot sell his product. Therefore, customers have to buy my product only. Therefore, my cash flows have increased. My value in use is increased. My recoverable amount is increased. Initially, indicators for impairment is there. But later what have happened? Indicators for reversal of impairment is there. Understand, this is not impairment gain. Earlier, I have booked impairment loss, correct? Now, there are some indicators which are showing I have to reverse that impairment loss. Correct? It is not impairment gain. Understand? Earlier, I have recognized impairment loss. Now, I have to reverse that impairment loss. Here also, I will do only when there are indicators of impairment. Sorry, when there are indicators of reversal. How we will do indicators of impairment testing? Only if there are indicators. In the same manner, we will also do reversal of impairment also only if there is indicators. Okay. So the last part of this standard, which is nothing but indicators of reversal of impairment, if you observe carefully. So come this. So come here. Reversal of impairment loss of CGU. Read this point. This will happen when reverse. Recoverable amount of CGU is more than what? Carrying amount. This is not impairment gain. Understand the difference between impairment gain and reversal of impairment loss. Correct? First of all, same thing. See, impairment loss, what I will do? I will allocate in the ratio of their carrying amounts. Similarly, reversal of impairment loss also, I will allocate in the ratio of their carrying amounts. But one thing you have to understand. If in your CGU, goodwill is there, if in your CGU goodwill is there, what is the first asset which will take the impairment hit? Goodwill will take the impairment hit. So if there is any reversal, remember only one point, reversal of impairment cannot be transferred to goodwill. Because once goodwill, if it is cancelled, later I cannot transfer that reversal amount to goodwill. Very, very important point. So goodwill reversal cannot be allocated. Okay, you can copy this point there. This point. Reversal of impairment loss of CGU is not allowed for goodwill. Is not allowed for goodwill. Most important point. If goodwill is reversed earlier, if goodwill is impaired earlier, further reversal should not be transferred to goodwill. Okay. Now the last point, understand if there is any reversal of impairment in the question. If there is any reversal of impairment in the question, you have to calculate two amounts. First amount is recoverable amount. First amount is what? Recoverable amount. They will give in the question. Second amount what you have to calculate is carrying amount if there is no impairment. What is the second thing we have to calculate? Carrying amount if there is no impairment. Just you have to calculate these two amounts if there is any reversal of impairment in the question. Okay, very very important. ఇక్కడ ఉంది ఆల్రెడీ రాయకండి, ఇక్కడ ఉంది. Whichever is lower we have to take. What we have to take? Whichever is lower we have to take. Okay, in this question let us continue the balance part. Read from here. Read from here. In the next year, the company has done the assessment of recoverability of the CGU and found the value of the CGU is how much? 11 lakhs as on 31st March 20x9. Now I have one doubt. In that CGU as on 31st, in that CGU as on 31st March 20x9, tell me what are the assets which are there? Very good. A, B, inventory. I want amounts. Machine A, how much? Machine B, how much? Inventory, how much? I think here I have written the values. See, 1 year depreciation we have already charged. 87,930 for A, 44,336 for B. Okay, which means if you want me to ask me to calculate the carrying amount, this will become 4,01,720 per A. Confirm the B amount. Is it correct or not? 3,10,350 minus 44,336. Very good. These two assets are there. Plus, along with these two assets, one more item is also there. Inventory. So add these three amounts. Add these three amounts. 8,67,734 is the carrying amount of all the assets. Correct? They have given the recoverable amount also in the question. Just now I have read that. 11 lakh is the recoverable amount of all the assets. 4,50,000 is for machine A. Okay? They have given for all the CGU put together, it is how much? 11 lakhs. Tell me, is there any reversal or not? See, this is carrying amount. This is carrying amount. Recoverable amount is 11 lakhs. Find out the difference. 11 lakh minus 867, 734. 2,32,000. Something you have got. You cannot directly allocate that amount. Because in case of reversal, I asked you to calculate two amounts. What are those two amounts? Recoverable amount, and one more thing is what? Carrying amount if there is no impairment. I want this amount. I want carrying amount if there is no impairment. As on 31st March 20x9 I want. As on 31st March 20x9 I want. See, check this part. Check this part. Carrying amount of all assets assuming there is no impairment. See, you only have to do this calculation. This 5,25,000 is before all impairments. First step I have calculated. See, this minus 1 more year depreciation. 1 more year depreciation means how much? 95,000. Forget about impairments. Nothing is happened. Correct? This is your normal carrying amount minus 1 year depreciation, which means 95,000. Ante enta? 525 minus 95. How much? 4 lakh 20 year 30. 430,000. This is the carrying amount of A if there is no impairment. Similarly, do for B also. Similarly, do for B also. 3 lakhs. Very good. B 3 lakhs. Inventory 2 lakhs. Inventory as impairment same value will be continuing. Take the total. 9,30,000 is the total of all CGU. Correct? Now, one more thing. I have to compare two items. Sir, what are those two items? See, recoverable amount with carrying amount if there is no impairment. For this asset, if you observe, sir, what is the recoverable amount? Single asset I want. Single asset they have given, see. Machine A, recoverable amount is how much? 4,50,000, correct? For machine A, 4,50,000. Sir, machine A, if there is no impairment from the starting onwards, how much it will be there? 4,30,000, take whichever is lower. Whichever is lower means how much? 4,30,000 is lower value. Understand? Sir, currently my value is this much. Currently my value is this much. 4,01,720. Now it can become this much. And in the 4,01,720 can become 4,30,000. Find out the difference. Find out the difference. 28,000. That is the maximum reversal which is allowed as per the standard. More than that, you cannot do the reversal. In order to find out the maximum reversal, I have calculated two amounts. What are those two amounts? Recoverable amount or carrying amount. If there is no impairment, whichever is lower, I have to calculate. Correct? Based on that, I have to do the reversal calculation. Similarly, for B, if you observe. For B, if you observe, in the question they have given, observe carefully, combined machine A and B, they have given 7,60,000. Machine A and machine B is 7,60,000, but they have given machine A separately also. Machine A 4,50,000, which means can't we find out for machine B? For machine B, 760 minus 450. Very good. 3,10,000. This is recoverable amount of B. This should be compared with. This should be compared with 3,10,000. Sorry, 3 lakh and 3,10,000. 3 lakh and which one? Idanta 760 minus 450 anta 3,10,000. Okay, 3,10,000, fine. If there is no impairment, it is 3 lakh rupees. Whichever is lower. Whichever is lower. 3 lakh is lower. Sir, what is my current balance of machine B? 266,014. Correct? So my machine should be reversed. 266,014 can maximum become 3 lakhs. 3 lakhs. Which means what is the maximum impairment which is allowed? 33,986 is the maximum impairment which can be allowed as per the standard. Two amounts you have to calculate finally. What are those two amounts? Recoverable amount, carrying amount if there is no impairment. Calculate whichever is lower, find out your existing carrying amount. Difference between those two is the maximum reversal which is allowed. Okay, same calculation, I have presented it very nicely here. Actual reversal is this much, but one more thing, goodwill cannot be reversed. Goodwill cannot be reversed, so don't write goodwill. This is the maximum calculation which I have did. Once again, I have calculated nicely. So 62,266 is the maximum reversal of impairment loss which is allowed as per the standard. Most important advanced question, if they want to ask, this is the maximum extent which they can go. Other than this, they cannot go and ask. Okay, because this is ICAI question. So, but very good question. In this question, impairment is also there, reversal of impairment is also there. Very good question. We can easily solve impairment part, but reversal we just have to check once. Otherwise, you can easily solve this reversal question also. Okay. Balance questions easily you can solve in this impairment chapter. If you want, you can cross check after going home. Try this question number 8. Try this question number 8. After going home, you can easily solve that question. Also question number 7 also. If you are able to solve these questions, any question you can solve in this impairment chapter. Okay, of course, after solving whatever we have discussed today, after that you have to solve these two questions, then whatever question which they can come, easily you can attempt in the exam. Okay, fine. So impairment also we have completed. So one more standard we will complete. We will start with borrowing cost, which is Ind AS 23. If you want any break of 10 to 15 minutes, okay, 15 minutes. 10 minutes, so time is 4:30, 4:45, let us start. Okay, come fastly, we'll go faster. 1 hour is what more I want. So borrowing cost also we will cover, 38 also we will cover. Otherwise it will postpone to tomorrow. So we won't have time to cover other standards. Okay, today we will cover these two standards and then we will go. Okay, so go for break, we'll start at 4:45. Okay. So let's start with next standard, which is Ind AS 23 borrowing cost. Let us complete. Easy standard. So let's complete this nicely. Page number 39. So quickly, let us come to page 39. Online students, is the audio fine? Please confirm. Okay. So fine. First of all, let us understand the meaning of borrowing cost. A treatment of borrowing cost, if you observe, borrowing cost, if it is directly attributable to either acquisition, construction, or production of a qualifying asset. We have to check if it is a qualifying asset or not. If anything is a qualifying asset, whether it is related to acquisition or construction or production of that asset, we have to add to the cost of the asset. In all other cases, what I have to do, I have to treat that item as an expense. Okay. Next, borrowing cost means, they will define borrowing cost means, they will say that interest expense and other expenses also. Interest is always a borrowing cost, that we already know that. Plus, other than that, some incidental expenses like brokerage, etc. are also there. Okay. Second thing, what they are saying, it also includes interest expense, and read this point, exchange difference from foreign currency borrowing to the extent they are to be adjusted. Okay, which means what we have to calculate, exchange difference from foreign currency borrowing to the extent they are to be adjusted. This is most important point in this standard. So let us directly check one question based on this point. Okay, so before that we have to check this concept number 4, which is exchange difference in borrowing costs. If any loan is taken in foreign currency, if any loan is taken in foreign currency, we have to calculate these steps. Step 1, step 2, step 3, step 4 we have to calculate. Okay. First step what I have to calculate is calculate the actual interest cost on foreign currency borrowing to be paid. With example, you will easily understand, but fine. Step number 1, I have to calculate actual interest cost on foreign currency borrowing to be paid. Step number 2, what I have to find out? Calculate the savings in interest cost. I think you all know SFM. In SFM, if you observe, borrowing rates in foreign countries are cheaper. Foreign countries, borrowing is cheaper than Indian companies, Indian country. The reason is very, very simple. Inflations and interest rate swaps, multiple reasons are there to understand the linkage between that. So here what they will be saying is, step number 2, what I have to calculate is interest cost on loan if taken in functional currency minus step 1. Let us directly solve one question. Through that question, I will explain the concept. So come to Ind AS 23 questions. Take this question number 5. Take this question number 5, most important question. Okay, let us understand. ABC Limited have taken a loan of USD 20,000 on 1st April 20x1 for constructing a plant at an interest rate of 5% per annum payable on annual basis. They have taken foreign currency loan. What is the loan which they have taken? $20,000. What is the interest rate? 5%. Just do $20,000 into 5%. 5% is the interest, correct? On 1st April 20x1, the exchange rate between the currencies USD versus rupees is 45 rupees per USD. See, this is opening exchange rate. Okay. On 1st April, they are saying opening exchange rate is how much? 45 rupees per USD. Exchange rate on the reporting date, which means it is closing rate. Closing rate is 48. Opening rate is how much? 45. The corresponding amount could have been borrowed by ABC Limited from State Bank of India in local currency at an interest rate of 11% per annum. Is compute the borrowing cost to be capitalized. See, what they are saying is, you have taken foreign currency borrowing. What is the amount of borrowing which you have taken? $20,000. What is the interest rate? 5%. They are saying If you want to borrow in Indian currency, obviously Indian currencies are expensive. Indian currency loans are expensive. Therefore, what they are saying, Indian currency loan, if you want, you have to pay how much interest? 11% per annum interest you have to pay. So here what they are saying is, if you observe carefully, first step what I have to calculate is, see, this is the closing rate, 48 rupees, and 45 rupees is the opening rate. First of all, sir, tell me what is the interest which that person have to pay? $20,000 into 5%, how much you have got? 1,000 you have to make the payment at the end of the year, correct? So multiply with closing rate. Closing rate is how much? 48. So tell me this. 48,000 is the step number 1 answer. Step number 2, what I have to do is, sir, if you have taken the loan in Indian currency, how much interest you have to pay, we have to calculate. Second step, if I have taken the loan in Indian currency, how much interest I have to pay, I have to calculate. First of all, sir, if I take the loan in Indian currency, how much loan I have to take? How much loan I have to take, we have to calculate. First of all, how much loan we have taken? $20,000. If I want to take that in Indian currency, multiply with opening exchange rate. How much is the opening exchange rate? 45. This much amount of Indian currency loan I have to take. So tell me, 20,000 into 45 is how much? 9 lakh into 11% interest I have to pay. Correct? 9 lakh into 11% interest, if I calculate how much I will get? 99,000 I will get. Correct? 99,000 I will get. Step number 1, what I have calculated is, what is the amount of interest which I have to pay in foreign currency borrowing. Second step, what I have to calculate is, if I have taken such loan in Indian currency, what is the interest which I have to pay? How much interest I have to pay? 99,000. But if I have borrowed in foreign currency, how much I have to pay? 48,000. Which means, since I have borrowed in foreign currency, I have got some loss. Sorry, I have got some savings. Normally, I have to pay 99 if I borrowed in Indian currency, but since I have borrowed in foreign currency, how much interest I am paying? Only 48,000. Can you calculate and tell me what is the amount of savings? Very good. Amount of savings is 51,000. Now what I have to do is, see, this is a monetary item. Loan is a monetary item. I think as per AS 11, we know the difference between monetary and non-monetary items. Monetary items means, for example, debtors, cash, okay, loans. These are monetary items, which means whatever the amount which you are receiving from the asset, if it is fixed, that is called as monetary item. If it is monetary item, what I have to do is, I have to value at closing exchange rate. If you observe, see, the balance of opening is 45 rupees, closing balance is 48 rupees, which means I have, see, this is liability. This is liability, therefore 20,000 into 45 minus 48. This is exchange loss. Correct? This is exchange loss. How much is this exchange loss? Tell me. How much? 60,000 is the exchange loss. Correct? 45 initial balance, but now at the year end, the balance have become 48, which means the difference is 60,000 exchange loss. Now, what the standard is saying is, see, first step I have calculated actual interest on foreign currency borrowing, how much I have to pay, that I have calculated. Second step, I have calculated interest. Savings in interest I have calculated. So savings in interest means what? Interest cost on loan if taken in functional currency minus step number 1. Step 3, what I have to calculate? Exchange difference on foreign currency borrowing I have to calculate. Always remember, if you are getting exchange gain, that should be directly transferred to P&L account. If you are getting exchange gain, that will be transferred to P&L account. See, this will be said in Ind AS 21, foreign exchange. As per Ind AS 21, what I have to do is, I have to restate all my liabilities at closing exchange rate, and whatever the loss or gain which I am getting, that loss or gain should be transferred to P&L account. That is said in Ind AS 21. But here there is little bit interlinking between borrowing cost and Ind AS 21. Sir, here what they will say, if you observe, borrowing cost equals to step number 2 or exchange loss. Step number 2 means savings. Step number 3, exchange difference. Calculate whichever is lower. Whichever is lower will be added to the original borrowing cost. Whichever is lower will be added to what? Original borrowing cost. If someone asks you what is your original borrowing cost, you have to tell the first calculation, which means, one second, let me show that calculation. So check this. First, step number 1, I have calculated calculation of interest which should be paid in foreign currency, which is 48,000 rupees. Second step, if I have taken the loan in Indian currency, I have to pay 99,000. This is notional calculation. I have already borrowed in foreign currency only. I will pay in foreign currency. But just for the purpose of this standard, I have did this calculation. Step number 3, savings. Sir, how much savings I have got? 51,000 savings I have got. I have also calculated exchange gain or loss. I have got exchange loss of 60,000 rupees. Step number here, what I will do, step number 4 or step number 3, which means exchange gain or savings in interest, whichever is lower. 60 or 51, whichever is lower. 51 is lower. But still, the balance loss is how much? Balance loss is 9,000. Total loss is 60,000, correct? Out of which 51,000 should be shown as an adjustment to borrowing cost. Balance 9,000 will be transferred to P&L account. Whichever is lower amount is there, that whichever is lower amount should be adjusted to borrowing cost, which means normally my borrowing cost is 48,000. Now I have to add this 51,000. If you check the last point, total borrowing cost to be capitalized equals to 48,000 plus 51,000, which means 99,000 should be the total borrowing cost which have to be capitalized. Okay, easiest question. This kind of question, there is a chance of asking in the exam. So properly practice this question. If you don't practice, you will not get this. Okay, the solution I have already shared. So just to practice the solution. Steps also I have written here only. Okay, important question. Step number 3, step number 4. Here I have written 5 steps. Anything you can follow. Okay, whichever is convenient for you. Here I have just written in a more detailed format. There I have combined both these steps. But here for understanding, just I have segregated the 2 steps. For your understanding, any step you can present this. Okay, important thing. Entries I have passed. Those entries you can understand easily. Capital ఎంత యాడ్ చేసామంటున్నారా? ఫస్ట్ 48 వచ్చి 45 ఎంత వచ్చింది కదా? This is 48 plus this exchange difference also, whichever is lower figure also I have to add in the borrowing cost. It will be added to the borrowing cost. Yes, 99,000 will be added to the asset. Okay, asset యాడ్ చేసేయాలి. ఇక్కడ యాడ్ చేస్తారు చూడు, ఫైనాన్స్ కాస్ట్ అకౌంట్ డెబిట్. ఈ ఫైనాన్స్ కాస్ట్ అకౌంట్ ప్లాంట్ అండ్ మెషినరీకి యాడ్ అయిపోతుంది. Okay, plant and machinery, ultimately it will be capitalized. Next, qualifying assets definition we have to understand. Qualifying asset meaning is nothing but any asset which takes a substantial period of time to get ready for its intended use or sale. For example, if you are constructing any bridge, bridges will not be built in a single day, correct? It will take some time. It will take some 7 months or 8 months or 10 months or 12 months. So whatever it is, if it is taking substantial period, that is called as qualifying asset. Always remember, substantial period is not defined in the standard. Entities can choose whatever it is as substantial period. For example, some entities can choose if the period is more than 12 months, it is substantial. For exam purpose, always if the period is more than 12 months, you can treat that as substantial period of time. Sometimes even if it is less than 12 months, for example 6 months or 8 months, 9 months, if it is like that also, if the question is giving any hints, we have to still assume it as a qualifying asset. Otherwise we can consider it as a not qualifying asset. Normally, exam point of view, what you have to remember is, if it is more than 12 months, always it is substantial, always it is qualifying asset. Sometimes if it is less than 12 also, check the hints. If the hints are saying asset is a qualifying asset, I have to capitalize. Otherwise, I have to ignore. Okay. Normally, again, I am saying more than 12, always substantial. Less than 12, check the question. If the question is giving hints, then only consider as substantial. Otherwise, it will not be treated as a substantial asset. Okay. Fine. Now, this we have to understand. This is the important concept in the standard. amount of borrowing cost eligible for capitalization. In this standard, we have totally two types of borrowings. First type of borrowing is called as specific borrowings. Second type of borrowings is called as general borrowings. Specific borrowing means very simple. For a construction of specific asset, I have taken the borrowing. I will use that amount only for that asset. I will use that amount only for that asset, which means if asset is not constructing, for example, if there is any idle time, I cannot use that amount for any other purpose because it is which borrowing? Specific borrowing. Even though amount is idle, I cannot use for other purposes. I can invest temporarily, but I cannot make expense of any other item. Okay, which means very simple. For example, I have taken a loan. I have taken a loan of 10 lakh rupees. 10 lakh rupees I have taken a loan to construct a specific building. First day, 1st April, what I have did is I have incurred 5 lakh rupees. I have incurred 5 lakh rupees. Next 5 lakh I have incurred on 1st September only. Understand? How much is the amount of loan which I have taken? 10 lakhs. But year beginning, how much I am incurring? 5 lakh rupees. Next 5 lakh I require only on 1st September, which means till this period of 5 months, I don't need this funds. If I utilize this amount somewhere, it is not written as specific borrowing because I have to utilize only for the purpose of building only. But I can invest it temporarily. I cannot use for construction of any other asset, but what I can do, I can invest it temporarily in any other place. For example, FD I can do. Like this I can do. If I get any interest, I have to adjust that amount also. Okay, which means very simple here they will say. If it is specific borrowing cost, this is the amount which I have to capitalize. Okay, while solving questions, you will get the proper clarity, but just read this point. Actual borrowing cost incurred on specific borrowings, irrespective of the date on which such expense is incurred, minus investment income from such temporary investments. If I have made any temporary investment, if I am getting any interest income, I have to adjust that interest. For example, a 10 lakh is the amount of loan, 10% is the interest. Assume the total interest which I have to pay is 1 lakh rupees. Temporarily, I have invested somewhere and I have got 10,000 rupees as interest income, which means I have got 10,000 rupees interest income. If anyone asks me what is my net cost, 90,000. So this only I have to capitalize. Correct? This is in case of specific borrowing. What is the formula? Just remember that formula. Actual borrowing cost incurred on specific borrowings, irrespective of the date on which such expense is incurred, minus investment income from such temporary investment. This is the thing which you have to remember. Net cost I will add 90,000. Second type of borrowings are called as general borrowings. General borrowings means I have borrowed some money, but I am not utilizing it for the purpose of a single asset. For example, the company have borrowed 100 crores. Through these 100 crores, the company will incur for a construction of building, construction of a machinery, working capital. Sometimes it can pay salaries to employees. Sometimes it can pay payments to vendors. All these things can happen. If the company is doing all these things, it is not a specific borrowing. It is called as which borrowing? General borrowing. If it is general borrowing, another thing also can be possible. For example, company have taken 3 loans. Company have taken 3 loans, for example, HDFC, SBI, ICICI. HDFC loan 30 lakh, SBI loan 20 lakh, ICICI loan 30 lakh. It may be possible, all the loans are there at different interest rates, it may be possible. For example, HDFC at 11%, SBI at 10%, again ICICI at 11%, like this can happen. I am utilizing, for example, 10 lakh rupees for the construction of building from these borrowings. 3 loans are there, my asset value is 10 lakh rupees. If my asset value is 10 lakh rupees, I cannot find out from which amount I have taken from which amount I have utilized, which means whether I have utilized it from HDFC, whether I have utilized it from SBI, whether I have utilized it from ICICI. It is practically impossible. It is practically not possible to find out that much clearly. Therefore, what the standard is saying is find something which is called as weighted average. Weighted average interest rate we have to find out, and based on that weighted average interest rate, I will be calculating interest calculation. Okay, I will be calculating interest calculation based on weighted average interest rate calculation. Okay. So in case of general borrowings, what we have to do is see two things we have to calculate. Step number 1, step number 2. What is step number 1? We have to calculate weighted average borrowing rate. Sir, how I will get weighted average borrowing rate? Very simple. Total actual interest on all general borrowings I have to take, divided by weighted average of total amount of general borrowings on time basis into 100. Here they have given formula, but we will solve some questions and we will understand. Check this part. Expense incurred on qualifying asset on each rate after utilization of specific borrowings into capitalization rate into number of months divided by 12. Okay. If you read like this, you may not get proper clarity. So what we'll be doing is quickly open some questions. We will solve those questions. Then you will get clarity. Come to question number 6. Come to question number 6. Carefully understand. Alpha Limited on 1st April 20x1 borrowed how much? 30 lakh at the rate 9% to finance the construction of 2 qualifying assets. Think and tell me, is it a specific borrowing or a general borrowing? Only for the purpose of specific assets they are taking. Only for the purpose of QA they are taking. It may be possible that one borrowing may be used for 2 assets, but they are only using for specified assets, only using for qualified assets. Therefore, these are called as specific borrowings. Tell me the formula. Tell me the formula. Just now I have explained. Actual borrowing cost, something is there, irrespective of the date on which expense is incurred, minus. Once read the formula. Investment income or interest income from temporary investments I have to minus. Correct? Check this carefully. They are saying it is invested temporarily at how much? 7%. If it is specific borrowing, always remember. Here, 1st April, how much I have incurred? 5 lakh rupees. 1st October, how much I have incurred? Another 5 lakh rupees. For office buildings, 1st April 10, 1st October 20. Sorry, 10. What is the total amount I have incurred for factory building? 10 lakhs. What is the total I have incurred for office? 20 lakhs. What is the total amount of loan? 30 lakhs. 10 I have incurred for factory, 20 I have incurred for office. Sir, factory building, what have happened is, on the date of 1st April, how much expense I have incurred? 5 lakh I have incurred. Which means next amount when I will incur, tell me. Which means for how many months I don't want that 5 lakh rupees? For how many months I don't want that 5 lakh rupees? For 6 months. Correct? Can you, which means in that 6 months, what I will do is I will invest those funds temporarily. If I invest those funds temporarily, what I will get? Interest I will get. How much interest I will get? 7%. So calculate 5 lakh into 10% into, sorry, 5 lakh into 7% into 6 by 12. 5 lakh into 7% into 6 by 12. How much? 17,500. Similarly, office building. Right now, I will incur 10 lakhs. But next 10 lakhs when I will incur? After 6 months, therefore the calculation 10 lakh into 7% into 6 by 12. Correct? Simple. First, I have to take total interest irrespective of the date on which expense is incurred. If it is specific borrowing, I can directly multiply. What is the total borrowing? 10 lakh rupees is the total borrowing into 9%. 10 lakh into 9%. That's it. How much? 90,000. If it is office building, how much expense I have incurred totally? 20 lakh into 9% I have to calculate, which means how much? 1,80,000. Okay. Later, after going home, you may get some doubt. Sir, why can't you calculate interest from this 5 lakh rupees for full 12 months? And why can't we calculate 1st October? See, because we have incurred the expense on 1st October, correct? Which means, logically speaking, I have to calculate interest from 1st October till 31st March. But that is not in case of specific borrowings. If it is specific borrowings, so that's what I have written, irrespective of the date on which expense is incurred. Even though if you have incurred in the middle of the year, still you have to capitalize from the starting day onwards. Reason is very simple. Reason, specific borrowing, the purpose itself is I will use for that asset only. Maybe I have used it lately, but in that period I have not used it somewhere. Correct? I have to use for that asset only. Therefore, since it is a specific borrowing, I don't care about what date you are actually incurring the asset. You have to always capitalize that asset, irrespective of the date on which such expense is incurred. Okay, little bit important question, but not super 75 question. But just to understand the concept, I have taken this question. Okay, next question, what we will be solving is, check this question. Very, very important. Question number 4. Question number 4. On 1st April 20x1, entity A contracted for the construction of a building for 22 lakhs. 22 lakhs. The land under the building is regarded as a separate asset, and is not a part of the qualifying asset. The building was completed at the end of March 20x2, and during the period, the following payments were made to the contractor. They have started on 1st April 20x1, completed on which date? 31st March 20x2, which means it have taken how many months? 12 months. Therefore, it may be considered as a qualifying asset. Correct? It may be considered as a qualifying asset. Check this. These are the date of expenses. These are the date of expenses. Check the first point and tell me, is it specific borrowing or general borrowing? Read the first point and tell me, is it specific borrowing or general borrowing? Specific or general? If it is specific, I want the amount. How much amount I have to capitalize? One second. So check this. What they are saying is, interest of 65,000 rupees was incurred on these borrowings during the year. They have only given 65,000 is the total interest which is incurred. And they are saying interest income of 20,000 rupees was earned on these funds while they were held in anticipation of the payments. If it is a specific borrowing, what is the formula? Tell me. Actual borrowing cost incurred minus temporary investments. Very good. So tell me 65,000 minus 20,000. 45,000. Correct. Specific borrowing cost to be capitalized is how much? 45,000. Correct. One more thing. Think and tell me, sir, what is the amount of specific borrowing? Tell me. 7 lakh is the amount of specific borrowing. Correct. Sir, this is the list of expenses. 1st April 20x1, I have incurred 2 lakh rupees. 1st April 20x1, I have incurred 2 lakh rupees. Tell me, I have a specific borrowing of 7 lakh rupees. What I have to assume? Do I have to assume first I will incur from specific borrowing? Or do I have to assume first I have to incur from general borrowing? If any specific borrowing you have taken, obviously first you will incur expense from which borrowing? Specific borrowing, which means my specific borrowing is 7 lakh. Correct? This 2 lakh I have incurred, which means still how much balance is there? Specific borrowing balance? 5 lakh balance is there. 7 lakh is the total borrowing. 2 lakh I have incurred. Still how much balance is there? 5 lakh balance is there. Let us check in the second case. Second case, what have happened? I have incurred how much expense? 6 lakh expense. So still how much balance of specific borrowing is there? 5 lakh balance is there. Out of this 6 lakh, 5 lakh I will incur from specific. And whatever the balance, 1 lakh I have to incur from general borrowing. 1 lakh I have to incur from general borrowing. So general borrowings we have to incur is, see, what we have to calculate? We have to calculate something which is called as, weighted average borrowing cost we have to calculate. Correct. Sir, how I will get weighted average borrowing cost of capital? Simple. Total interest divided by total borrowings. Total interest divided by total borrowings. Calculate. See, this is general borrowings. This is general borrowing. So calculate 10 lakh into 12.5%. 10 lakh into 12.5% plus 15 lakh into 10%. Take the total. Total is how much? 2,75,000. This is total interest divided by total borrowings. Also, I have to take general borrowings only. I will take general borrowings. How much? 10 lakh plus 15 lakh, which means how much? 25. Can you tell me the total? 11. Exactly 11. Huh? 11% is the weighted average borrowing rate. Sir, how we have to do is understand. See, on this date, I have incurred 1 lakh rupees out of general borrowing because 5 I have incurred from specific borrowing, correct? But 1 I have incurred from general borrowing. Sir, what is this date? 30th June. If it is general borrowing, I have to incur interest expense from the date of expense because I have incurred on which date? 30th June. Therefore, from 30th June only, I will start capitalizing the expense. From the date of expense only, I will be capitalizing the expense. From the date of expense means 3 months is completed. Therefore, still balance period is how much? For 9 months, I have to do the capitalization, which means what is the calculation? 1 lakh into 11% into 9 by 12. 1 lakh into 11% into 9 by 12. Only difference between specific and general borrowing means specific borrowing, I have to take interest not from the date of expense, but from the date of borrowing. But general borrowing, I have to take date from, I have to take date of expense. From the date of expense, I have to take the borrowing calculation. Okay, important point, you have to understand the difference between those two. Second calculation, if you observe, see, my total borrowing is completed. Total specific borrowing is completed in the second case only, which means this entire 12 lakh rupees I have incurred from which borrowing? General borrowing. Sir, what is the interest rate? 11%. Sir, how many months are there? 3 months is there. Into 3 by 12. 12 lakh into 11% into 3 by 12. How much? 30,000. No? So 33,000 I have to capitalize. Tell me the last amount and tell me how much amount I have to capitalize. Last amount. If you calculate 2 lakh into 11%, again we have to write 0 by 12. Correct? On the date, last date we have incurred, therefore no capitalization is allowed. Again, I am saying difference between specific and general borrowing. Specific borrowing means calculate the capitalization from the date of loan. But if it is general borrowing, from the date of expense. Correct? Simple point. Very good. Now, after that, last we have to take the totals and then your answer will match. Last question from this standard, then we will stop our today's discussion. Come to question number 1. Come to question number 1. Just a change, little bit correction is there in your book. These figures have to appear. I think here some different figures are appearing. If these figures are only there, don't make any correction. Otherwise, please make the correction. I think these figures are there. ఏమున్నాయి చూడండి ఒకసారి ఫస్ట్ క్వశ్చన్లో ఇవి ఉన్నాయా లేదంటే ఇవే ఉన్నాయా అయితే ఉంచండి ఓకే ఇఫ్ దీస్ ఆర్ దేర్ డోంట్ మేక్ ఎనీ చేంజెస్ ఓకే సో చెక్ దిస్ K Limited began construction of new building at an estimated cost of 7 lakh rupees on 1st April 20x1. Construction is started on which date? 1st April 20x1. What they are saying to begin this construction, what they have taken a specific loan of how much? 2 lakhs from a financial institution at an interest rate of 9% per annum. The company's other outstanding loans are how much? Another 2 loans they have given. Tell me what are these borrowings? General borrowings. How much is the specific borrowing? Directly without seeing the question, I know how much specific borrowing cost have to be capitalized. How much? 2 lakh into 9%. 2 lakh into 9% means how much? 18,000. They have not, sorry, one more thing. One more point we have to understand. I will come to that point, don't worry. See, here expenses they have given. First expense is 1 lakh 50. Tell me whether I have incurred this 1 lakh 50 from specific or general? Specific, because specific is how much? 2 lakhs. I have incurred 1 lakh 50. Still balance is there how much? 50. That 50 I will utilize in second expense. Second expense, what is the total? But 50 will be incurred from how much from general? 1 lakh 50. This completely from general. This completely from general. Understood? Sir, when the asset is completed? When the asset is completed, 31st January 20x2, interest will be capitalized only till the asset becomes ready to use. Interest will be capitalized only till the asset becomes ready to use. Here, asset becomes ready to use till how many months? Which means only 10 months interest I have to capitalize. Till 31st January only I have to calculate the capitalization. Which means now the first calculation, 2 lakh into 9% into 10 by 12. 2 lakh into 9% into 10 by 12, how much? 15,000. This is specific borrowing cost to be capitalized. Similarly, I also have to find out what? General borrowing cost. Sir, if you want general borrowing cost, what is the first item you have to calculate? Weighted average borrowing rate. First, what I have to find out? Weighted average borrowing rate I have to find out. Sir, how I will get weighted average borrowing rate? Total interest divided by total borrowings. Correct? Total interest divided by total borrowings. One second. Here also, while taking total interest, how much you have got? 11.4375% you have got. Whatever the weighted average borrowing rate you have got, that we have to only use for which purposes? General borrowings. While calculating capitalization rate for general borrowings only, I have to use that amount. Otherwise, I have to consider specific borrowings rate only. Direct interest rate I have to take. But if it is general borrowing, I have to multiply with weighted average borrowing rate figure. Okay. So that's it. Simple chapter. Borrowing cost we have completed. If you have time, I will ask you to refer last question from this borrowing cost chapter. Last question, which is nothing but Nikki Limited. One question is there, Nikka Limited. This question we have to check. Easier question only. Or you can check the solution. You can easily understand the question. Okay. And one more thing I am just giving a hint. If in the question you are unable to find out whether the asset is a qualifying asset or not, because your institute sometimes will do, sometimes if the period is less than 12 months, they will write an assumption. Sometimes they will write it as a qualifying asset. Sometimes they will solve the total answer assuming it as not a qualifying asset. We don't know when they will follow what. Sir, how you are saying that? Please compare this question number 8 with question number 2. Compare this question number 8 with the question number 2. Then only you will understand whatever I am saying. Compare those two. The orientation of the question will be same, but the thing is their assumptions are different. On a safer side, what we have to do is, I will write an assumption. Definitely we have to write an assumption. Okay. Best advice, solve the question 2 times. First solve the question basing it on a qualifying asset, then solve one more time assuming not as a qualifying asset. If it is not a qualifying asset, nothing you have to do. No calculations. All the interest will be charged to P&L account directly. Correct? Some main answer. See, if you observe the second question only, they have given too much data, but answer what they have did. If you observe, not a qualifying asset, not a qualifying asset, not a qualifying asset, like this they have did. They don't know when they will do not a qualifying, when they will classify that as qualifying asset, they only don't know. Okay, so you don't take any risk. Compare this question number 2 and last question, Nikka Limited question. Okay, then you will understand whatever I am trying to say. Please practice whatever the questions which we have studied today, because tomorrow completely new standards I will explain. You won't have time to revise whatever we have discussed today. So that is the reason why I am stopping today. Ind AS 16 and 36, very important questions we have discussed. In case if you have any doubts, please refer the previous marathon what I have uploaded. Very in depth I have discussed. All the super 75 questions, whatever I have discussed here also, everything is covered in depth. Okay, these standards are covered. But tomorrow I will discuss some new standards. Those standards are not covered. Those standards you have to listen here only nicely. 102 is not covered. 116 is not covered that much nicely. I have covered, but now more questions I will cover. Okay, so that's it. We'll stop our today's class till here. So tomorrow we'll start. But please revise whatever we have covered. Okay. So group the text is started. Okay, good morning. Online students, please confirm is the audio fine. We'll start with new standard, which is Ind AS 102. Okay, so Ind AS 102, the name of the standard is share-based payments. Very important standard. But if you look at past exams, they are not asking any questions from this chapter, which is share-based payments. So since they are asking new questions based on new standards, so this time there are high chances that they may ask any question in this Ind AS 102, which is share-based payments. So let us understand the concept of this share-based payments. So see, one entity is there. Let us say A Limited. A Limited is taking services from some person, for example, Mr. B. Let us assume Mr. B have provided not services, Mr. B have provided some goods to entity A Limited. Now this entity A Limited have to pay some consideration, correct? This consideration will not be paid directly in cash. So in this share-based payments, what they will be doing is consideration will be dependent either on shares. For example, the consideration is decided like this. A Limited is decided to issue 1000 shares of B, 1000 shares of A Limited to Mr. B. It will not pay further cash. 1000 shares will be issued to Mr. B of A Limited. If this is the situation, this is called as share-based payment. This is one kind of transaction. Another kind of transaction will be, I will pay cash, but how much cash I will be paid, that will be dependent upon share price. That is also allowed, which means what? For example, I will be paid cash, which is equivalent to 1000 shares of A Limited. Anything can be possible. In first option, the company will directly issue shares to Mr. B. In second option, the company is not issuing shares, but the company is issuing cash equivalent to number of shares, which means what? This is also a kind of share-based payment. If you observe carefully, the first one is called as equity settled share-based payment, because the entity is issuing equity shares. Second one, if you observe, it is called as cash settled share-based payment. Share-based payments will be shortly called as SBP. Okay. If the company is issuing shares, that is called as which SBP? Equity settled SBP. If the company is paying cash, that is called as what? Cash settled SBP. Okay, understand. So now what will happen is, instead of goods, it can be services also. Instead of goods, it can be services also. Mr. B have provided some services to the entity. Now the entity is issuing shares. It can be either equity settled or it can be either cash settled also. This can also be possible. And last possibility, and which is, this is the most important possibility, which is nothing but Mr. B is an employee. Mr. B is an employee of A Limited. Now, what this A Limited is asking is, Mr. B, you have to stay in the company, for example, 3 years. If you continue in the company for 3 years, what this A Limited agree is, I will issue some number of shares to Mr. B. This is the kind of arrangement. This is popularly called as what? If you remember, this is called as ESOPs. What is the full form of ESOPs? Employee stock options. Correct. Here what will be having? The condition will be, this type of condition to remain in employment is called as vesting conditions. Vesting conditions means generally what they will say, if you want the shares, you have to satisfy some conditions. Sometimes the company will say you have to just remain in the employment, for example, 3 years. In this case, if you remain in employment for 3 years, after 3 years, you are eligible to receive shares of the company. This is the vesting condition is what in this case, you have to remain in the service. This is the vesting condition. One more type of vesting condition can be, one second. In the first example, if you observe, entity A Limited have decided to issue 1000 shares to Mr. B. In this case, they are issuing shares. Therefore, it is called as equity settled SPP. And in another case, the company is paying cash whose price is dependent on 1000 shares. Therefore, it is called as cash settled SPP. So, Karthik, please confirm, is your doubt clarified? So now, sometimes the company asks the employees only to stay in the organization for 3 years. For example, if that is the case, they will give you shares. That kind of condition is called as vesting condition, and they are asking to remain in service only. No other condition is attached. Sometimes the company will say, employees, you have to work in the company. For example, 3 years you have to work. At the same time, you have to work very efficiently. You have to improve sales. If sales of the company during 3 years, if average sales are more than, for example, 15%, then only they will give shares. Like this also they can attach the conditions. This is also a vesting condition only. But this is also vesting condition based on sales. Sometimes the company will keep the condition based on sales. Sometimes the company will keep the condition based on earnings. Sometimes the company keeps the condition on market price of the company also. If the employees perform well, profits will be increased. If profits of the company increased, obviously share price of the company also will be increased. Correct? Vesting condition can be anything. Sometimes they will ask you to stay in the entity. That is also vesting condition. Sometimes they will keep earnings based condition. Sometimes they will keep sales based condition, and sometimes they will keep market based conditions also. Whatever it is, it can be vesting condition. Okay, fine. Let us take one example so that you will exactly understand whatever I am trying to say. See, totally the vesting period is 3 years, which means company is asking employees to stay in the company for 3 years. If you are staying in the company for the 3 years, you will receive shares. 1000 employees are there. For each employee, the company is granting 500 share options. For each employee, the company is granting 500 share options into that option value is 50 rupees. For example, option value is 50 rupees, which means, see, if you observe, I will explain that point little later. Exercise price is 150. Exercise price means employees have to pay after completion of these 3 years. They have to pay this 150 rupees to the company, and the company will give them shares. Okay. If you understand carefully, here they will give some formula. I will explain the logic of this formula, but first read this formula. What they are saying, number of employees expected to fulfill the conditions. What is the condition? How many years we have to stay in the entity? 3 years we have to stay in the entity. See, carefully think and tell me, if any employee left in the first year only, will he receive shares at the end of year 3? No. If any employee left at the end of year 2, will he receive any shares? No. He have to serve in the employment for all the 3 years, then only he is eligible to receive the shares. Correct. Very good. Which means what? Here first I have to calculate number of employees expected to fulfill the conditions, which means I will calculate whoever employees will continue till the end of year 3. I will find out those into how many options are there per employee in my example. 500 share options are there per employee. Correct. So what I will do, 1000 into 500 into fair value of option on the grant date I have to calculate. Sir, what is this fair value of option on the grant date? For CFR purpose, always they will give in the exam. Fair value of here what I have written option. Don't confuse. You should not take share price fair value. That also they will give in the question. What we have to take? We have to take fair value of option only we have to take. Okay. Option means ESOP value I have to take. ESOP's fair value only I have to take. Next what I have to do? Into, first of all calculate this amount. 1000 into 500 into 50. How much? 2 crore 50 lakhs. Understand what is happened. 2 crore 50 lakh is the total value of the expense which have to be recognized. If you observe, what is the vesting period? Vesting period is 3 years. What the standard is saying is, don't record this total expense in a single year. If I record the total expense in a single year, my profits will be very fluctuating, and also it is not correct because this 2 crore 50 lakh is not for single year. Correct? This 2 crore 50 lakh is for the total vesting period, because here whatever I have taken, this is 1000 employees, I will issue shares after end of 3 years. And one more thing is, those 1000 employees have to stay in the entity, then only I will give them shares. Correct? What will happen? Initially I have estimated this much. Initially, I have estimated this much, but you obviously know at the end of year 1, some employees will leave the organization. Correct? Therefore, I have to make some changes. This is the grant date. For example, the date on which the company have made an announcement to issue ESOPs. That is called as grant date. Okay, fine. So what I will do, I will wait till year 1 end. Because my accounting, I will not wait till the end of year 3. I will do accounting at the end of year 1 only. So here after year 1 is completed, I will get actual figures. Year 1 end, 50 employees have left. Carefully observe. If year 1 end 50 employees have left and the company have made estimation that in the next 2 years, 100 employees may leave. In the next 2 years, 100 employees may leave. If you observe carefully, for these 50 employees, will I give shares? Because they have already left. For these 100 employees, will I give shares? No, because I am expecting further 100 employees also will leave. Which means out of 1000, for 50 I won't give shares. For 100 also I won't give shares. Which means what is the balance number of employees? For these only I will give shares. Correct? 850 into 500 means number of options per employee into fair value of option. On which date I have to take? Grant date only I have to take. Sir, what is the grant date fair value? 50. So if you do the calculations, 850 into 500 into 50, just do this part. 2 crore 12 lakh 50,000. Understand? How many years are completed? 1 vesting period is only complete. But this expense is for the total 3 years. Since this expense is for the total 3 years, I will divide by 3, multiply by 1. 1 year is completed, correct? So into 1 by 3. So how much? Which means this much expense I will recognize in the first year. This much expense I will recognize in the first year. Entries also we will understand, don't worry. But first understand the formula. This much expense I will recognize in the first year. Second year, what have happened is, during the second year also some employees will go. This is estimation. This is estimation which I have made at the end of year 1. Year 2 also what I will do? First of all, total number of employees is how much? 1000. How many employees are actually left in the first year? 50. How many employees are actually left in the second year? 75. The company is still making estimates for the 20 employees may leave in the third year, which means I will not give shares for 50. I will not give shares for 75 also. At the same time, for these 20 also, I will not give the shares. Correct? So do the calculation. 1000 minus 50 minus 75 minus 20. How much? Now I will calculate 855 employees. This will not change. Into 500 into 50. Just do this. 2 crore 13 lakhs. How many years are completed? But this expense is for how many years? 3 years. So into 2 by 3. Into 2 by 3. 1 crore 42 lakh 50,000. Think carefully and tell me, sir, is this second year expense or cumulative expense for 1 and 2 years? Because here I have taken into 2. But this should be the total of 2 years expense. Already I have recognized some expense in the first year. Already I have recognized some expense in the first year. So just find out the difference between these two. This much I will record in the second year. This much I will record in the second year. Okay. Third year, what will happen? I already know actual employees left in the year 1. I already know actual employees left in the year 2 also. After third year gets completed, I also know what is the actual number of employees left in year 3 also. Then I will calculate the number of employees. For example, here I have written 70 employees have left. See, 50 in the first year, 75 in the second year, 70 in the third year. 1000 minus all these figures, which means for 805 employees into 500 into 50. Just do this. 805 into 500 into 50. 2 crore 1 lakh 25,000. Is it for 1 year or 2 years or 3 years? But this is, I mean, this is the total of cumulative 3 years, correct? But already 2 years expense I have recorded earlier. If you add these two, this much expense is already recognized, correct? What is the balancing figure that only I have to recognize in this third year? What is the balancing figure that only I have to recognize in the third year? Okay, which means whatever the, let us understand the journal entries also. See, here for employees, I am issuing shares. For employees, I am issuing shares, which means whatever the payments which you are making to employee, that will be booked in the name of employee benefit expense in your P&L account. So journal entry, what we have to pass, understand, see, this 70,83,333 is the amount of expense which I have to book for the first year. Booking expense means what? I have to debit employee benefit expense. I have to debit what? Employee benefit expense account debit. First year, how much we have calculated? 70,83,333 I have calculated. So this much expense I will book in the first year. Correct. Sir, credit what I have to write, understand. See, here the agreement is at the end of 3 years, which means after completion of vesting period, the company have agreed for each employee how many shares will be given? 500 shares will be given, which means it is very clear. After 3 years, company will issue shares. Therefore, what the standard is asking to do is, along with this expense, you have to book something which is called as a reserve. Along with this expense, because you have to keep some amount pending in the name of SBP reserve. This SBP reserve will be appearing in your balance sheet in other equity section. In balance sheet, if you observe, share capital will be there and other equity will be there. Equity share capital will be there and other equity will be there. In this other equity section, I will keep this SBP reserve balance. This is the entry which I have to pass at the end of year 1. Second year, if you observe, this much you have said, 71,66,667. Employee benefit expense account debit to SBP reserve, this much I will pass in the second year. Third year, if you observe, same entry I will pass one more year. Employee benefit expense account debit to SBP reserve account, 58,75,000. Cumulative balance of SBP reserve, if you observe, take the totals of all these three entry wise, 70,83,333 plus 71,66,667 plus 58,75,000. One second. Hmm. 2 crore 1,25,000 you have. Correct. Carefully understand. I think starting I have explained exercise price of 150 rupees. What is the meaning of this exercise price 150? 150 should be paid by employees. Correct. Very good. Which means, see, how many employees are still pending at the end of year 3 also? 805 employees are pending. For 805 employees, how many shares I have to give? 500 shares I have to give. 805 into 500 into, they will pay 150 per share. 805 into 500 into, they will pay 150 per share. 6 crore 3,75,000 I have to receive from those shareholders. Let us assume face value of per share is 100 rupees only. This is at the time of issue of shares. After end of year 3, I will pass this entry. Correct. First, I will receive 150 rupees from the shareholder. To equity share capital, see, for 805 employees into 500 options into 10 rupees is the face value. Just calculate this amount. 805 into 500 into 10. Very good. This much amount should be transferred to equity share capital. Always I will transfer face value only to equity share capital account. See, already I have booked some reserve. Correct. Already I have booked some reserve. Now I don't need this reserve. because I am actually issuing shares. Correct. So what I have to do, whatever the reserve which I have created earlier, that reserve have to be cancelled. That reserve have to be cancelled because I am issuing equity shares. Correct. So what I will do, reserve is having credit balance. I have to cancel that reserve. Therefore, what I have to do, I will debit that SBP reserve account to debit. Correct. Now, tell me the closing figure. Debit side, I am having this much total. Credit side, I am having 40,25,000. What is the balancing figure? 7 crore 64 lakh 75,000. Okay, this will become, this is a difference and it will be transferred to securities premium. Correct. See, this is the face value, something which is there, which is called as market price, which is trading in the entity. The reason is, if you understand carefully, see, exercise price is 150. Market price, for example, assume the market price is 200. Market price of that share after end of 3 years, assume it is 200, exercise price is 150. Think from the point of view of employee. Think from the point of view of employee. Will he exercise these shares or he will not exercise these shares? Obviously exercise. Why? Exercise price is 150, which means he have to pay to the company how much? 150. How much worth of share he will get? 200 worth of share, which means it is beneficial for the employee. Correct. If he don't want also, he can pay 150 and he can sell this share in the outside market. Then he will get how much? 50 rupees per profit. 50 rupees per share he will get. Correct. For example, exercise price is 150, market price is 300. Will he exercise the share or he will not exercise the share? Tell me in this case, 100 is the market price. Why? Because market price is less than exercise price. It is not beneficial, it is loss for the employee. If you observe carefully, if you have little knowledge of your SFM, this is very similar to one option. Which option? Very good. Call option. Employee is having right to purchase, but not an obligation. Connect with SFM. Employee is having right to purchase the share. If the market price is above the exercise price, he can purchase. If the market price is below the exercise price, will he purchase? He cannot purchase. Then option will become what? Lapse. Correct? Same concept here also. Employees are given the option. Which option? Call option. What is that call option? If you want, that condition will be satisfied only after serving the 3 conditions. Without serving those 3 years, you cannot ask, I am having the call option. Correct? After completion of 3 years only, you are eligible for that option. You are eligible for that option. Now what we have to do? You have to decide whether we have to exercise those shares or not. Okay, in this chapter, they will ask only the similar questions as to you have to recognize employee benefit expense in each year. Okay, so those questions only they are going to ask. So what we'll be doing is quickly come to concept book. Quickly come to concept book. Oh, page number 53, if you observe. 53 page. Here some theory part they have given. What is the meaning of measurement date? What is the meaning of grant date? Vesting conditions. Those you can check. After going home, you can check. This vesting period means they will prescribe some conditions. Only after satisfaction of conditions only you are eligible to receive the shares. If in the middle only you have left the company, then you will not receive any shares. I have explained vesting conditions can be either service based. Service based means you have to stay in the company, or it can be performance based also. Performance based means here I think I will explain these parts here. Here they are there. I will explain this, don't worry. Later we will cover. But now, please check this formula. 2 types of transactions are there. First one is equity settled. Second one is cash settled. Another type is also there. What is the third type? Settlement by choice. They are also called as a hybrid SPP. Hybrid SPP means it is having a mixture. Means cash settled features are also there. Equity settled features are also there. Sir, how we have to do? Questions are there. We will cover that. Don't worry. But here, just read this concept number 5. Equity settled SBP to employees. These are called as what? ESOPs. What is the first point they are saying? ESOP expenses is booked over the vesting period on SLM basis. In brackets, what they are saying, exercise period is not relevant. So first of all, what is the meaning of exercise period? Let us understand. See, here company is said, employees, if you want the shares, you have to stay in the company for the 3 years. This 3 years is called as vesting period, which means you have to stay in the employment for the 3 years. Only after then you are eligible to receive the shares. This is the meaning of vesting period. Exercise period means once this vesting period is completed, whoever employees which are eligible, who are employees which are staying in the company, they are eligible for shares. Correct? For example, 800 employees are there in the company. These 800 employees will not reach after completion of 3 years itself. For example, 3 years are completed on 31st March 25. On 1st April 25 only, all the employees will not reach the company and they will demand shares. Like this, they will not do. What the company will say, I will give you 1 more year time. It's okay, shares are yours only. In this entire 1 year, during this total 1 year, whenever you want, you can come to the company and company will give you shares. This 1 year period is called as exercise price. All employees will not exercise on the immediate completion of the exercise period because some employees are still expecting its price will still grow in the future. Then they will purchase. Like this, some number of factors are there, but whatever it is, a company will give some grace period kind of thing, which is eligible. Once this vesting period is completed, this exercise period will start. During this exercise period, at any time, employees can visit the company and the company will pay them shares. Okay, this is the point. So here, if you observe, here they have given second part also, calculation of expenses to be recognized over each year. Just read the formula. Number of employees expected to fulfill the conditions at each year end. See, I have to check these expenses at each year end. Every year I have to make these calculations. Multiply with what? Number of options per employee into fair value of what I have written. Fair value of what? Option. At which date? Granted. This only you have to remember. If it is equity settled SBP, I will always measure fair value of what? Option at a grant date. Very good. Now, divided by total vesting period into vesting period completed till date. Here they have given like this, but I will explain how we will write in the exam. Okay, fine. We will directly start with one question. So open workbook and let us start with very good question. Come to question number 2. Come to question number 2. Okay, see. Accounting will be started. Don't write, just listen. Accounting will be started once the vesting period is completed, which means at least year 1 have to be completed. Then only I will pass the first year entry. I will not do any accounting on the grant date, which is year 0. The date on which the company is granting the shares, I will not do any accounting, but I will take the value. Which value I will take? Fair value of option I will take. On which date? Grant date I will take. But I will do accounting only after completion of 1 year. 1 year, second year, third year, whatever it is. Okay. Let us read the question. See. You can strike the question till here. From this Z limited, only the question is start. The question will start from this Z limited. Okay. So let us understand this question. Z Limited grants 100 share options to each of its 400 employees, conditional on their continuing service for how much? 3 years. If you observe, how many number of employees are there? How many shares? Options? 100 share options into what is the condition? How many years they have to stay? 3 years they have to stay. Which means this is a equity settled SBP. Because company is issuing what? Shares. Share options they are saying, which means it is equity settled SBP. Also, if it is equity settled SBP, which date fair value I have to take? Grant date. So checking the total question, have they given fair value of option on the grant date or not? Next line only they have given. How much it is? 30. I will not do accounting on the grant date. Grant date I will not do anything. But grant date, which value I want? Option fair value I want. Okay, very good. What have happened? During the year 1, 18 employees have left. First of all, how many employees total? 400 employees left. During the year 1, how many are left? 18 employees have left. Now the entity revises its estimate of total employee departures. Understand the word carefully, what they are saying. Entity revises its estimate of total employee departures over the 3-year period from how much? 20% to 16%. What they are saying is, initially on the grant date, they have estimated that totally 20% of employees may leave the organization. What is 20% of 400? 80. Entity on the grant date have estimated 80 employees will leave the organization. But after completion of year 1, entity have changed its estimate. See, it may happen. Starting, they have estimated that 80 employees will leave. But after completion of year 1, how many employees are leaving? I mean, what is the estimate? 16%, which means how much? 400 into 16%. If I take how much? Very good. These 64 employees, the company is expecting to be left during the total 3 years. One more word we have to highlight. What is this? Total employee departures. So the meaning of total employee departures is this 16% includes employees left in the first year, employees expected to leave in the second year, employees expected to leave in the third year also. Normally, many students will be confused. So what they will do is, see, first year how many employees have left? 18 employees have left. Most of the students, what they will do is, they will take 400 minus 18. 400 minus 18 they will take. You are saying 16% are going to leave. Can you tell me 400 into 16%? Minus 64 they will do. Minus 64 they will do, which means what? They will include first year employees who have actually left also. And if this 64 includes what? Total employee departures, which means that total already includes first year left employees also. Therefore, don't again consider first year employees once again. Okay, which means I will take 400 minus 64. This 64 includes these 18 employees also. This 64 also includes what? 18 employees who have left in the first year also. Okay, this is a little bit important, little bit trickier also. So this question is very, very important. Okay, fine. Now, during the year 2, they are saying further 20 employees have left. The entity revises its estimate. Again, they are saying total employee departures. To confirm, they have again saying over the 3-year period. This is not 1 year, this is not 2 years. This is how much? 3-year period is how much? 13%. 13% means 400 into 13% is how much? This 52 is expected number of employees to be leave during the total 3 years period, which means don't again exclude first year actually left employees, and don't again exclude second year actually left employees also, because this 13% includes total 3 years employees. Okay, I will show the solution, then you will get the clarity, don't worry. During the third year, what have happened? Further 14 employees have left. If third year is also completed, there is no need of expectations. If third year is also completed, there is no need of expectations. What is the total number of employees? Tell me. 400. Sir, how many are actually left at the end of year 1? Actually left at the end of year 2? 20. Actually left at the end of year 3? At the end of year 3, no need of estimates. Tell me what is the actual number of employees? 348 employees will receive the shares. Correct? 348 employees will receive the shares. Let me show you the solution, don't worry. See, understand this. I have written the analysis here only. So carefully understand. Year 0. Year 0 means grant date. Year 0, I will not do any accounting. but we need to analyze. Why we need to analyze? Let us understand. Number of options per employee is how much? 100. Number of employees are how much? 400. Fair value of option on the grant date is how much? 30. They are saying, sir, on the grant date, number of employees expected to leave is 80. We will not do accounting on the grant date, correct? But they have been given in the question. Year 1 end, the company is expected. Number of employees expected to leave is how much? 64. See, understand one more thing. Here, year 0, the company is expecting 80 employees. Year 1, the company is expecting 64 employees. Which is more realistic? Which is more realistic if you observe, estimate which they have made after year 1 is only more realistic because 1 year is completed, which means the company is having more accurate information. Therefore, we will consider this year 1 change only. Which means, see, 18 employees have left. What I am trying to say is this 400 into 16%, 64 already includes those employees who have left in the year 1 also. Which means 400 minus 64, tell me how much? 400 minus 64, how much? 336, correct? So 336 employees into 100 options into 30. How much? 10 lakh 8,000. 336 into 100 into 30. 10 lakh 8,000. Sir, have you got this? Tell me the formula. Number of employees expected to fulfill the vesting condition multiplied by options per employee, very good, multiplied by fair value of option on a grant date, very good, 30, which means this is how much? 10 lakh 8,000. This I have to multiply with expired vesting period. Sir, how much vesting period is expired? 1 year, divided by total vesting period, 3, into 1 by 3, how much? 3,36,000 is the expense which I have to record in the year 1. Year 1 I have to recognize this much, correct? Sir, year 2 also I will do the same calculations. Year 2 end, they have given, company have changed the estimate one more time. Now the company is estimating 13% are going to leave. Now the company is estimating how many employees will leave? 13% are going to leave. Sir, what is the total number of employees? 400 into 13% means how much? 52. Once again, don't deduct this 18. Once again, don't deduct this 20 because this 13% includes total employee departures over the 3-year period. This is the little point which you have to observe here. So 52, 400 minus 52, how many employees? Do the calculation into 100 into 30. Into 100 into 30. Carefully tell me, sir, for how many years this expense is? This one. 10 lakh 44 is for 3 years. But I want only 2 years expense. So into 2 by 3. One more question. Sir, is this 6,96,000 only for 1 year or 2 years? 2 years. How much is recorded in the first year? 36,000. Find out the difference between these two. This will be recorded in the second year. This will be recorded in the second year. Third year, there is no need of expectations. Third year, no need of expectations. Therefore, 400 minus 18 who have actually left, minus 20 who have actually left in the second, minus 14 who have actually left in the year 3. How many employees? Into 100, into 30. Into 100, into 30. How much? 10 lakh 44,000. This is for how many years? How many years of vesting period is completed? This is the total cumulative. This is the total cumulative. Sir, how much expense you have already recognized in the previous years? This minus this. This will be recorded in the third year. Balancing will be recorded in the third year. Tell me the journal entry which I have to pass in the year 1. Employee benefit expense account debit to SBP reserve. SBP reserve. You can write shortcut also, no problem. SBP reserve account. Year 1. How much? Same entry year 2. How much? Same entry year 3. How much? Exam, how we have to do? I have written here. Exam we have to present like this. I will write the formula once. Every time I will not write the formula. Only once I will write. See, just read this. into expired vesting period divided by total vesting period. Here there is no place to write like this. So what I have written, divided by total vesting period, I have written here into vesting period completed till date. Okay, but this is the actual formula which I have to write. Both are same only, but their place is not there. I'm sorry. This one. This also is important. Minus expense already recognized in earlier years. Cumulative expense I will get in this formula. Minus whatever expense is already recognized in previous years that I have to deduct. Okay, simple. I will directly write here this calculation. That's it. This is for understanding only. This much we will not write in exam. Okay, directly I will write the formula and I will directly write the calculations. That's it. Entry also I have passed. Third year also entry. Third year also entry. Let us assume after the end of year 3, after the end of year 3, I think the question they have given exercise price also. How much? See this. 50 is the exercise price, which means employees will make how much payment? 50 rupees. So first of all, how many employees are there? Into how many options? 348 into 100 into 50. 348 into 100 into 50. This much I will receive. Company will receive. I have to issue shares, which means face value I will transfer to equity share capital account. So 348 into 100 into 10. 348 into 100 into 10. 3,48,000. This will be transferred to share capital. Sir, but I am having some reserve balance. Since I am issuing shares, I have to cancel that reserve balance. So reserve will be debited. Balancing figure will be transferred to securities premium account. Okay, simple. Balancing figure will be transferred to securities premium account. I have ignored this market price. Irrelevant, because company will never do any accounting for its own market price. Because see, employee will decide based on this market price whether to purchase that option or not. Here the market price is 84, exercise price is 50. Will the employee purchase? Yes, the employee will purchase. That decision will be dependent on the employee whether to purchase or not. But company will not do any accounting on its own equity share. Okay, important point. Very good. So one more question we will solve. One more question we will solve, which is nothing but question number 5. Question number 5. Tell me the formula for that expense, how much we have to recognize in each year. What is the formula? Number of employees expected to fulfill the vesting period into number of options per employee into fair value of option on the grant date. Very good. Into expired vesting period divided by total vesting period minus expense recognized in earlier years. Very good. One more thing I just want to give the clarity. See, share is different. Share option is different. Share is different. Share option is different. In this chapter, we are finding the value for the share option. You already know this share is also traded in exchange. This option is also traded in exchange. Derivatives. Share also I can purchase. Share option also I can purchase. Correct or not? For the accounting, which value I want? Share option value I want. Fair value of the option I want. In your SFM, there is already binomial model. Why? I mean, what is the purpose of this binomial model? To find out the option price. Correct? One more model is also there. Black-Scholes model is also there. Correct? risk neutral probability something, another method is also there. All these methods are used to find the value of the option. Correct? In CFR, we don't need that much knowledge. They will always give in the question. But sometimes they will not give this option fair value. Sometimes they will not give this option fair value. Sir, then what we have to do, let us understand. First preference, obviously, we have to give to share option only. If share option is not given, fair value of share option is not given, I have to calculate something which is called as intrinsic value of such option. What I have to calculate? Intrinsic value of such option I have to calculate. Don't worry, I will ask you to write somewhere. Here we can write. Okay, but first listen. Intrinsic value of such option we have to find out. Sir, what is the meaning of intrinsic value of option? Let us understand. See, share price, assume it is 100. Share price is 100 rupees. Share price is 100 rupees and exercise price is 30 rupees. For example, share price is how much? 100. Exercise price is how much? 30. Understand. I am an employee. I am having a right to purchase company's share whose price is 100 at 30. Can you tell me what is the value of option? Can you tell me what is the value of option? 70 is the value of the option. Very good. This 70 is only nothing but intrinsic value of that option. This 70 only is nothing but should be value of that option. See, share price is 100, exercise price is 30. What should be the value of option? 70 should be the value of option. That 70 is only called as intrinsic value. Similarly, intrinsic value of the options are how I will get is fair value of share I have to take minus what I have to write, exercise price I have to write. This is my second preference. If fair value of option on which date we have to check? Grant date. If it is not given, which value I have to take? Intrinsic value of not share. Of what? Option. Sir, how I will get? Tell me the formula. Fair value of the share minus exercise price. I will get the intrinsic value of the option. Sometimes your institute will not give this exercise price also. Sometimes your institute will not give this exercise price also. If they have not given exercise price, what I can take? I can take 0. If exercise price is 0, what is my intrinsic value of option? Understand the hierarchy. Fair value of share minus exercise price. Exercise price is 0. Then intrinsic value of option will be fair value of share. Correct? Understand the preference. First preference I have to give to what? First preference. Fair value of option on the grant date. If that is not there, I have to find out intrinsic value of option. Sir, how I will get intrinsic value of option? Fair value of share minus exercise price. Exercise price also they will not give. Then I have to take fair value of share. This is the order of hierarchy which you have to follow. Okay, so please write this. If FV of option is not given, assume intrinsic value of option in the above formula. Assume intrinsic value of option in the above formula. Intrinsic value equals to share price minus exercise price. Intrinsic value equals to, this is also intrinsic value of option. Share price minus exercise price. Share price minus exercise price. Okay. Like this, it will not be there practically. If exercise price is greater than the share price, you will not exercise that option. Option will be lapsed. Then the value of option will be 0. Correct? I think in SFM also these examples you can take. If exercise price is more, no one will purchase the share. Option will become lapsed. It will be 0. Correct? Now, question number 5. Check this. Very, very carefully, we have to read each and every word in this question. Similar questions, copy paste only are going to ask in your exam, so be careful. Question starts from here. Question starts from second line. Starting, they have given what this question is about. This is taken from the study mat directly, so they have given like this. I have copied that part also. Question starts from at the beginning of year 1. Okay, so carefully check the question. At the beginning of year 1, X Limited grants how many shares? 200 shares. These are actually options. Okay, but institute have used the word. Okay, totally fine. 200 share options to how many employees? 400 employees. What is the condition? Conditions upon the employees remaining in employment within the company during the vesting period. Here they have not given fixed vesting period, which means please write beside the question only, this is variable vesting period. Please write beside the question only, this is variable vesting period. They have given some conditions. Based on those conditions, vesting period will change. Variable vesting period. What they are saying, let us understand. They are saying shares will vest at the end of year 1, which means at the end of year 1 only I will give you the shares. But what is the condition? Entity's earnings increase by more than 15%. These are the conditions. If you perform so much well, if the entity's earnings are 20%, it is more than 15, so I will give you shares at the end of year 1 only. Vesting period is not fixed here. If the entity's earnings are more than 15, I will give shares at the end of year 1 only. For example, employees have not performed that much well, it is not more than 15%. Will the shares vest at the end of year 1 only? No. Read the question further. They are saying at the end of year 2, they will vest. But what is the condition? If the entity's earnings increase by more than an average of 12% over the 2-year period, if at the end of first year the shares are not vested, they are saying, okay, the shares will vest at the end of year 2. But what is the condition? Average earnings of the 2 years should be more than 12%. If the average earnings of the 2 years is more than 12%, shares will vest at the end of year 2. Assume the average is not more than 12%. Assume the average is not more than 12%. Then what they are saying? If the entity earnings increase by more than 10% average, they are saying shares will be vested at the end of year 3. See, first year if you want, your earnings should be more than 15%. Second year if you want, your average earnings should be more than 12%. Third year if you want, your average earnings should be more than 10%. That is the condition. Simple. Vesting period is not fixed in the question. First of all, tell me how many employees are there? 400. How many share options? 200. Sir, have they given fair value of option? Next, please read the next line. Shares have a fair value of what? 40 rupees per share at the start of year 1. Start of year 1 means grant date. Year 0 means grant date. Okay. Have they given fair value of option or have they given fair value of share? In the question, they have not given fair value of option. Exercise price also they have not given. Intrinsic value of the share also I cannot. Intrinsic value of the option also I cannot calculate. Fair value of option they have not given. Therefore, what is the preference which I have left? Fair value of share I have to take. Fair value of nothing is there in the question. Intrinsic value of option I cannot find out because exercise price they have not given. Fair value of option is also not there. Therefore, only preference fair value of share I have to take. How much is the fair value of the share? 40 rupees. Check this. Now, actual figures they have given. Actual figures they have given, so we have to be a little bit careful. See, by the end of year 1, entities' earnings have increased by how much? 13%. Now tell me, will the shares vest at the end of year 1 only? At the end of year 1, the shares will not vest. Correct? They are saying 32 employees have left. How many employees have left? 32 employees have left. These are actual employees. Again, they are saying the entity expects how much? This is further 30. This is further 30 to leave during the year 2. Understand carefully. Sir, year 1 is completed. year 1 is completed. My vesting period is not 1 year. That is very clear. Now I have to carefully analyze my vesting period. My vesting period can be 2 years also. It can be 3 years also, depending on the present situation. Current year earnings is how much? 13%. Actual earnings I want. How much? 13%. What the average person will estimate is, in this question, how much earnings I will estimate at the end of year 2, they have not given. They have only given at the end of year 1, actual figures they have given. What are the actual figures? Actual figures are 13%. Average person will estimate year 1 earnings will even continue in the year 2. Year 1 earnings, same earnings will even continue in the year 2. If the same continues, can you tell me what is the average of 2 years? 13%. 13%. If average of 2 years is more than 12, at which period my shares will vest? Second year, correct? Therefore, at the end of year 1, I will take vesting period will be 2 years. At the end of year 1, I will take my vesting period will be how much? 2 years. Let us read the question further. Check this. By the end of year 2, what they are saying, entities earnings have increased by only 11%. Understand? Entities earning have actually increased by only how much? 11%. Calculate the actual average. Is it more than 12 or exactly 12? Exactly 12. Exactly 12. Therefore, shares will not vest at the end of year 2 also. Shares will not vest at the end of year 2 also. See, don't confuse. This information I know after the end of year 2. This is year 2 actual figures. I will know only after the end of year 2. Correct? But at the end of year 1, I don't know these figures. Therefore, I cannot estimate. Therefore, what I have did, first year earnings will continue in the second year also. That's why I have taken average at the end of year 1. But year 2, I will get actual figures. Year 2, I will get actual figures. One more thing also I can say. Here, if you observe, year 1 end, see what they have given here. What they have given here. Entity expects further 30 employees to leave during the year 2. Have they given how many employees are expected to leave in the third year? See, only year 2 they have given. Which means the company is also expecting vesting period will be only 2 years. The company is also expecting vesting period will be only 2 years. Okay, read the last point. The entity expects a further 25 employees to leave during the year 3 also. This is estimation. See, year 2, what have happened is entities earnings have increased by only 11%. Therefore, we have concluded year 2 is also not the vesting period. Therefore, my total vesting period will be how much? 3 years at the end of year 2. Correct? See, what is the total number of employees? Tell me. 400 is the number of employees. Sir, how many employees are actually left at the end of year 1? Actually left at the end of year 1 is how much? 32. Sir, how many are actually left at the year 2 also? Actually 27. And the company is expecting 25 will further leave the organization. Therefore, I have to write minus 25. Minus 25 into how many options? 100. 100 and 200. 200 into what is the fair value of share? 40. Into 2 by 3 I have to do. Into 2 by 3 I have to do because my vesting period got revised. Something you will get. We will cross check that. Don't worry. What they have did is, by the end of year 3, these are actuals at the end of year 3. These are actuals at the end of year 3. They are saying company's earnings increased by 9%. First of all, check the actual earning of the year 1. Actual earning of the year 1 is how much? 13%. Actual at the year 2. Actual at the year 3. Take the total. Average. Take the average of all the 3. Is it more than 10? Is it more than 10? Which means their shares will vest if the average is 11%. This one. At the end of year 3, if the entity's average earnings increase by more than an average of 10% over the year 3 period, first year average 15%. If the average is more than 15, shares will vest at the year 1. If the vesting period is 2 years, which means if the average earnings are more than 12%, vesting period will be 2 years. If the average earnings is more than 10%, vesting period will be 3 years. Correct? If this is the case, shares will vest. But if it is only 6%, if the third year actual growth is only 6%, calculate the average. 13 in the 1, 11 in the 2 second year, 6 in the third year. It is not more than 10. Therefore, ఇది థర్డ్ ఇయర్లో చేయాలి మనం. Here I have written second year expense. At the end of year 3 only we will know the actual figures, correct? Just wait. I will show you the solution, then you will get the total clarity. Okay, this is the year 3 average, correct? Let me show you the solution. All your doubts will be clarified. Just a little bit patient. Which question it is? 5. So check this. See. Year 0, year 1, year 2, year 3. Sir, grant date, this is the total condition. What is the total number of shares? 200 shares. How many employees? 400 employees. Vesting period C. If earnings is more than 15%, year 1 is the vesting period. If average earnings are more than 12%, year 2 is the vesting period. If average earnings are more than 3 years, so more than 10%, year 3 is the vesting period. Correct or not? Very good. Here they have given, see, fair value of option is not given. Fair value of option is not given, which means what we have to calculate normally? Intrinsic value. Sir, what is the value of intrinsic value? Fair value of share minus exercise price. In the question they have not given exercise price also. Therefore, this 40 only I can take. Check the question, you cannot find nothing. Therefore, you have to take 40 only. Now, understand carefully. Year 1, what are my actual earnings? 13%. Will my shares vest at the end of year 1? No. I have to see here what I have written. We can expect year 1 earnings will be continued in year 2 also. Then my average earnings will be how much? 13%. If my average earnings are 13%, my shares will vest at the end of year 2. This is my estimation. At the end of year 1, I am estimating vesting period is only 2 years. Calculate the number of employees. 400 minus 32 are actually left at the end of year 1. Expected in the second year 30 employees will further leave. Third year expectations the company have not made at the end of year 1 because the company is sure vesting period is only 2 years. Correct? So find out the number of employees. 338 into 200 into 40 into 1 by 2. Calculate this. Is it correct or not? $13,52,000. First year I will record this expense. Tell me the journal entry. Employee benefit expense account to debit to SBP reserve account. How much? 13,52,000. Correct? Very good. Next. Second year. Actual earnings are only 11%. What is my average earnings? It is not more than 12. Therefore, shares will not vest at the end of year 2. Correct? Therefore, shares will not vest at the end of year 2. Vesting period will be 3 years. Because the company is expecting third year expectations also the company have given. Correct? Which means, see, at the end of year 2, 400 is the total number of employees. 32 have actually left. 27 also have actually left at the end of year 2. It is expecting 25 employees will leave. Further 25 employees will leave in the third year. Just do this calculation into 400 into 40 also. Into 400 into 40 also. How much? Just do this part. Into 2 by 3 because that is for 3 years. Correct? Now my vesting period is 2 years is only completed. So into 2 by 3, how much? After 2 by 3 only 16 lakh. This is for total 2 years. Correct? But how much is already recognized at the end of year 1? Correct? Differential expense will be booked in the second year. Differential expense of 333,333 will be booked at the end of year 2. Correct? Now a little bit careful. Third year what have happened is they have given 2 earnings rates. If the earning is 9%, If the earning is 9%, my average earning is more than 10. If my average earning is more than 10, vesting condition is satisfied. Now find out the expense once again. 400 minus 32, all actuals, minus 27 minus 22 into 200 into 40. How much? For 3 years. Minus cumulative expense. 16 lakh something you have said earlier. You can deduct this, like this also. Tell me the total year. Very good. Case 2, if it is only 6%, vesting will not be done. Understand? Sir, if vesting will not be done, last 2 years I have already recognized some expense. Because last 2 years I have passed one entry, employee benefit expense account debit to SBP reserve account. Correct? Now I have to reverse that expense. Because no vesting. Because no vesting. See, journal entries also I have written. 1 second. Journal entries you can cross check. See, employee expense account debit to share based payment reserve account. Like this I will pass normally. See, 1352,000 first year, 333,333 second year, 866, 667 in the third year. This is the entry which I have to pass. Year 1. So what they have did, the cumulative balance, just add all these 3. Add all these 3. Here there is no exercise price. That's why I have taken fair value of share. If exercise price is there, I will write one more thing, bank account debit. Correct? Here, reserve should be transferred to share capital and premium account. Differential figure will be transferred to securities premium account. Sir, but if the earnings is only 6%, shares will not vest. Correct? But already I have reserve balance of how much? This 2. I will not recognize this balance because I know third year is not vested. Therefore, I will reverse only these 2 years expense. Tell me this. See, if I am booking the expense, what is the entry which I am passing? Employee benefit expense account debit to SBP reserve account. Now I have to cancel the reserve. Therefore, I have to reverse the entry. SBP reserve account debit to employee benefit expense. You can pass right like that also, but correct entry according to me is I have to write other equity because that reserve is previous years. That reserve is related to previous years. Therefore, I can write a other equity account. Okay, easy point. Correct. 6, very important question. We have to definitely check this. See, you have to understand this carefully. That's it. If you understand the question carefully, question is very simple. Okay. One more question we will solve. Number of shares unnai kada. How many number of shares we are having? 200. How many employees? Number of employees into options into face value 10 rupees they have assumed. Face value 10 rupees we have assumed. Correct? It is not coming or what? Tell me number of employees. 319. 319 into how many shares? 200 into 10. Tell me this. Okay, share capital balancing figure will be transferred to securities premium. Okay, fine. One more question we will check. Come to question. So Anil, once watch the lecture, then you will get the clarity in the recording mode because I have explained very clearly. Okay, so you have to watch the lecture once again. Still, if you are having any doubts, you can text me later. But I have already explained that point. Okay, see. Now what we will understand is, whatever the accounting treatment we have did, that is for which options? Equity settled or cash settled? Equity settled options. Very good. Equity settled options. One more type of options are there which are nothing but cash settled options. you have to understand something which is called as financial liability. What you have to understand, the definition of financial liability. Financial liability means, just in financial instruments chapter, I will explain very deeply the definition. Tomorrow I will explain the definition of financial liability. But now you have to understand, if the entity is having any contractual obligation to pay the cash, it is called as financial liability. What is the definition of financial liability? Contractual obligation to pay the cash. Which means if the entity wants to pay the cash in the future, it is called as financial liability. Understand? Cash settled means what? In future, will the company issue shares or will the company pay cash? Cash settled means company have to pay cash only. Therefore, cash settled SBP is a financial liability. This is the first clarity you have to get. Cash settled SBP is what? Financial liability. One more thing you have to understand, if it is asset, I can do fair valuation. If it is asset, I can do fair valuation. Sir, what is the meaning of if it is asset, I can do fair valuation? Yesterday we have studied Ind AS 16. Revaluation model is there, which means what? If I want, I can show my asset at cost, or if I want, I can show my asset at fair value also. If it is asset, I can show it fair value. If it is liability also, standard is giving me an option to value at a fair value because this is the real value. Correct? This is the real value. So standard is saying even if it is a liability, you can measure it fair value. But if it is equity, I cannot do fair valuation. If it is equity, I cannot do the fair valuation. Sir, what are you exactly trying to say? Equity share capital for a company, this is there, 1 lakh shares of 10 each. This is face value. Company market price is 100 rupees, for example. Market price of the company or fair value of its own equity share is 100 rupees. Correct? Now tell me, will the company recognize profit in the difference between 10 and 100? Which means, will the company pass entry like this? See, for example, 2 P&L account. 1 lakh shares into 90. Will the company pass like this? 1 lakh into 90 is how much? 90 lakhs. Credit also, one more account I will create, which is nothing but other equity or something like that. Will the company pass like this? Company will not recognize profit or loss on its own equity shares. That is the reason fair valuation of equity is not allowed. That's why in equity settled options, tell me what is the formula? Number of employees, that is fine. Multiply with what we have to do? Number of options, multiply with fair value of option on which date? Grant date. Understand? This is important. Option value will change. At the end of year 1, it will change. Year 2, it will change. Year 3 also, it will change. Because of, see, option pricing. That's what I'm saying. Time value, because of time value also, option price will change. Because of interest rate also, option will change. All those things we will ignore if it is equity settled SBP. Because I cannot recognize fair value on my own equity. But if it is liability, I have to recognize. Which means if it is liability, the only change which is there in the formula, so please make a little correction in the formula. Here you have to change fair value of option at each reporting date. Here we have to change same formula, fair value of option at each reporting date I have to change. This is the only difference between cash settled option and equity settled option. Only difference between cash settled and equity settled option. Questions are there, you will get total clarity after that. If it is cash settled, what is my revised formula? Tell me. Number of employees expected to fulfill the condition at each year end multiplied by number of options per, everything is same, into fair value of option only I have to take. Same formula, same preference. If option is not given, I will take intrinsic value of option. That is also not given, I have to take fair value of share. On which date? Each reporting period. Year 1 end, I will take year 1 value. Year 2 end, I will take year 2 value. Year 3 end, I will take year 3 value. But if it is equity settled, I will only take one value. Which date value I have to take? Grant date only I have to take. Correct? Very good. Let us check the question. Very, very important question. Question 3. Question 3. This is little bit conceptual question. Last I will explain how to remember this question also. If you understood the logic, very good. Otherwise, you have to by heart this, because this is very, very important question. Okay, I will try to explain maximum logic, but you have to understand. If you understood, very good. Otherwise, you have to by heart this question. Okay, because very important. So let us read the question. PQR Limited grants 80 cash share appreciation rights. Share appreciation rights is nothing but cash settled ESOPs. In brackets, they will give us SARs, SARs. These are cash settled ESOPs. Question number 3, page 101. Cash settled ESOPs. Okay. Let us understand how many cash settled options they are giving. 80 options. To how many employees? 400 employees. What is the condition? Vesting condition they have given. How many years they have to stay in the company? 3 years. During year 1, how many have left? 30 have left. The entity estimates that further 50 will leave during year 2 and year 3 also. Year 2 and year 3, they have given 50 employees will leave. This is expectation at the end of year 1. Correct? During year 2, 40 have actually left. And entity is still estimating further 30 will leave during the year 3. During year 3, 40 have actually left. At the end of year 3, read what is the next line they are saying. All SARs held by the held by the remaining employees vest. If it is equity settled, sometimes the options will lapse. But if it is cash settled, there is no point of lapsing, because company only will pay you cash. You don't need to pay any amount. Therefore, SARs, stock appreciation rights, will never be lapsed. Therefore, they are saying all SARs held by the employees are actually vested. Correct? Now what they are saying, understand. In this question, what is there is vesting period is also there, exercise period is also there. Our accounting, share-based accounting, will be continued till the vesting period only. But exercise period also, what we have to do, let us carefully understand. But first, till year 3, let us understand the normal accounting, what we have to do in this question. Okay, so take your calculators. Let us solve this question. So question number 3. So check this. First of all, tell me what are the total number of employees? Number of SARs per employee. Have they given fair value of option on the grant date? They will not give also. Because it is which option? Cash settled option. Even if they have given, we have to ignore. Even if they have given, we have to ignore. Okay, because we have to take which date fair value? Reporting date fair value. Very good. And one more thing. How you will get intrinsic value, tell me? Fair value of what? Option minus exercise price. Correct? This is the intrinsic value. Correct? Fine. If that is also not given, exercise price is also not given, then what I have to take? Fair value of the share I have to take. Correct? Remember all these points. Now tell me, sir, year 1, how many employees are actually left? The company is expecting still in the year 2 and year 3, how many employees will go? 50. Calculate the expense. Is it correct or not? 320 into 80 into 15 by 3. One lakh 28,000. 320 into 80 into 15 into 1 by 3. Correct? 1,28,000 is the year 1 expense. Tell me what is the entry which we have to pass? Employee benefit expense account debit to, this is not reserve. This is not equity. This is not equity. Therefore, I will write it to SBP liability. What I have to write? To SBP liability, because it is a financial liability. Because it is what? Financial liability. Sir, what is the meaning of financial liability? Contractual obligation to pay the cash. In financial instruments, I will explain that chapter, but fine. Check this year 2, how many employees have actually left? 40 have actually left. And the company is expecting some more employees will be left in the year 3 also. How much? 30. Find out the total number of employees who are actually staying in the organization. Some employees are actually left at the end of year 1 also. You have to consider that also. Correct? So 400 minus 30 minus 40 minus 30. Correct? 300 employees into 80 into 16. This is for 3 years. So divide by 3 into 2. 2 lakh? I think it's not correct. Once check this part. Minus 1,28,000. Because that is recorded in the first year. Very good. 1,28,000 is the amount of expense I have to recognize in the second year. So tell me the journal entry. Employee benefit expense account debit to SBP liability account. How much amount I have to write? 1,28,000 I have to write. If the question ends till here only, I will pass one more entry also. Third year expense also I will record as it is. But they have given some new thing which is called as intrinsic value. What they have given? They have given some new thing which is called as intrinsic value. First of all, tell me, sir, at the end of year 3, how many employees have left? 40 left. So can you tell me, sir, what are the total number of existing employees at the end of year 3? 400, 300. Sorry. 400 minus who are left in the first? Actually left at the end of year 1. 30. At the end of year 2? At the end of year 3 also? Now tell me the total number of employees. 290 employees are there at the end of year 3. Correct? Now, those 290 employees will come to the company and they will ask cash. And they will ask what? Cash. Understand? Intrinsic value means, first of all, if they have given fair value, normally I have to take the fair value. First preference. And one more thing, this fair value is an estimate. In option pricing model also, if you observe, this fair value is an estimate. We will use binomial model. We will use Black-Scholes model. Completely it is estimate. Correct? But intrinsic value is nothing but actual difference between the share and exercise price. Because intrinsic value means should be value. How much it should be. For example, see, if the share price is 100 rupees, if the share price is 100, last example I have said, if the exercise price is only 30, what is the value of option? Tell me. 70 is the value of the option. If it is equity settled, first that employee have to pay 30 rupees cash. Then the company will give him 100 rupees share. It is in case of equity settled. The company will pay him 100 rupees share. That person have to pay 30 rupees to the company. But if it is cash settled, the person will not pay 30 rupees. Company only will directly pay him 70. This is called as net settlement. Company will directly settle the net settlement. Understand? In case of cash settled SBP, fair value is not relevant for me because fair value is an estimate. Intrinsic value is an actual figure. Therefore, remember this point is only applicable for cash settled SBPs. I will consider intrinsic value for the purpose of settlement because I will not ask exercise price. Company will directly pay the net amount to the shareholders. Correct? If you observe carefully this part, here what we have to understand is whoever employees wanted settlement, I will pay which amount? Will I pay fair value or will I pay intrinsic value? Intrinsic value I will pay because this intrinsic value is actual figure. Fair value is an estimate. But whoever employees are not asking me not asking to exercise those shares. For those shares, I will continue at fair value only. Whoever employees have demanded cash, I have to pay the cash. You have to pay the cash on which value? Tell me. Intrinsic value. So for whoever employees who are demanding the cash, I will pay intrinsic value and I will close them. Whoever employees are still not exercising, because the company have given 2 more years time to exercise, which means employees will come at any day and they will take the shares. Sorry, they will take the cash, which means whoever employees are still not exercising, I will continue at fair value. If any employee is asking the settlement, I will pay at intrinsic value. So please write there. Please write beside the question only. Fair value is an estimate. Fair value is an estimate. Intrinsic value is settlement price. Intrinsic value is settlement price. Intrinsic value is settlement price. You can write this formula also if you want. If it is cash settled, payment will be always done on net basis. This is the point you have to highlight. Payment will be done on net basis. Correct? Tell me, how many employees are actually stayed at the end of year 3? Very good. How many employees have actually stayed? 290 employees have actually stayed. Sir, what have happened at the end of year 3? At the end of year 3, what they are saying? 100 employees exercise their SARs, which means 100 employees have came and they have taken the cash. If 100 employees have taken the cash, how much amount I have to pay? Tell me. 100 into 80 into, very good, intrinsic value. 50. Tell me this amount. 1 lakh. Very good. This much I have to pay to them. First I have to recognize the liability, then I have to pay. This is amount of payment. But first we have to recognize the liability. Sir, how much we have to recognize the liability? Carefully understand whatever I am doing. For those 100 employees, I have to pay this much. Therefore, I will record this much only liability. Sir, how many employees are still, still they have to exercise? 190 employees are there. For those 190 employees, I will still continue based on fair value only. What is the fair value? 18 is the fair value. Do the calculation. 190 into 100 into 18. Oh, sorry. 190 into 80 into 18. 2,73,600. What I have did is, sir, whoever employees have already exercised, I have calculated using intrinsic value. Whoever employees are not actually exercised, I will calculate which value? Fair value. Sir, what we have to do at the end of year 3, you have to understand this part. You have to understand this part. Whatever we have said, just the calculation only I have written here. See whatever I have written. For 190 employees, I have taken 80 into 18 I have taken. You can just strike off this part. For 100 employees into 18 into which value I have to take? Intrinsic value I have to take. Just take the total. 3,93,600 should be the total closing liability. But already I have recognized some expense in the past 2 years. How much? 1,28,000 in the second, 1,28,000 in the first. Tell me the expense which I have to recognize at the end of year 3. 1,37,600. Very, very important, this understanding. Third year expense, for those who are actually taking the settlement, I will recognize at intrinsic value. For those who are still continuing, I will record at which value? Fair value. Important point. Very good. Next. Check this point. This is the entry which I have passed, 128, 1,37,600. Let us pass the journal entries also. If you understand the journal entries, our objective is done. First year entry, what I have to pass? Employee benefit expense account debit to SBP liability account, 128. Second year expense. Third year expense. Amounts is important. 1,37,600 in the third year. Sir, same day, some employees have come and they have taken the cash. I have to cancel the liability. Correct? SBP liability account debit to how much? 1,20,000. Now what you have to do is, sir, after 100 employees have taken the cash, can you tell me what is the closing balance of my SBP liability? Closing balance of my SBP liability is how much? $128 plus 128. Very good. 128 plus 128 plus 137,600 minus 1,20,000. How much? 2,73,600. That is my actual balance. Correct? Wait. Come to fourth year. Come to fourth year. Sir, fourth year, what have happened is, see, 120 employees have exercised at the end of year 4. First of all, what are the balance number of employees? 190 are there, out of which 120 employees have exercised. Sir, if 120 have exercised, I have to settle at which value? Intrinsic value. 120 into 80 into 20. How much? 120 into 80 into 20. How much? 1,92,000. Sir, what about balance? How many number of employees are still there? 70 employees. How many options? 80 options. Into which value? 5. Correct. Very good. Check the calculation. See this part. For 120 employees, 20 I have to take. 70 employees, 21 I have to take. Sir, first of all, check this. This should be the balance. This should be the balance. But what is my current balance? 2,73,000. You have already said that figure. 2,73,600 should be the balance. But it should be this much. Do I have to further increase my liability or do I have to decrease the liability? I have to increase. So pass the same entry. Pass the same entry. Employee benefit expense account debit to SBP liability. Sir, what is the difference? That much I have to record first and then I have to make the payment. Correct? That much I have to record first and then I have to make the payment. Sir, how much payment will I make? This is common. 1,92,000 will be paid. Correct? Now tell me, sir, after this entry, what is your closing balance? After this entry, what is your closing balance? Please tell me. 1,17,600. Correct? Once cross check. Important question. 1,17,600 is the calculation. Which means year 5 also something will happen. Year 5, balance 70 employees have come and they have taken it 24. Fifth year, there will be no fair value because everyone will take. Correct? So 70 into 80 into 24. This much I have to pay. This much I have to pay. This is the balance. Differential figure, I have to book the expense. Differential figure, I have to book the expense. Normally will be transferred to P&L account, but in the name of this employee benefit expense. Correct? Very, 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 very important question. You have to definitely check this. Okay. Fine. Cash settled SBP, only one question we are discussing. Cash settled SBP, what I have to do is every year, which value I have to take? Fair value of option. Fair value of option on the reporting date I have to consider in case of cash settled. But if it is equity settled, what I have to take? Grant date fair value I have to take. Very good. Now what we'll be doing is, let us complete balance theory part in this standard. Most important thing is this part. This part, what you have to do is refer the solution notes. Solution notes means whatever the notes I have shared, please refer that part for this. I have explained there very nicely. So you can write here, refer solution notes. In the solution notes, I have provided that thing. I will show you that. So check this. What I have said is vesting conditions can be sometimes service-based conditions. Service-based conditions means you have to stay in the employment. That is called as service-based conditions. Sometimes they can keep performance-based conditions. Performance-based conditions means condition based on earnings, condition based on revenue, conditions based on market price. It can be anything. Performance based, we have to divide those conditions into two. First one, internal conditions. Second one, external conditions. External conditions means market based, market price. See, some companies, what they will do, if the market price of the company becomes 150, I will give you shares. If the market price of the company doesn't become 150, I will not give you shares. Sometimes the company can give these type of restrictions also. See, market price of the company can be dependent on number of factors. It can be dependent on political conditions of the entity. It can be dependent on macroeconomical conditions. Multiple factors are there. Therefore, what they are saying is, and also one more thing, while finding out the fair value of option itself, using Black-Scholes model or binomial model only, you will also consider the probability as to whether this condition is achieved or not. Which means what we have to do is, already those market conditions are captured while calculating the fair value of option. Therefore, what I have to do is, I have to ignore whether it will be satisfied at each reporting period or not, because already they are captured in the market price of that option, fair value of that option, it is already captured. If it is non-market condition, I have to check at every case. For example, in the last question we have seen, if you remember, more than 12%. First year the shares will vest if it is more than 15%. Second year it will vest if it is more than 12%. Like this, every year we will check if it is non-market condition. If it is market condition, whether it is satisfied or not, I don't care. I have to ignore that condition. Simply I have to ignore and I have to continue the normal share-based accounting normally. Okay, which means what? If it is non-market condition, I will be assessed at each end whether vesting will be done in the which year or not. Okay, so one small question is there. Stuck a pen, bro. Put a console now. అది వచ్చినప్పుడు ఎందుకు గెలకడం ఉంటే అవసరం లేదు, మళ్ళీ పిలుస్తాను, ఇక్కడే ఉంది, ప్రాబ్లం వస్తుంది. ఓకే, డోర్ వేసావు డౌన్. Okay, so let's complete this chapter and then we'll go for break, because again I don't want to continue this. Let us complete now only. Okay, so question 16. This is not that much important, but still we will cover. See, 10,000 share options the company is granting to one of its managers, but what they are saying, to get the options the manager have to work for next 3 years. Just a question, this is not the question. This one, 17th question, sorry. 17th question. See, they are saying Apple Limited has granted 10,000 share options to one of its directors for which he must work for next 3 years. And the price of the share should increase by how much? 20% over the next 3 years. See, here it is which condition? Market based condition, because the condition is based on share price of the company. See, first year what have happened? The price is, the condition is satisfied, correct? It is more than 20% in the first year. Therefore, I will continue recording the expense. But in the year 2, if you observe, it is only 19%. which means it have not crossed 20%. But still, since it is a market condition, what I have to do? I have to ignore such condition. I have to ignore such condition, and normally I have to do the accounting. See here what they are saying, irrespective of the outcome of the market prices, as it is already taken care in the fair value of the option, each period an amount of 120 into 10,000 divided by 3. Because in this case, number of employees is not there. Only one director only is there. Therefore, 120 into 10,000 by 3 will be recorded as each year expense. Which means if it is market-based condition, I have to ignore at each reporting period whether it is going to satisfy or not. Okay. One final concept in this standard, which is nothing but hybrid option. Which is nothing but hybrid option. So let us calculate this last question and then we will go for break. Okay, so check this. Cash settled option with equity alternative. Hybrid option. This is the meaning of hybrid option. Hybrid option is nothing but cash settled with equity alternative. I will explain in financial instruments chapter that this is also called as compound financial instrument. If any instrument is having the features of equity as well as financial liability, that is called as compound financial instrument. So here what we have to do is, we have to understand option is there with which party we have to find out. Which means sometimes option will be there with the third party, which means employee. Which means if employee comes and asks the cash, we have to pay the cash. If employee is asking shares, I have to give the shares. That is the meaning of compound financial instrument, and option is there with the third party. But sir, what if the option is there with entity? Sometimes entity is having a choice. If the company wants, they can give shares. If the company wants, they can pay the cash. Both can happen. Here what you have to understand is, sir, if the option is with the third party, what I have to treat as, I have to see here what I have written, entity cannot avoid the cash if the third party demands, which means I have to treat that as completely cash settled, subject to few steps. Few steps we have to follow. If it is hybrid option, just remember you have to by heart this step number 1. Only one step is there. Okay, so this step we have to follow. What I have to follow is just to check this part. Step number 1, what I have to calculate the amount of ESOP. What I have to calculate? ESOP amount I have to calculate. This is also called as equity component amount. How I have to calculate this thing? This is the calculation. So do the first one what I have written. Fair value of the ESOP on the grant date, assuming it is a equity plan. Which means first what I will find out is, if every shareholder wants shares, what is the value of that I will find out. What is the fair value of that ESOP I will find out. From that I will deduct. Now if every employee wants cash, how much I have to pay, I will calculate. Difference amount is nothing but equity component. Difference amount is nothing but what? Equity component. If it is cash settled component, what I have to do? Normally I have to do the calculation. Normally means every reporting period I have to check the value. But if it is equity settled, I will not do any calculations. If it is equity settled, I will not do any calculations. Okay, only 2 calculations we have to do. What I have to find out? I have to find out the amount of ESOP. Sir, how you will get the amount of ESOP? Tell me. Fair value of ESOP on which date? Grant date. But what I will assume? It is an equity plan. Second, what I have to do? Fair value of SAR. Why I have written SAR? Because it is cash. My assumption is it will be settled in cash. Then how much amount of cash I have to find out, that I have to calculate. Difference is nothing but equity component. Okay. One question is there. Through that question, we will understand the concept. Directly come to question number 12, I guess. Not 12. 11th question. Question 11. Check this. Easy question. So let us quickly complete this. On 1st January 20X1, they are saying ABC Limited gives options to its key management personnels to take what they are saying, either cash equivalent to 1000 shares or 1500 equity shares. Here they are saying if you want shares, they will give how many shares? 1500 shares. But if you want cash, they will pay based on how many shares? 1000 shares. Like this, the company will give option. Employee will compare. Employee will compare whatever the option which is there, and he will take whichever is beneficial. Okay, see what they are saying. The minimum service requirement is how much? 2 years. And the shares being taken must be kept for 3 years, which means they are indirectly saying lock-in period is there. How much lock-in period? 3 years. 3 years is the lock-in period, correct? Vesting period is how much? 2 years. Don't confuse. This is vesting period is 2 years. After you take the share, how many years you cannot sell that share? 3 years you cannot sell that share. Okay, this is hybrid option. Hybrid option, what I have to calculate? ESOP value I have to calculate. Sir, how I will get ESOP value? Tell me. Fair value of ESOP I have to calculate, assuming every employee wants equity settled. Sir, if every employee wants equity settled, how many shares I have to give? Tell me. 1500 shares I have to give. Correct. Multiplied by 1500 shares I have to give, multiplied by, so check this, here what they have given, share alternative fair value they have given. See, here they have kept one restriction. If you have taken the share, what is the restriction which they have kept? Lock-in period is there. If you have not taken the share, there is no restriction. Because of that restriction, market price of the share will reduce. Because of that restriction, what will happen? Market price of the share will reduce. Therefore, here they have given share alternative fair value, which what? Restrictions. This is on grant date they will give. How much is the value? 102. Just tell me this value. 1,53,000. No? Next. If they want shares, sorry, if they want cash, how many shares worth cash I have to pay? Very good. 1000 into, if there is no restriction, market price of the share is 113. If there is no restriction, market price of the share is how much? 113. Therefore, I have to pay how much? 113. Therefore, I have to pay 113. 1000 into 113. Do the calculation. 1,13,000. What is the difference? That 40 is nothing but ESOP component. That 40 is nothing but what? ESOP component. Sir, how we have to do the accounting is see. First they have calculated this calculation. First they have did this calculation. 40,000 is the equity value. Now tell me, see, for cash settled, I have to do the normal accounting. Sir, what is the meaning of normal accounting? Check this. 1000 options are there, correct? For cash settled options, which value do I have to take? Do I have to take grant date value or do I have to take reporting value, fair value? Reporting date fair value I have to take. Check at the end of year 1, what is the fair value? 120. Correct? So how I have to do is, sir, 1000 options into 120 into what is the total vesting period? Total is 2, but how many years are completed? 1 year is completed. So tell me the amount. 60,000 will be recorded at the end of year 1. Correct? 60,000 will be recorded at the end of year 1. This is the calculation. Year 2, what is the fair value? 132. Year 2, what is the fair value? 132. So therefore, what I have to do? 1000 into 132. How much? Minus 60 is already recorded in the first year. 72,000 have to be recorded at the end of year 2 also. Correct? One more thing. What is the value of ESOP component which you have got earlier? This is not for single year. This is for 2 years. This is for 2 years. Therefore, 20 in the first year, 20 in the second year. 20 in the first year, 20 in the second year. Just to highlight this part. Just check this part. Equity option. 20,000 I will recognize at the end of year 1. One more 20 I will recognize at the end of year 2. Correct? Cash option. 60 I will record at the end of year 1. 72 I will record at the end of year 2. Correct? Just take this totals. Just take this totals. 80 will be the total. 92 will be the total. I want journal entries. I want journal entries. This is the total expense. 20,000 will be transferred to SBP reserve. 60,000 will be transferred to liability. Correct? Tell me the journal entry. SBP reserve account 20,000. SBP liability account 60,000. That's it. That is hybrid option. Hybrid option only calculation we have to do, which is nothing but ESOP calculation I have to do. Sir, for one last time, how I will get that ESOP value? Tell me. Fair value of ESOP on the grant date, assuming it is equity plan, minus fair value of SAR on grant date, assuming it is cash option. Difference will be called as equity component. It will be recognized over vesting period on SLM basis. SAR accounting will be done normally. SAR accounting will be done normal. Normally means cash settled means every reporting period I have to check, and that calculation I have to do. Okay, fine. So that's it. I think we have covered all the concepts of this. Just to do some small correction in the page number 58. I am not explaining this, but we have to make these corrections because these are not that much important from exam point of view. But some printing mistake is there. Here, strike off this equity share capital. Strike off this equity share capital and please write capital contribution from the parent. Capital contribution from the parent. Capital contribution from the parent. Okay. One more correction. One more correction. Here, please strike equity share capital and write dividend received or other equity account. Dividend received or other equity account. Dividend received or other equity account. Here also, strike off investment in subsidiary. Strike off investment in subsidiary and write dividend payable or other equity account. Dividend payable or other equity account. Okay. So that's it. Last part of the standard, this is not that much important. Even if you skip, you can, that is totally fine. But starting I have said, entity may provide goods or services to the company and the company will issue shares. If that entity, if that other third person is an employee, that is called as ESOP. ESOP accounting we have understood in depth. But that can be any normal good, that can be any normal asset, or that can be any normal service also. If it is all these items, then what I have to do is I have to recognize at this value, fair value of PPE or goods or services received respectively. First preference should be whatever the fair value of items which I am receiving. If I am receiving goods, I have to take the fair value of goods. If I am taking services, I have to recognize fair value of services. Correct? That thing. If it is not possible, I can take fair value of equity instrument at the grant date. Correct? If it is not possible, I can take fair value of equity instrument at the grant date. Okay. So just to check this, a small correction. If it is cash settled, SBP reserve should not be there. So strike off that and please write liability. Please write liability. You can strike off this subsidiary company also. Subsidiary company is also not there here. Okay. Reserve place, you have to change that to liability. Same here also. Reserve place, we have to change to liability. Okay. So that's it. We have completed this with standard. Share-based payments we have completed. Okay. You can go for break. For 20 minutes you can take and we can start at 12. Okay. We will start at 12 o'clock. So till that we can take break. Leases. Leases. Yeah. Reporting 31st March. The financial statements prepare this date. You continue. Off चलो. Okay. So 102 we have completed. Next standard which we will start is, let us start some small standards and we will complete. Afternoon I will start with 116. If I start now, it won't be completed. So some small standards are there. For example, 108. Only one question is there. That question only I have asked in your last exam. So let us complete that small question, that small standard 108. And then 38 also we have to complete. Yesterday we have not completed. So these two standards let us focus now. And afternoon I will start with Ind AS 116. Okay. So 108, please come to concept book. Okay. In this 108, the name of the standard is operating segments. What we have to do is, in this directly I will start with concept number 3. 1 second. Directly we will start with this concept number 3, reportable segments. Let us understand this. In this question, they will only ask one numerical question. That numerical question is they will give some list of segments, for example, A, B, C, D, E, F, G. Like this, they will give some 7 segments, out of which all the segments are not reportable segments. Only some of the segments are only reporting. For example, if you take ITC Limited as an example, it have multiple divisions. For example, it have hotel division, it have tobacco division, it have stationery, it have FMCG. Multiple divisions are there. Correct. These multiple divisions, what the entity can do is it can divide into segments also. So this standard, what it will say is you have to prepare, in addition to separate financial statements, we have to prepare something called as segment wise results also we have to give. Sir, which segment is reporting and all will be identified in this concept number 3. Okay. So carefully check that. What they will do is they will give something which is called as quantitative threshold. Based on some numerical figures, they will identify any one segment as reporting segment or not. Okay. So here, if you observe, they will say that an operating entity will be considered as a reportable segment if it meets any one of the following criteria. 3 conditions they have said. Any of these 3 conditions we have to meet. Remember, not all the 3, any one of the 3 we have to check. What is the first condition? Revenue we have to take. Revenue of that segment should be greater than or equal to 10% of the combined revenue of all the segments revenue. Very simple. First, I will take the total all segments revenue. For example, total all segments revenue, assume I have got 1000 crores. Just calculate it to 10%. 100 crores. All the segments whose revenue is more than 100 crores, it will become my reporting segments. For example, sir, A revenue is 200 crores. It will become my reporting segment. B revenue is only 50. It will not become my reporting segment. Correct? Segment revenue test is very simple. I have to calculate the revenue of all the, segment revenue should be greater than or equal to 10% of the total revenue. This is the first test. Third test is asset test. Third test, what I have to do? Asset test I have to do. Sir, what is the meaning of asset test? Simple test. I have to calculate segment-wise assets. Segment-wise assets, if it is greater than or equal to 10% of all the segment assets. For example, same calculation. 1000 crore, assume it is the value of all the segments. Whatever the segments which I am having, whose asset base is more than 100 crore, that will be called as reporting segment. Otherwise, it will not be called as reporting segment. Second test also we have to do. Second test, what we have to do is, see, first I will do, understand this, combined profit of all profit making segments. And I have to calculate combined loss of all loss making segments. Okay. Here, please write reportable segments, result criteria. Result criteria. We have to calculate this. Profit of all the profit making segments, loss of all loss making segments. Take whichever is higher. Whichever is higher, we have to take. For example, all the profits I have got 1000 crores. All the losses I have got 1200 crores. Tell me whichever is higher. 1200 crores I will take into 10%. 120. Each segment, whether it is getting profit or whether it is getting loss. If it is more than 120, that is called as reporting segment. Even if it is profit or loss, if the result is more than 10% of combined profit or combined loss, whichever is higher, we have to calculate. Okay, very simple. Here it may be a little bit complicated, but while solving the question, it is very simple. Okay, what we have to do? Profit of all profit making segments, loss of all making segments. Take whichever is higher into 10%. Whether it is profit or loss, it should be more than the 10% figure. If it is more, that is called as reporting segment. Okay. 3 conditions are there, 3 criteria. What is the first criteria? Revenue criteria. Second criteria, result criteria. Profit or loss is also called as result criteria. Third criteria, asset criteria. Percentage you have to remember 10%. Okay. Revenue should be more than 10%. Result should be more than 10%. Asset also should be more than 10% of the total segments. Okay, simple thing. And one more thing, here while finding out revenue, I have to take both external as well as internal revenue, which means one segment may sell to another segment. That segment, inter-segment sales also I have to take in this calculation. Okay, so directly we will solve one question. Ind AS 108, only one question I have marked. So let us quickly check that question. Okay, so check this question. Question number 1. Similar question they have asked in December 25. One more attempt also, if they want to ask, they can ask a similar question only. Okay, see. How many segments are there totally? A, B, C, D, E, F, G, H. Total how many segments are there? 8 segments they have given. Total revenue also they have only calculated and given. Okay, so carefully check that. Segment revenue, they have given external sales also, inter-segment sales also. Both take the total. 1500 into 10%. Whichever segment sale is more than 150, that is called as reporting segment. A, you can consider both. A is a reporting segment. Next, B is also reporting. C, D, E, F, G, H also. That's it. As per criteria 1, which 2 segments are reporting segments? Correct? Revenue criteria, that much. Result criteria, what I have to do is profit of all profit making segments, loss of all loss making segments. Here they have given. First, tell me what is the profit of all profit making segments? 15 plus 45 plus 24 plus 15 plus 21. How much? Tell me loss of all loss making segments. Let's cross check everyone. 120 or 300, whichever is higher. Whichever is higher. Into 10%. Whichever segment result is more than 30, whether it is profit or loss. Whether it is profit or loss, whichever segment result is more than 30, it is called as reporting segments. Tell me, is A reporting? B, C, D, E, otherwise all other segments are not reporting segments, which means only 2 are reporting. Tell me what are those 2? Correct, B and C are reporting segments. Last case is what? Assets criteria. Total assets 100, more than 10. More than 10, which is there? A is there, D is there. Correct? Any criteria, even if it is satisfied, that is called as reporting segment. Tell me, first criteria is satisfied by A and B. Second is satisfied by B and C. Third is satisfied by A and D. Now tell me what are the reporting segments? A, B, C, D. Understood? Now what I have to calculate is, sir, after finding out reporting segments, just calculate the total external revenue. Calculate the total external revenue of these segments. Calculate the total external revenue of the reporting segments. How much? What is the total external revenue of all the segments? Total. External only I want. 1000. Correct? 1000 into 75% is how much? Which means after you have identified the segments, those segments external revenue should be at least 75% of your total revenue. If it is already 75%, don't further include any other segment. But here it should be 750. But my identified reporting segments revenue is only how much? 725. Correct? We have only calculated that number, nil 663 3725. If it is less than 75%, I have to include another segment also as my reporting segment. Another segment as your wish. What I have did is, whichever segment is having further highest revenue, I have included that segment. F is there, so I can include F. If I include F also, then my reporting segment's external revenue is obviously more than 75%. Correct? Simple calculation. So last what they will say, it is assumed that the company will select the segment F to meet the 75% threshold criteria. Hence the reportable segments are what? A, B, C, D and F. All the 5 segments will be called as reportable segments. Okay, important question. Same question only they can ask once again if they want to ask also. Okay. First find out the reporting segments and then compare 75% of the revenue is satisfied or not. If not, we have to add further segments also. If already satisfied, we can ignore that part. Okay, simple. That's it. So 108 also we have completed. Now let us start with Ind AS 38 intangibles. Ind AS 38 intangibles also let us complete quickly. (38) intangibles. Directly come to concept number 4. Directly come to concept number 4, recognition criteria. Recognition criteria, same as Ind AS 16. Okay, tell me what are the conditions which you have to check. Future economic benefits should be probable, and next, cost can be measured reliably. Same concept will be applied for even intangible assets also. If you remember, yesterday I have said something which is called as a goodwill related discussion I have made. Correct? 1 second. Yesterday I have made goodwill related discussion. What I have said is goodwill can be 2 types. Correct? It can be self-generated goodwill or it can be purchased goodwill. What I have explained is if it is self-generated goodwill, I cannot find out how much cost is related to that goodwill. If it is purchased goodwill, I can find out how much it costs. So what we have concluded is if it is self-generated goodwill, it will never be recorded in our books of accounts. But if it is purchased goodwill, yes, they will record as per Ind AS 103. Guidance is given in Ind AS 103, but here they will just say that if it is purchased goodwill, we can record in your books of accounts. But if it is self-generated goodwill, we should not record that item in our books of accounts. Okay. Other than self-generated goodwill, some items they have given. What is the second item they have given? Tell me. Marketing and promoting costs. Recognition criteria we have to check. Marketing and promotion costs. At the time of marketing itself, I don't know whether I will get compulsorily future economic benefits I will get or not, I don't know. Whether the product can become hit or the product can become flop also. Whatever it is, future economic benefits are not certain at this point only. So what they are saying, these will not be capitalized. These will not be capitalized. Sir, what we have to do if it is not capitalized? I have to transfer all these costs to P&L account. If they have given any of these items in your question, you have to directly transfer all these items to P&L account directly. Okay. One more thing. Check this. Staff training cost. Staff training cost also, sir, what I have to remember is, see, you have developed one new software and you have given some intensive training to all the staff how to use that software. You have given training and they have also learned that software very nicely. But what they have did is they have just left the company and have joined a new company and they have just copy pasted the software and they are using that software. See, here I have just given the staff training, but I cannot control the staff. After taking the training, if they want, they can stay in the company. Otherwise, they will go out also. So what they are saying is, if you can't control anything, that is not your asset. Asset means you should have control on that item. Then only we can say it is an asset. Staff training cost, I don't have any control over the staff. Therefore, what the standard is saying is these staff training costs will be transferred to P&L account only. I should not recognize this item as an asset. Okay, important point. And then research. I will explain this research. Startup costs also, if they have given, that also always transferred to P&L account. Startup cost means I am incurring for my business itself, not for a separate asset. Overall, my business will be developed, but not a single asset. Therefore, I cannot transfer startup costs also to any asset. I have to directly transfer that item to P&L account. Okay. And one more thing. Initial recognition of intangible asset. Initial recognition, same whatever we have discussed today, those points only will come. If any asset is purchased, I have to record that cost or purchase price. Plus non-refundable taxes have to be added. Trade discounts and rebates, if there are any, those have to be reduced. All directly attributable costs also have to be added. All directly attributable costs means if it is intangible asset, there is no transportation, there is no installation. These type of items will not be there because these are intangible items. What will be there? Legal costs, professional fees, advisory fees, testing will be done for software. If it is tangible asset, I will do trial run. But both can be interchangeably also use it. But your question generally will give like this. Testing cost also we have to capitalize. And one more thing, development phase. This also I will explain. Discussion is there, don't worry. Plus last, any other directly attributable cost will be capitalized. Okay, then I will get the total cost of the asset. Okay, this is fine. And the most important part in this standard is this concept number 7, which is nothing but internally generated intangibles. That also write in brackets other than goodwill. Because goodwill, we know what we have to do if it is internally generated. We have to just ignore that. It will never be recorded in books of accounts. Sir, what about other than goodwill? We will understand here. Very, very important from this standard. Okay, see. If you wanted to prepare any intangible, asset, for example, at the time of COVID, they have prepared one COVID related vaccine and all, correct? In order to register the patent and all for the manufacturing of that vaccine, many companies have incurred huge amounts of expenses. First, what they will do some research. Research means understand which items I have to use, which chemicals I have to use, which components, in what ratios I have to use, in what compositions I have to use. First, I have to find out the method, correct? That finding out the method is called as research. After finding out the process, then I have to start manufacturing. That process is called as development. What the standard is saying is, in the research phase itself, research is nothing but trial and error. I will do one trial. If it works, I will continue. Otherwise, I have to start from the beginning onwards. Like that, even if you watch Robo movie also, in the first attempt, it is not succeeded. Number of attempts have taken place, correct? So all those attempts are called as research phase. Research phase means here they will say new knowledge acquisition, search for alternative ways. At the research phase itself, future economic benefits are not certain. The reason is very simple, because first of all, process itself is not finalized. I have been doing number of trials and errors, correct? Therefore, you cannot say at the research phase only whether I can generate future economic benefits or not. Therefore, what the standard is saying is, always remember, research expense will not be capitalized because FEB is not certain. But once the method is finalized, after if I can start the development process, then it's okay. Method is finalized, which means I can get future economic benefits. Therefore, what I can do, I can start capitalizing. Research always stands for to P&L. But if they have given development expense, development means application of knowledge which is developed from the research. In research, you have identified, okay, this like this I have to do, like this I have to do. You have identified at research phase. Now what I have to do, I have to apply that knowledge which I have gained in the research. Development phase expenses will be capitalized, correct? Most importantly, these 5 conditions you have to remember. All these 5 conditions you have to remember. Read the first one. Probable future economic benefits. FEB should be probable. And read the second one. Reliable measurement of development cost. These two are copy paste. These two are copy paste of recognition criteria, only nothing new. Other 3 points we have to check. Sir, what is the third point? Entity should have intention to complete the asset for use. Okay, which means what? If you are manufacturing any vaccine, okay, assume what you have did is you have decided to manufacture COVID vaccine. At that time, what you have decided is you have undergone huge amount of research and you have finally find out the vaccine after 25 years. After 25 years, you have found the vaccine. Already, it is already cured also. In the next 2 years only, some other person have invented the vaccine and that person have already cured. But you don't know this. So what you have did, 25 years, you have did some research and finally you have got out and you are saying, I have finally discovered the vaccine. If you discover the vaccine, then no one will ever purchase. Which means what? Entity has no intention to complete the asset. because already asset is there. That COVID itself is not there now. So who will purchase that vaccine? Therefore, entity has this intention to complete the asset for use. And one more thing is what? Available resources to complete the project. Obviously, entity should have resources. Last but not the least, technical feasibility also to complete the asset, which means technology also should support. If all these 5 conditions are satisfied, from that date onwards, what I can say, I can start my development phase. Development phase, if it is started from that date onwards, I will start capitalizing the asset. Okay, simple point. So here what I have to do is one more thing I have to check. Just write here all expenses till technical feasibility all expenses till technical feasibility got established. Technical feasibility got established will be transferred to P&L account. Will be transferred to P&L account. Full stop. Once it is established, it should be capitalized. It should be capitalized. It should be capitalized. Okay, simple point. You have to remember these 5 questions. In exam, you have to code these 5 questions also. 5 points also you have to code. Okay, just once again read these 5 points. Then we will start with questions. Research always transferred to P&L. Development will be capitalized. Development also I will capitalize only after these 5 conditions are satisfied. Okay, fine. Just read these points. We'll start with questions. Check these 8 points also. Following items are not included in cost of intangible asset. Not included in cost of intangible asset. Just read whatever they are saying. Staff training. Already all these points have clarified earlier only, but some new points also I have included here. Operating losses, general administration overheads. This one is important, 6th point. Maintenance of an intangible asset. Okay. You have purchased a tally software. Meanwhile, if any issue comes, maintenance contract also we have entered. If you are paying any amount, that maintenance contract is after the asset is ready to use. Same concept as per AS16. In AS16 also we have to continue the same logic. Maintenance contracts and all will never be capitalized. Next, cash discounts also will never be capitalized. Read the last point. Interest on loan taken to purchase or internally generate the asset. Interest will never be included in the cost, but if it is qualifying asset, it should be capitalized. Okay, simple point. And read this point also, last one. Since we have already completed 36, in AS 36, this is easy. Recoverable amount means what? Net selling price. This is also called as FVLCTD. Fair value less cost to disposal. That should be compared with the value in use. Value in use is nothing but what? Present value of expected future benefits. If recoverable amount is less than carrying amount. If recoverable amount is less than carrying amount, then what I have to do? Impairment loss will be there. Correct. Here I have written reversely, but normally I can write carrying amount is more than recoverable amount. Both are same only. You can write anyways. Okay, fine. Come to questions. We will cover those 2 questions. Okay, let us read this question, very important. So carefully let us check. A Limited engaged in the research to develop a new production technology. Expenditure on the new production process in 2021-22 are as under. Particulars they have given. 1st April to 31st December. How much expense they have incurred? 5,100 lakh. Sorry, 5,400 lakh. 1st January to 31st March, how much they have incurred? 1,800 lakh. Take the total. 7,200 lakhs. What they are saying, understand. The production process met the recognition criteria. Recognition criteria means those 5 conditions. Those 5 conditions are satisfied on which date? 1st January 2022. Which means what? Till 1st January 2022, that is in research phase. Which means what I have to do those expenses? P&L account. After 1st January, what I have to do? Capitalization I have to do, correct? Which means very simple. This 5,400 will be transferred to P&L. 1,800 will be transferred to, it will be capitalized. Intangible asset, correct? Simple, very good. Here what they are saying, amount estimated to be recoverable from the process is how much? 1,000 lakh. Understood. Your cost is how much? Cost or carrying amount, it is how much? Cost is 1,800. Cost is 1,800. But they are saying recoverable amount is only 1,000 lakhs. Understand? Is there any impairment? Very good. Recoverable amount is 1,000, which means impairment loss will be how much? 800 lakhs. Impairment loss will be 800 lakhs, correct? If I recognize impairment loss as 800, then my revised carrying amount will be only 1,000 lakhs, correct? Now what have happened is next year expenditure incurred is how much? 6,000 lakhs. Already how much balance you are having? 1,000. This is asset. Therefore, it will be added in the next year also. So total asset balance is how much? 7,000 lakhs. Total expense balance is 7,000. And what they are saying, sir, on 31st March 2023, the amount estimated to be recoverable is only 5,000. Again, they are saying, sir, your carrying amount is 7,000. Recoverable amount is only 5,000. Which means how much further impairment is there? 2,000 impairment is there. This 2,000 also I have to charge normally. Okay, very, very important question. By the way, this is, don't ignore this. If you just watch this, easily you can understand. But the day before exam, you have to just check this. Okay, so read this. Carrying amount as on 31st March and charge to profit or loss. Profit or loss, they are asking impairment. Impairment loss should be transferred to P&L account, correct? This impairment loss they are asking. So just check this. Final carrying amount is 1,000 lakh. This also we have calculated normally only. Second year also this calculation we have to do. Okay. If you are done, then let's start with question number 2. Question number 2, important. This is also similar question already they have asked in previous exam. Okay, so in the year 2021, what they are saying is total expense incurred on the process is how much? 100 lakhs, of which 44 lakh is incurred before 1st December 2020. They are saying something. When the production process met the criteria as an intangible asset. Tell me what is the total expense? Out of which some amount, 44 you have incurred before the criteria is satisfied. Which means this 44 what I have to do? Very good. Balance amount is how much? That 56 will be treated as capitalized intangible asset. Correct? Very good. Next year, development phase is started and completed after incurring an expense of how much? 400 lakh. Already you are having some 56 lakh balance. Now how much you have incurred? So total is how much? 456 lakhs. Read the next line and find out what we have to do. Read the next line and find out what we have to do. Value in use you have to find out. They are expecting 100 lakhs of 100 lakhs per annum they are expecting, correct? Cost of capital is 10%. They have only given annuity amount also. So just to do 100 into 3.79. 379 lakh is the recoverable amount. 379 lakh is the recoverable amount. 456 is the carrying amount. Therefore, is there any impairment? How much? 70? 77 lakh is the impairment. Simple question, nothing is there. But just understand the orientation of the question. We have just calculated 3 amounts, but question they have given 5 questions. 6 questions they have given. First one, what is the expense to be recognized as an expense in the statement of P&L for the year ended 31st March 21? How much? 44. 44. Second year, carrying amount on 2 years they are asking. Very good. First 56, next 456. Correct? Because second year carrying amount is how much? This is carrying amount. Carrying amount means total I have to take. If it is asset, opening also I have to take. Correct? So second year carrying amount is how much? 456. That is correct only. Third year, tell me. What is the cost of internally generated intangible to be recognized? Read the next point also. Expenditure to be recognized as an expense in the statement of P&L for the year ended 31st March 2022. 31st March 22, some expense, impairment loss is there. Na? That impairment loss you have to transfer to P&L account. How much impairment loss we are getting? 77 lakhs should be transferred to P&L account. Correct? 1 second. So, okay, correct only. So we have to understand this. So see, what is the cost of internally? I think they will give some combined answer. So see what they have did. 2021 A answer they have given nicely. B, C and D they have given in single line. Which means what? Actual total expense is 456. Recoverable amount also directly they have calculated 379 lakhs. Intangible asset they have calculated whichever is lower, which is nothing but 379 I have to record, and balance 77 lakhs will be transferred to P&L account is what they have adjusted here. Okay. So fine. And one more thing, what they are saying is, see, what is the carrying amount of, this one, what is the amount of amortization of the intangible assets you have to recognize? See, here, I think they have said something about 5 years they have said. 5 years they have said. So whatever the cost of intangible you are having, I think you said some 379 or something. So just to do 379 by 5. 70. This will be my amortization for the first year. Correct? Impairment also I have to charge. Next, same time I have to even charge the amortization also for the next year. Okay, see, don't confuse. Here they have given 20 to 23, but recoverable amount they have given on which date? 1st April 22, which means I have to calculate impairment first, then I have to do the impairment. Sorry, then I have to find the amortization. Correct? Because see here, 1st April 22 means what it is 31st March 22 only now. Therefore, they have did the calculation like that. Okay, but next year while charging amortization, they have to do on this 379, which means 75.8 will be charged as amortization. Okay, fine. So that's it, nothing more in this question which we have to discuss. But I want you to check this question number 5. I will not explain this enough. Question number 5, which they have already asked in past. Strictly speaking, this is not Ind AS question. This question have taken from CA Inter AS question. AS 26 intangible assets question is there. If they want to ask, they can ask the same copy paste question, but answer they have solved as per Ind AS. Question they have asked as per AS, but answer they have asked as per Ind AS. If they want, they can repeat the same question. This question is little ambiguous because the question is only not technically correct. But what I wanted to do is, you have to check my previous marathon where I have discussed this question, and you have to understand, because 30 to 35 minutes I have explained the ambiguity and how to correct and all. I have explained very nicely in that video, marathon video. It is there. You can check the timestamps. In the timestamps also they have already mentioned the question, so you can check that question. Very, very important. You have to check this. Okay, I am discussing only 2 questions as Super 75 because this question you have to check from previous marathon. At least check for once. Day before exam not required, but at least once you have to check. After today going home, you have to check this in days. 38 related question number 5. Definitely you have to check. Other questions, even if you don't see, you can easily answer them. So that's it. We have completed this standard also. 38 also we have done. Now what we'll be discussing is, let us start with 21. 116 post lunch only we will start. Let us complete this small standard Ind AS 21. Foreign currency transactions. This question also they have asked in the previous attempt. In your MTP also they have asked a similar question. So we have to cross check. Recent MTP also they have asked this question. So it is very important. Let us cover this standard. Okay, so see, this 21 is also little bit important standard only, but our institute is asking only very basic questions. So let us stick to those basics only. First of all, in this Ind AS 21, if you want to start, we have to learn some different currencies names. 3 types of currencies will be there. First type of currency is called as functional currency. Second type of currency is foreign, and last one, presentation currency. Okay, 3 types of currencies. What is the first one? Functional currency. Second, foreign. Third one, presentation currency. Presentation currency means whatever the currency in which you are preparing your financial statements. Whatever the currency in which you are preparing financial statements, that is called as what? Presentation currency. Functional currency means, just read this. It is the currency in which books of the entity are maintained, and write this point, in which primary economic environment operates. This is important, in which primary economic environment operates. This is the meaning of functional currency. Okay. You have to understand the word, sir, what is the meaning of primary economic environment in which the entity operates. Here, you cannot say directly that functional environment or primary economic environment is operating in a certain country. You cannot say directly. They have given some indicators, and based on these indicators, we have to find out. Sir, what you are exactly trying to say is, first you have to check how the pricing of the goods and services of that entity are determined. For example, one Indian company is there. What that Indian company is doing is, Indian company is producing some goods. Indian company is producing some goods. Pricing of this Indian company, is decided by its competitor who is there in US. One competitor is there in US, and that US person have fixed the amount of that price as $1 lakh. Now what I will do, I will convert this $1 lakh into Indian rupees. For example, assume the price is 80, so my Indian currency price will be 80 lakhs, and this I will charge from my Indian customers. If you observe, the basis of fixing my price I have taken from US based company, which means the currency which I have used to fix my goods and services price is nothing but US. Therefore, in this case, even though I will invoice to my customers in rupees, my functional currency is not rupees, because I am not fixing prices based on rupees. On what amount I am fixing the prices? Dollars. Therefore, my functional currency will be dollars. Therefore, I have to maintain my books of accounts also in dollars. But MCA will not agree with this. MCA will ask Indian companies to prepare financial statements based on which currency? Indian currency. Correct? But primary economic environment, for example, my competitors are located in US. Also, my suppliers. Also, I am importing all the items from US only. I am borrowing, I am taking loans also from US. My share capital also I have raised from US, which means just the company is located in India. But all its transactions, all the primary economic environment of the company is located in US, therefore dollar will become its functional currency. But Indian MCA will not agree if you prepare financial statements in dollars. For Indian purpose, we have to convert those into rupees, which means this standard only also provides you the guidance of this one. Translation of financial statements of translation of financial statements of entity into presentation currency. This guidance also they will give in this standard only. Okay. And one more thing, primary indicators we have to check, which means currency which influences the cost of providing goods and services, and next currency in which the funds are raised. Based on this, we have to find out what is your functional currency. Okay. This is just theoretical point. They will not give you an exam. But fine, you can write here also, whatever the market forces which are there, your competitors will determine what is your functional currency. Your regulators also, for example, if SEBI and all, based on your regulators also, you can find out what is your primary economic environment. Okay, this is theoretical part, but not that much important from exam point of view. What is important from exam point of view is this part. Foreign currency transactions, how I have to do the accounting. Okay, first of all, what they will say, foreign currency transaction means any transaction that is denominated or settled in foreign currency. This is already simple point, nothing to explain. So check this here, what they will say, initial recognition of foreign currency transaction. For example, I have purchased one goods. I will pass the entry, purchase account debit to cash account, purchase account debit to creditor account, for example. Assume it is credit purchase. Purchases, I will write on the exchange rate on that transaction date. For example, if I have purchased on 25th August, what is the spot rate which is there? I will record my purchases at that rate. So what they will say, it will be recorded at exchange rate on the transaction date, which means spot rate I have to calculate. Year end, subsequent recognition also we have to do. Correct? Subsequent recognition means on balance sheet date also I have to do some calculations. Sir, on balance sheet how we have to do, that will be explained here. Two types of items will be classified for this purpose of how to do the accounting based on reporting date. Okay, first one is monetary items, second one is non-monetary items. First one is monetary, second one is non-monetary items. So monetary item means If it is an asset, how much amount you are realizing from that asset, it is fixed. If it is a debtor, if it is a debtor, if it is there 1 lakh, for example, it is fixed that you will receive only 1 lakh rupees from your debtor. It is a monetary item. If you are having a loan of 1 lakh 25,000, it is fixed that you will receive only loan of 1 lakh 25,000. It is also a monetary item. If there is one item which is PPE, if the value is 10 lakhs, I cannot say that if I sell the asset, I will only exactly get 10 lakhs. I cannot say if I use the asset and if I produce the goods, I can get only 10 lakhs. Like this, I cannot say. For those assets which you cannot say, that is called as non-monetary items. Intangible assets are also non-monetary items. Correct? Liability is also same treatment. For example, if you are having trade creditors, amount is fixed, therefore it is a monetary item. Loan taken, amount is fixed, therefore it is also a monetary item. Okay, what you have to do is you have to classify the monetary items. All monetary items will be remeasured at exchange rate. All monetary items, what I have to do, I have to remeasure at the exchange rate, which means I will calculate the closing exchange rate. They will always give in the question. Closing exchange rate I have to find out. Okay, non-monetary items we have to check. Non-monetary items, sir, what I have to check is we have to find out, sir, is it shown at historical cost or not? Assets, we are having two models. You can choose cost or you can choose revaluation. If you are choosing cost, then don't do anything. If you are choosing cost, then don't do anything. For example, inventory also two options are there. Cost or NRV, whichever is lower. If you are choosing at cost, don't do any adjustments. Don't do any adjustments. Impairment also. If there is no impairment, which means you are continuing from the cost only, at this point of time also, we should not remeasure the same transaction. But here, other than historical cost, just write this. I think this is missed there. So please write other than historical cost. Other than historical cost. Other than historical cost, it will be remeasured at exchange rate on the fair value determination date. It will be remeasured at exchange rate on the fair value determination date. For example, if they have given fair value, if you want to revalue the plant and machinery, they will also give you the exchange rate on the revaluation date also. We have to consider that date. Okay, one question is there, very good question, that only they have asked in your exam. They will cover that question, don't worry. What they will say is difference amount, exchange difference will be recorded as either exchange gain or exchange loss. Difference amount will be recorded as either exchange gain or exchange loss. Sir, what I have to do is normally exchange gain or loss will be transferred to P&L account. But for example, we already know this. Sir, if there is any upward revaluation, tell me what is the entry of asset? Upward revaluation of asset, tell me asset accounted debit to OCI. If fair value changes are routing through OCI, exchange difference also should go through OCI. Normal fair value difference, if it is going through P&L account, exchange difference also should be transferred to P&L account. Simple point. So just check this. Normally will be transferred to P&L if fair value gain or loss is recorded in P&L. Exchange difference will be transferred to OCI if fair value gain or loss is transferred in OCI. Okay, simple point. You have to cover these points. And after this, balance points, even if you skip, those are totally fine. Come to this part. Financial statements translation. Come to financial statements translation. Financial statements translation. Okay, see. They will give you one balance sheet. In that balance sheet, they will give you assets, liabilities, everything they will give. So what you have to do, just carefully check this. If it is asset and liability, converted at exchange rate on the balance sheet date. Okay, on the balance sheet date, I have to consider, which means closing rate on year end I have to take. Correct? Share capital, always remember, share capital, I will not do any conversions. Whatever the date on which I have issued the capital, that date exchange rate only will be continued. That's what I have explained earlier. On equity, I cannot recognize fair value. Same logic applies here also. Share capital, equity share capital, if they have given in the question, those equity will be converted at exchange rate on actual transaction date. Actual transaction date only we have to consider. And one more thing, check this. Other equity and opening retained earnings. Carefully understand. They are saying opening retained earnings. Here also, what I have to take, converted at exchange rate on the actual transaction date. Other equity also same thing. Opening retained earnings also I have to use the actual transaction date only. But profit in the current year or retained earnings during the current year, which means P&L account items. P&L account items, if they have given, I have to convert using average exchange rate. What I have to convert using? I have to convert using average exchange rate. Okay, that's it. Just remember these things. Inventory and assets subject to impairment loss. Here I have given, here I have explained them. If you have time, you can check. Otherwise, not required. Still, it is totally fine. Impairment loss, if it is there, how I have to record. Okay, amortization, how you have to do. That much next level questions they are not going to ask. Based on this only, they will close the discussions. Assets and liabilities, closing exchange rate. Share capital, actual transaction rate. Okay. Opening balance of retained earnings and other equity also, actual transaction rate. Profit and loss account items, average exchange rate. Average exchange rate. Okay. So 2 questions are there in this standard. Let us quickly complete those 2 questions. Come to workbook. Ind AS 21, some 2 questions are there. Let us quickly focus. Okay, so check this. They will give some balance sheet. They will give some balance sheet. Okay. See, share capital and opening retained earnings, they have given some figures. Share capital and opening retained earnings, they have given some figures. So these figures they have explained here are pre-populated. Pre-populated means they have converted using the actual transaction date. So don't do again conversion for share capital and other equity. Okay. Other than this, normal items I have to do normally. Which means what? See, here they have given conversion rates, they have given opening rate, average rate, closing rate also they have given. Correct. We have to do the conversion. PPE they have given $50,000. Rate is 1.13. I have to convert. This is very basic forex. Some foreign currency conversions you just want to get whether I am multiplying or whether I am dividing. You have to understand. Here we have to divide because they have given L dollar rate. Okay. Our balance sheet is in USD. Therefore, I have to convert this into this. Therefore, I have to divide. So 50,000 divided by 1.13. If I do, my PPE balance will be this much, 44,248. Receivables also I will use the closing exchange rate. Correct. Capital and opening retained earnings I will directly take from here. Capital and retained earnings I won't change. Other items, how many are there? Profit and loss for the year. Tell me this what I have to do. Average rate. That's it. These 2 items, closing rate. These 2 items, closing rate. Just tell me the difference. Find out the, what should I say? Find out the difference. Is it matching or not this one? Do the calculations and cross check. Is it correct or not? That's it. Calculations. Take the total of all assets and take the total of all liabilities also. All assets and liabilities totals. Will it match? We have used different rates. Therefore, obviously it will not match. Obviously it will not match. How much difference we are getting calculated? Difference. Very good. Difference between assets and liabilities. Please calculate. $24,376. That is called as foreign currency translation reserve. That difference is called as what? Foreign currency translation reserve. Same question they will give if they want to ask. New question. Same copy paste question they will give you. They will give you one trial balance. Trial balance they will give. Based on that we have to match. We have to convert the figures. Okay. Again, equity, share capital and opening retained earnings, don't do any conversions. If they have specifically given the date of transaction related, then we have to check. Otherwise we have to ignore that. Okay. Opening under current year profit, what rate I have to use? Average rate I have to use. Normal assets and liabilities I will use closing exchange rate. Okay. Important question. And just do this small correction in the second question. This is 31st. This is 31st March. 31st March 2012. And here they have forget to give in the date 31st March 20x1. Here it is x1. Here it is 31st March 2012. 12 or 11, anything you can write. Change this to 11. 31st March 2011. Okay, very, very important question. This only they have asked in your exam. Okay, so let us carefully check this. Solution I have already shared with you. Let me show you that solution and explain. So check this. Ind AS 21 question. C. On 30th January 2011, A Limited purchased a machinery of how much? $5,000 from US supplier on credit basis. Credit basis means it is a credit transaction. A Limited's functional currency is what? Rupees. Exchange rate on the date of transaction is 60 rupees. What is the date of transaction? They will record the transaction machinery account debit to creditor account. Correct? Machinery account debit to creditor account. Sir, can you tell me the amount? How much? Very good. 5,000 into 60 I have to record. How much we have got? 3 lakh rupees we have got. Very good. They are saying, sir, fair value of the machinery determined on 31st March is how much? $5,500. They want to show their machine at revaluation model. So what they have did? They have revalued the machinery. So revalued amount is how much? 5,500. Revalued amount is how much? 5,500. Just now I have explained, sir, if you are showing your asset other than cost, we have to use the fair value also on such fair value determination date. Here, on which date I am revaluing? 31st March 20x1. They have specifically given 31st March 20x1 data. How much it is? 65 is the asset value. What they have given? 65 is the asset value. So understand what is the entry which I have passed. One more entry is also there. See, creditor is a monetary item. Creditor is which item? Monetary item. Creditor I have to value at which value? Closing exchange rate. At which value? Closing exchange rate. Sir, what is the closing exchange rate? 65. What is the closing exchange rate? 65. So just to calculate 5,000 into 65 minus 60. 5,000 into 65 minus 60, how much? Which means, understand what have happened. Initially, I have to pay 3 lakh rupees to my creditor. But because of exchange differences, I have to pay further 25,000. Because 5,000 into 65 you have to pay. But already 3 lakhs is your liability. Now I have to increase my liability. So what I have to do? I have to credit the creditor. I have to credit the creditor account and difference will be transferred to P&L account. Exchange difference will be always transferred to P&L account. But if it is OCI item, then it will be transferred to OCI. Okay, simple calculation till here, no problem. Now what will happen is, one more thing also have happened. One more thing also have happened. Sir, what is that one more thing? First, let us understand. See, sir, first of all, my asset value, what is the initial value which I have recognized in my asset? Tell me. $5,000 is fine, but what is the closing exchange? What is the exchange rate I have recorded? 60 is what I have recorded. So first, what I will do is, let me continue the same exchange rate. Let me continue the same exchange rate and let me recognize the revaluation gain or loss. How much is the revaluation gain? Tell me. 500. 500. Now continue the old exchange rate. $500 into 60 is how much? Tell me. 30,000. I have to increase my machine. I have to increase my machine, therefore I have debited machinery. Sir, credit where I have to transfer? OCI I have to transfer. Credit where I have to transfer? OCI I have to transfer. But in the question, they have given something which is called as tax rate is 30%. What they have given? Tax rate they have given 30%. Understand? If they have not given tax rate, I will directly write to OCI 30,000. If they have given tax rate, calculate 30%. On this 30%, calculate 30%. Create deferred tax liability. What I have to create? I will create a deferred tax liability because income tax don't know this exchange rates and all. Income tax don't know this revaluation also. Actual cost is only allowed as deduction always. Therefore, along with OCI, I have to recognize DTL also. Along with this OCI, what I have to recognize? DTL also I have to recognize. 30,000 into 30% also I have to recognize. Correct? Important point till here. But now the thing is, normally assets, non-monetary items have to be valued at original exchange rate only. But if we are recognizing those items other than cost, here we are doing fair value, which means other than cost. Therefore, I have to consider exchange rate, closing exchange rate I have to consider. Which means what? See, $5,500 is your asset value into 65. Do into 65. 5,500 into 65 is how much? 3,57,500. But your asset original balance is 3 lakh. But now I have increased it 30. Now it is how much? 3 lakh? 30,000. But it should be how much? Which means I have to increase further 27,500. I have to increase how much? Further 27,500. Machine will be increased. This is exchange loss. This is exchange gain. Normally, exchange gains will be transferred to P&L, but here fair value change I have transferred to OCI. Therefore, exchange gain also I have to transfer to OCI. Exchange gain also I have to transfer to OCI. So instead of recognizing P&L, what I have recognized here, OCI I have recognized. Just do into 70%. This into 70%. 19,250 will be transferred to machinery. Sorry, will be transferred to OCI. Balance will be transferred to deferred tax liability. Balance will be transferred to deferred tax liability. 2 entries. You can pass one single entry also. You can pass one single entry also. Sir, what is that single entry? Understand? Just to do 5,500 into 65. Sorry. 5,500 into 65, how much it is? But you have booked your asset at how much? 3 lakhs. Just increase 57,600. So one entry, machinery account debit, 57,600. To OCI, 70%. To DTL, 30%. Like this also, okay, net entry will be both same. My machinery should be ultimately increased by 57,500. OCI this much, DTL this much. But this is correct entry, which means first I have to record that cost. Since fair value is used, obviously I have to change my exchange rate also. Therefore I have explained here. Okay. I think one more year also they have asked. 31st March 20 X2 is also there, which is 67 rupees. 67 rupees, sir. But what they are saying is, I have to make the creditor payment. Have they given the date of payment? See, 31st March 2012, which means last date they have made the payment. Correct. First tell me, sir, what is the closing balance of creditor as on 31st March 2011? How much balance it is there? Exchange difference is also there, na? So total balance is 3,25,000. But now on the date of payment, exchange rate is not 65. Exchange rate is how much? 67, which means how much I have to pay? 5,000 into 67 only I have to pay, correct? Which means how much I have to pay? 3,35,000 I have to pay. See, asset value is increased means you will not make that much payment to creditor also. You have purchased for $5,000, I will pay only $5,000, but exchange rate will change. Here I have to pay 3,35,000. But what is your balance in your books of accounts? Difference will be transferred to P&L account, exchange loss. Difference will be transferred to P&L account. Here I have passed the net entry. Okay, you can pass anyways. Anything is fine. I can book separate entry for exchange loss, settlement, one more entry also I can pass, but this is net entry I have passed. My asset is already carried at fair value. Sorry, other than book value, which means I have to still measure my machinery also at a closing exchange rate. Okay, they have said that revaluation amount is not changed, which means 5,500 is still continuing. So just do the calculation, 5,500 into 67 minus 65, how much it is? 11,000. 70% will be transferred to OCI, 30% will be transferred to deferred tax liability. Okay, very important question. I think in MTP also they have asked a similar question. Recent MTP also. Last exam and recent MTP also they have asked a similar question. Okay, so we have to carefully understand this. So that's it. We will stop till here. After lunch, I will discuss Ind AS 116. Okay, once this 116 is completed, then we can go. Okay, that is big standard, so it will take minimum some 2 to 3 hours. Once it is completed, we will go. Time is 1:15. Let us join at 2:15. Okay, if we start lately, we have to end up lately. So that's why we can start exactly 2:15. 2 వచ్చేస్తారా? Sorry, 2 కంటే 2:15 వస్తారు. It's okay. Let's start at 2 o'clock only then. అందుకే 2 చెప్పా. Name of the standard is what? Leases. MTP they have asked this question, so that's why we have to cover this standard very nicely. Okay, so this question also have asked too many years back. So since the institute is asking new questions, this standard also definitely there are chances to test in your exam. Okay, so let's carefully understand this. First of all, this Ind AS 116. Let me give you a little introduction about this standard. Ind AS 116. If you observe, do you remember what is the corresponding accounting standard of this Ind AS? Accounting standard also we have leases related standard, which is nothing but AS 19. Leases related standard is there. Okay, even if you have forgotten, no problem. But there what will say is different type of leases will be there. First of all, if you remember, finance lease is one type, operating lease is another type. Very good. But the thing which you have to understand is, obviously two parties will be there, lessee will be there and lessor also will be there. For these two parties, as per your accounting standard, two different treatments are there, which means for lessee, if it is finance lease, we have to follow one type of accounting. If it is operating lease, I have to follow another type of accounting. Similarly, lessor also, if it is finance lease, I have to follow one type of accounting. If it is operating lease, I have to follow one type of accounting. Ind AS 116 removed all these confusions. If it is lease, it is lease only. In the books of lessee, whether it is operating lease or finance lease, they will give you same accounting treatment which you have to follow. But this is applicable in the books of lessee only. For lessor, we still have to make the distinction between finance lease and operating lease. we will slowly understand the lessor treatment. But in this also, most important treatment is lessee only. So let us understand about that lessee treatment. But before that, first let us directly start with one example. Through that example, I will explain you the concept. So check this. This is there in your concept book only. Basic example. So page number 27. Quickly open that. Quickly open that. See. If you observe this example, A Limited have taken an asset on lease from B Limited. A Limited is called as lessee. B Limited is called as lessor. Obviously, the person who is making the lease payments will be called as lessee, and to whom the payments are made, that person is called as lessor. Lease rent is 1 lakh rupees. Lease term is 4 years. Discounting rate they have given 10%. Understand? Lease liability is also one type of financial liability only. Because morning I have explained the definition of financial liability. It is nothing but contractual obligation to pay the cash. Lease liability also is nothing but one type of liability wherein you have to pay the cash. Therefore, this is also one type of financial liability only. One more thing what you have to calculate is, see, lease term is 4 years. Discounting rate is 10%, lease rate is 1 lakh. What this standard is asking you to calculate is, these are future lease payments. Correct? This 1 lakh is nothing but future lease payments. How many years I have to make the payment? 4 years I have to make the payment. I cannot write 1 lakh into 4. Correct? I have to calculate the present value. For that present value, they have given me the discounting factor also. This is annuity. This is annuity. 1 lakh rupees fixed amount is paying. So calculate the present value and tell me what is the present value. Sorry? I want total 4 years. 3,16,987 approx. Understand? This is your liability which you have to pay. In Ind AS 16, I have explained the concept of something which is called as unwinding of a discount or interest. Correct? Initially, I will record this amount. But what I will be doing is, I will be doing something which is called as unwinding, which means every year I will book something which is called as finance cost. Every year I will book finance cost. Slowly let us understand, sir, how exactly we have to pay. And one more thing you have to understand is, if it is lease, lessor will give the lessee the right to use the asset. Lessor will only give the lessee what he will give? Right to use the asset only he will give. Whether it is operating lease or finance lease, they will prescribe the same accounting treatment for lessee, not lessor. Lessor we will discuss later. Our current focus is mainly only on lessee. Lessee, if you observe carefully, lessee have to pay some liability. That liability is called as lease liability. We have to calculate present value of future cash flows. Along with this lease liability, that person will be receiving something which is called as right of using an asset. So we have to record the corresponding asset also. Therefore, at the time of lease recognition, initial recognition, I will pass one entry which is called as, see here I have written the journal entries also, ROU asset account debit. ROU asset, because this is just like a normal asset only. Just like how you are having PP, this is also similar type of asset. ROU asset account debit. Ignore other items. To lease liability. I will create corresponding lease liability. Along with that lease liability, one more item I have to create. What is that one more item? ROU asset also I have to record. Sir, this ROU asset is just like another asset. I have to depreciate this ROU asset. I have to depreciate this ROU asset based on the lease term. Okay, based on the lease term, I have to depreciate the ROU asset. Which means what? Every year I will pass this journal entry. Depreciation account debit to ROU asset. This journal entry is very normal thing. And one more thing I have to do, which is nothing but financing. Unwinding of finance cost we will do. I will explain how to do that. Okay, first of all, this 3,16,990 is my opening balance. Initial lease liability balance. Imagine the amortization schedule. Year 1 opening balance will be this much into 10%. Just do the calculation. 316,990 into 10%. 31,699. At the end of year 1, you have to make some payment. How much payment you have to make? 1 lakh lease payment we have to make, just like hire purchase. Opening balance plus finance cost minus installment. Find out the closing balance. 248,689. This is year 1 closing balance. Year 1 closing balance. It will become year 2 opening balance. It will become year 2 opening balance. And how much is the year 2 opening balance? 248,689 into 10% minus 1 lakh. 1 lakh installment I have to pay. How much? 1,73,558. Next year opening balance into 10% minus 1 lakh minus 1 lakh 90,000. Last year I will write the balancing figure. 1 lakh is the amount of payment. Difference between this and this will become my finance cost. Difference between this and this will become my finance cost. Okay. This is the amortization schedule. Understand carefully this schedule. Every year I have to recognize this much interest. Every year I have to make this much payments. Correct? So we have to understand journal entries also. Journal entry, initial recognition, I will pass this entry. ROU asset account debit to lease liability account. Year 0, I will pass this entry. Beginning of the lease. Commencement of the lease, I will pass this entry. Sir, first year what I will write? Finance cost account debit to lease liability account. I have to increase my liability. At the same time, I also have to book what? Finance cost. How much I have to book? 31,699. Correct. My liability have to be reduced by 1 lakh rupees. Therefore, lease liability will be debited. Bank will be credited. ROU asset, what I have to charge? Depreciation I have to charge. So one more entry I have to pass. Depreciation account debit to ROU asset, which is 79,248. Same entry I have to do for balance 4 years also. Same entry I have to repeat for the balance 4 years also. This is accounting in the books of which person? Lessee. If it is lessee, I don't care whether it is operating or financial. I will do the same type of accounting in the books of lessee. Okay, simple basic example is this. So now what we have to do is, let us understand what we'll be doing is, let us understand this page, accounting in the books of lessee. Accounting in the books of lessee. First point they are saying, lessee should recognize 2 items. What are those 2 items? Lease liability and ROU asset on which date? Commencement date. So the meaning of commencement date is date on which asset is provided to lessee by the lessor. Sir, what is the meaning of lease liability? They have given present value of future lease payments over the lease term by using discounting rate. What they have said, which rate we have to use? Discounting rate we have to use. So discounting rate also, preferences are there. First preference we have to take implicit interest rate. Sir, what is the meaning of implicit interest rate? Is nothing but IRR we have to calculate of lessor. IRR of which person we need to calculate? Lessor we have to calculate, but in lease chapter generally they will give you in the question. IRR, implicit interest they will give. If they have given implicit interest rate, I have to use that rate only for discounting purposes. Present value purposes, I have to use that rate only. In case if it is not available, I have to use lessee's incremental borrowing rate. These you have to remember, because in questions they are going to ask these points. If incremental interest rate they have, if implicit interest rate they have given, I have to consider that only for discounting purposes. If it is not given, then which rate I have to take? Lessee's incremental borrowing rate I have to take. Simple point. Discounting rate point is completed. Okay, uncheck this point. Third point. They will say that ROU asset will be initially recognized at cost. Depreciation will be charged on ROU asset over the lease period of the asset. Generally, what will happen is, if the lease period is 5 years, lessor will give lessee an option. If you want, I can sell that asset to you after completion of 5 years. Because lessee is already habituated to that asset. After completion of 5 years, instead of purchasing a new asset, what lessee will do? Comfortably, he can use the original asset only, which he is using from the past 5 years. Therefore, what lessor will say like this, I will sell you the asset after the end of the useful life for some concessional price. For example, after 5 years, assume the value of the asset is 50,000. Lessee will ask you to pay only 30,000 rupees because you are lessor. Some relationship is there between you. Therefore, lessor will only ask to pay the concessional price. Understand? If here what they will say, if lessee is reasonably certain to exercise the purchase option at the end of the lease term, depreciation have to be charged over the useful life of the asset. What they are saying is normally ROU asset will be depreciated over the lease period. For example, useful life of the asset is 5 years, but your lease term is only 3 years. You have to depreciate the ROI asset only by how many years? 3 years. But if you want to exercise the purchase option at the end of the lease term, now you will also use that asset for how many years? 5 years. In that case, I have to charge depreciation on that ROI asset for 5 years. Okay, simple point, basic points, all these things are. This is a little bit important. Point number 4. Sir, what is the meaning of point number 4? Which lease payments I have to consider for the purpose of calculating lease liability? Most important, based on this numericals are tested. Understand. First thing is, lease payments means what? Payments made by lessee over the lease term. It includes, what is the first item which is included? Fixed lease payments. What is the first thing which have to be included? Fixed lease payments have to be included. Minus what they have said, lease incentives received from the lessor. They are only asking us to take which payments? Fixed lease payments, which means what should not be included? Variable lease payments should not be included. What should not be included? Variable lease payments should not be included. So right here, variable lease payments shall be ignored. Variable lease payment should be ignored. Variable lease payment shall be ignored. Now I will give few examples. You have to tell me, sir, are these fixed lease payments or are these variable lease payments? You have to tell me. Be a little bit careful and you have to tell me. See, one lease contract is there. In that lease contract, it is 5 years. They are asking every year you have to pay 1 lakh rupees. 1 lakh at the end of year 1, 1 lakh at the end of year 2, 1 lakh at the end of year 3, 1 at the end of year 4, 1 at the end of year 5. Are these fixed lease payments or are these variable lease payments? Fixed lease payments. Correct. Very good. Next. 1 lakh in the first year. It will increase by 10% in the subsequent years. First year 1 lakh, which means second year how much? Very good. Next year 1.21 lakh. Next year 1 lakh 32. Last 44. 40. Fine. More than sufficient. Are these also fixed lease payments or variable lease payments? Or these also fixed or variable? Understand. Fixed means fixed in the contract. Fixed doesn't mean it have to be same. It is very common that first year you have to pay me 1 lakh. Next year it will be increased by 10%. Next year it will be again increased by 10%. This is very common transactions. Fixed means fixed in the contract. It doesn't mean it have to be same. Normally fixed cost means what? It have to be same. But here fixed lease payment means fixed as per the contract, as per the lease term, as per the lease agreement. Okay. So here also these are also called as fixed lease payments only, because the word they have used here is fixed lease payments, but exact word which they will use is in substance fixed lease payments. What they will use? In substance fixed lease payments they will use. Now one more thing, one more example, final example. One entity is there. If that entity produces 1 lakh goods, that lessor asked to pay, for example, 50,000. If you are producing more, for example, if you are producing 1,50,000, they ask to pay 60,000. If you produce 1,80,000, they ask to pay 70,000. Are these fixed rents or variable lease payments? These are variable lease payments. Variable lease payments means according to leasing, if anything changes with the production, that is called as variable. Okay. This is variable, but this is not variable. This is also fixed lease payments only. Important point you have to understand. Okay, fine. Now, second part, if you observe, what is this? Payments linked to interest rates or index CPI. Normally, variable lease payments I have to ignore, but two types of variable lease payments I have to consider. So those two types of lease payments are nothing but interest rates or index. Interest rate means LIBOR, MIBOR, etc. If they have given, if your lease rent is changing with these rates, then I have to consider those. They will give you the interest rate simply, we have to calculate the revised lease rent. That much simply they will give. Okay. But just remember, if it is linked to interest or index, I have to consider those in my lease liability calculation. Other variable lease payments have to be ignored, but only these two lease payments have to be considered. Most important point. This is fine. Example, LIBOR, MIBOR, etc. CPI also they will give. One person is there. To that person, you will exactly understand whatever I am trying to say. What is the third point? What they are saying? Exercise price of the asset. If it is reasonably certain that lessee will purchase the asset. Sir, the meaning of lease payments are nothing but whatever the amounts which are paid by the lessee to the lessor. If lessee is expecting that he will purchase the asset after the lease term, which means he have to make the payment of that purchase price also, that purchase price also have to be included. That purchase price also have to be included in the calculation. That you will only do when you are reasonably certain to exercise that option. If you are not reasonably certain to purchase, then it will not be included. Question will give you hints. Whether you are reasonably certain or whether you are not reasonably certain, question will give you the hints. Last point, guaranteed residual value by the lessee. Sometimes what lessor will ask is, if the lessee is uses the asset majority of the lifetime, if lessee's employees have not carefully using the asset gets damaged. If asset is getting damaged, they may not get residual value. So that's why lessor is asking, lessee, it's okay, you have to give me some guarantee with respect to that residual value. If in case I am unable to collect my residual value, you have to pay me the difference amount. That also I have to include, because that is also paid by which person? Lessee only. That is also paid by which person? Lessee only. So all these things we have to calculate. Very, very important thing. Lease liability calculation is the most important calculation which you have to do. Okay. Tell me, what is the discounting rate which we have to use? First preference, what we have to give? Implicit interest rate is nothing but lessor's IRR. IRR, if you remember, it is that discounting rate at which your future cash flows are exactly equal to your present value, present outflow. Correct? That is IRR calculation. That much in depth they will not ask, but this is how we have to calculate. If this is not available, what is the second difference which I have to do? Incremental borrowing rate of the lessee I have to take. Carefully think and tell me, sir, will I include variable lease payments in my lease liability calculation? Variable lease payments. No, but one type of variable lease payments. What are those? Very good. Related to interest or CPI. Those only I have to include. Very good. LIBOR, MIBOR, etc. Those only have to be included. One important area where the questions are asked is, we have to calculate something which is called as lease modification. Sir, lease modification means, understand, sometimes you have decided to enter to use 1 lakh square feet. 1 lakh square feet and the lease term is 5 years. Initially we have agreed this, but what have happened is your business is expanded. This 1 lakh square feet is not sufficient. Now you want extra. You want extra 50,000 square feet. Here, scope of the lease is increased. Here, what is increased? Scope of the lease is increased by increasing the area. Like this also can happen. And one more thing, sir, I don't want extra, but 4 years are completed. Still, I want to use your asset. Therefore, he can extend the lease term also. Initially, it is 5 years. Now, I am asking to exceed by 5 years, another 5 years. This is also a lease modification. Here also, increase in scope is there, but in the term of lease term. But in terms of lease term, increase is there, which means modification can be anything. And one more thing also can happen. For example, till now onwards, they are charging only 1 lakh rupees. But after 5 years, they have decided to increase the rent. That is also a kind of modification only. Reasons can be anything. I have asked extra space, therefore they are increasing. I am increasing, I have asked to increase the lease term, that's why they are increasing. Multiple things can happen. This also can happen, reverse also can happen. Reverse means, for example, I am using 1 lakh SFT right now. The space is getting wasted. So I don't want this total 1 lakh, I only want 60,000 SFT. Which means this is a decrease in scope. Correct. Last but not the least, initially I have entered for 5 years, but now 5 years is not required. I wanted to reduce the scope by taking the lease only for 3 years. Like this also can happen. All these are nothing but lease modifications. Very, very important modifications. So let us quickly understand, sir, how we have to do this lease modifications. First one, just remember these 3 steps. Different modifications you have to do differently, but it is very, very simple. Carefully let us understand. First one is type A modification. What is the first one? Type A modification. So type A modification, what is that? Let us understand. See, initially you have decided to give 1 lakh SFT, and 1 lakh SFT value, assume the lease rent is 1 lakh rupees. Now what have happened? You wanted to use extra 50,000 square feet. Normally, if that 50,000 square feet standalone selling price, which means if it is leased to any other person, they are charging 60,000 rupees. Assume this is the normal SSP. If they are also charging 60,000 from you, which means it should be treated as a separate lease contract, because it is not having any interrelation with your existing lease. Because from outsider also that person is charging 60, from you also that person is charging only 60, which means it is a modification which have taken place in terms of standalone selling price. Sir, if it is taken at standalone selling price, it is called as, sorry, we have to treat this contract as a separate lease contract and no modifications will be made in this contract. Okay, that's what I have explained in type A modification. So check this, if it results in addition of assets on payment is in the ratio of SSP, I have to treat it as a separate lease contract. Important, easy point also. This they will not generally test in the exam. SSP means standalone selling prices. We can write if you want. Standalone selling prices, which means the market price. You can say anything. Normally for outsiders also, they are selling at the same price. That is the meaning of standalone selling price. Okay, next. These are important. Type B modification. What they are saying. First one, increase in lease term. What is the first one? Increase in lease term. Second one, increase in area and lease payment also. Both have to be done. Then only I have to choose this. Area also have to be increased. Lease payment also have to be increased. And third one, increase or decrease in lease payment. Write this point, without change in lease term. 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 Okay, sir, if in the question any of these 3 things have given, I have to follow these 3 steps. What I have to follow? These 3 steps I have to follow. Sir, first of all, what modifications are covered here? We have to understand. What is the first one? Lease term is increased. Second one, increase in area. Along with that, what is also increased? Payment is also increased. What is the last one? Increase or decrease in lease payment without decrease in, without change in lease term. Understand. If these 3, any of the adjustment have given in the question, first I have to calculate this step. What is the first step? Tell me. ROU asset, lease liability. On which date I have to find out? Date of modification I have to find out. Sir, modification means 3 years I have continued the original lease. In 4th year, I want the change. From that 4th year onwards, I have to do this modification accounting. This is the first one. First step, what I have to calculate? Tell me. 2 items I have to calculate. What is the first one? ROU asset, lease liability. So on which date I have to calculate? Date of modification I have to find out. Very good. Sir, ROU asset, if you want, you have to prepare something which is called as depreciation schedule. If you want ROU asset, what you have to prepare? Depreciation schedule. That is very simple. I will write year, opening balance, depreciation, closing balance. On the date of modification, I will find out that. Very simply, I will get. Second one, what I want? Lease liability, if you want, you have to prepare amortization table. Year, opening balance, finance cost, lease liability, closing balance. Like that, I have to find out the lease liability balance also. On which date I want? Date of modification. Second step, what I have to use? I have to calculate revised lease liability. On which date I have to calculate? Date of modification. Using which discount rate? Using the discount rate as on the date of modification, which means new discounting rate they will give on the date of modification. Whatever they have given, I have to recalculate my lease liability based on new lease term, based on new lease payments. I have to recalculate my lease liability, but which discounting rate I have to use? On the date of modification discounting rate I have to use. Simply two steps. Third step, difference in the above will be adjusted in both these amounts. Okay. Directly, let us start with one question, then you will understand whatever I am trying to say. But just remember the steps. And you also have to remember in which case I have to use these steps. In which cases I have to use these steps, tell me. Increase in lease term, increase in area and lease payment, increase or decrease in lease payments without changing lease term. Open the workbook, let's solve one question. Come to question number 11. Question number 11. See, first, let us read the question. Lessee enters into 10-year lease for how much? How many meters? 5,000 square meters of office space. They are saying, sir, annual lease payments are how much? 1 lakh rupees payable at the end of each year. This is also important. The interest rate implicit in the contract cannot be readily determined, which means they are saying implicit rate cannot be found out. Therefore, what we have to use? Lessee's incremental borrowing rate I have to use. They will give that, check that. Is how much? 6% per annum. Next, what have happened? At the beginning of year 7. Beginning of year 7 means what? End of year 6. Beginning of year 7 means what? End of year 6. What have happened? Lessee and lessor agree to amend the original lease by extending the contractual lease term by 4 years. The annual lease payments are unchanged. Lease payments are still same. 1 lakh rupees payable at the end of each year from year 7 to year 14. What have happened in this question? They have increased the lease term. Normally, original lease term is how much? 10 years. Is it 10 years only? But now they have increased it to 14 years, which means another 4 years they have increased. Correct? Very simple. See, they will give you new discounting rate also. How much it is? 7%. This is on which date? Date of modification only. Correct or not? Understand. You will understand that modification have taken place after completion of 6 years only. Which means till those 6 years, I will continue original accounting only. Original accounting means what? I will take 1 lakh, 10 payments only I will take. 10 years only I will take, correct? So first what we have to calculate here is, one second. First I have to find out both items, ROU asset and lease liability on commencement date I have to find out. Based on this commencement date, if I want, I can prepare depreciation schedule or amortization schedule I can prepare. Okay. So first tell me, sir, what is my original lease liability balance? Original lease liability balance calculation I want. 1 lakh you have to pay. 10 years is the lease term. Discounting rate is how much? 6%. So calculate this. Approximately I have written 7,36,000. You may get 36,800 or something. 8, it's okay. You can write, sir, because simplicity purposes, I have ignored that last 8, whatever you are saying. This is approximately 7,36,000 rupees. This is what, which value? Lease liability value. Sir, at the initial recognition, whatever the journal entry which I have to pass, tell me. This asset, very good, this entry I have to pass. Sir, one more thing what you have to do is, I have to find out two values on which date? Date of modification. What are those two values? ROE asset also I have to find out, and lease liability also I have to find out, which means, sir, can you find out ROE asset balance? Can you find out ROE asset balance? 6 years are completed. 6 years depreciation I have to deduct. 2,94,400 will become ROU asset balance. Once calculate everyone, 2,94,400 should become my ROU asset balance. Okay. ROU asset balance. Next thing, one more item I have to calculate. Correct. What is that one more item? Lease liability also I have to calculate. Two alternative ways are there to calculate this lease liability. One way is prepare amortization schedule. One way is prepare amortization schedule. Second way is also there. Sir, what is that second way means? This is the shortcut. In exam, you can use this shortcut, no problem. But if you are not understanding this shortcut, I recommend you to prepare amortization schedule. You will get the same answer. Year, opening balance, finance cost, lease payment, closing balance. After 6 payments, we have to find out the value. Okay, sir, but here what is the shortcut? Let us understand. I am standing at the end of year 6. I am standing at the end of year 6, which means original lease term still how many years are there? 4 years are there, which means I will get 4 lease payments. I will get 4 lease payments from the date of this modification. Simply what I have to do, if I want the value, I have to take the present value of those 4 lease payments. If I take the present value of those 4 lease payments, I will get the exact value. Just try. 1 lakh into present value of annuity factor. Sorry, this one. 6%, 4 years I have to calculate. How much you will get? Please confirm this is correct or not. 510, it's okay. 500 approximately. If you don't understand this, I recommend you to prepare amortization schedule. In exam, this is shortcut. Obviously, we'll not have time. So we have to follow this shortcut. It is correct only. Always it will be correct. But you have to understand why I am calculating like this. Don't consider modified lease term. I am standing on the date of modification. Still, I don't know what is the date of modification. What is the modification? I don't know. Original lease, 4 payments are pending. I have calculated the present value of those 4 lease payments. Or you can calculate amortization schedule also. Anything is fine. Correct? Now carefully understand. This is my ROU asset existing balance. This is my lease liability existing balance. Sir, second step what I have to calculate? I have to calculate revised lease liability. Using which discounting rate I have to find out? New discounting rate, which means on the date of modification, whatever the rate they have given, that discounting rate I have to use. Sir, what rate they have given? 7%, I think. But I think they have increased the lease term. Sir, they have increased the lease term to 8 years. So this time, consider the revised lease term. Lease rent is same, it is not changing. 1 lakh into present value annuity factor, 7%, 8 years. Tell me how much it is. Present value of annuity factor 7%, 8 years. 1 by 1.07, 8 times. Some annuity you have to take and into 1 lakh if I do, I will get this. Carefully understand. This should be my new liability balance. This should be my new liability balance. Sir, but already you have calculated some lease liability. Your existing lease liability is how much? Do I have to increase or decrease? How much I have to increase? I have to increase the liability, correct? So I will write 2 lease liability. I will write 2 lease liability. As a debit, I have to write ROU asset. Because the difference will be adjusted in ROU asset. See, because of this, my right of use also is increased. Correct? I will use for extended lease term. Therefore, ROU asset also will be increased and lease liability also will be increased. Correct? Simple modification. This type of question I can ask for 7 marks. Easy modification, but you have to understand which steps we have to follow. Where to use revised discounting rate, where to use old discounting rate, you have to understand. Okay? Easier question. So that's it. There is nothing complex in this question. Your lease term is changed. Prospectively, we have to give. Balance 8 years, we have to depreciate. Okay, now come to one more thing, which is nothing but this one, concept number 8. Concept number 8, which is nothing but lease remeasurement. Lease remeasurement in the books of what? Lessee. In the books of lessee. See, just now what we have discussed modification. But this is what? Remeasurement. There is little bit difference between these two terms. Lease modification means both lessor and lessee will sit together. They will do some discussions. I want this extra space, so please consider me. Like this they will do, and they will change the terms and conditions of the lease term. That is called as lease modification. This lease remeasurement is nothing but these are internal changes by the lessee. Sir, what are these internal changes? Let us try to understand. See, I have explained variable lease payments are there. Normally, variable lease payments will not be included in my lease liability calculation. But if it is related to interest rate or CPI, I have to include these items also. Correct? So, carefully understand, sir, if there is a change in remeasurement because of change in interest rate, if there is any change in future lease payment, or if there is any change in expected value of guaranteed residual value, what I have to treat those changes as, those changes are insignificant remeasurement. Those changes are what? Insignificant remeasurement. If it is insignificant remeasurement, just read whatever I have written here. Apply the same accounting as in point B, lease modification. But what I have to use? Original discounting rate instead of modified discounting rate. Last, I have used the modified discounting rate, if you remember. But if it is insignificant modification, instead of this modification date, I have to use the original discount rate only. Okay, one beautiful question is that. That question also they can ask for straight away 7 marks. Let us cover that point also. Another 2 types of remeasurements are also there. So those 2 types are nothing but, initially what I have thought is, initially I have decided to purchase the lease. Sorry, I have decided to purchase the asset after the end of the lease term. But after completion of 3 years, I have understood that asset is stupid asset. I don't want to purchase that, which means if I don't want it to purchase, my lease payments will change. If your lease payments are changed, my lease liability also will be changed. That is the meaning of lease remeasurement. Second thing is, initially, I have decided to renew my lease. But later, same thing, lessor is not that much good. So I wanted to discontinue such renewal. Initially, including the renewal, I have taken my lease term as 15 years. But if this renewal is not happening, my lease term will be only 10 years. Therefore, this kind of modifications are called as significant remeasurements. Sometimes it can be changed due to variable interest rate also, but that is insignificant remeasurement. If it is significant remeasurement, just copy paste point number B. Just copy paste point number B. But if it is if it is insignificant, I will copy B. But instead of modified discounting rate, what I have to use? Original discounting rate only I have to use. Okay, this is also very, very important discussion. So one question is there. Let us quickly cover that question. Okay. Come to question number 7. Come to question 7. Very, very important. Question number 7. Sometimes what will happen is, in the same lease, remeasurement, significant remeasurement also will be there, insignificant also will be there. If both are there, obviously my preference will be significant only. I have to do the significant accounting only. Okay, simple point. Sometimes significant and insignificant both can also be there. In this question, both are there. Let us understand this question, very, very important question. So let us check this. Entity W entered into contract for lease of retail store with which entity? Entity J, in which date? January 1st, 20x1. They are saying initial lease term is how much? 5 years with a renewal option of further 3 years. The annual payments for the initial term is how much? 1 lakh. Renewal term is how much? 1 lakh 10,000. Let us understand the question. Sir, first of all, what is the original lease term? I guess renewal 3 years. Sir, what are the lease payments in the original lease term? 1 lakh. In the extended lease term? 1 lakh 10,000. Very good. The annual lease payment will be based on the annual increase in the CPI, which means it is a variable lease payment but linked with CPI. Therefore, this I have to include in my lease liability calculation. Important. Something they have given at the end of the preceding year, which means the payment due on 1120x2 will be based on the CPI available at 31st December 20x1, which means last year CPI. On that basis, my current year lease rent is going to change. Okay, that is the point which you have to understand. And one more thing, CPI dates amounts they have given at the lease commencement date is 120 and 125 respectively. It is just like indexation. It is just like index numbers. 1120x1 it is how much? 120. 1120x4 it is how much? 125. Again they are saying at the lease commencement, entity W did not have a significant economic incentive to exercise the renewal option. On the date of commencement, they are saying they don't want to extend. If they don't want to extend, tell me what is the original lease term? Which means starting onwards, I have been assuming I won't continue. Initial lease term, I have taken only 5 years. Correct? But let us see what they are saying. In the first quarter of 20x4, entity W installed unique lease improvements into the retail store with an estimated 5-year economic life. What they are saying is they have did some modification in their premises, because of which they want to do the extension. If they want to do the extension, their lease term will change. In this case, if you observe, 2 remeasurements will be there. What are those 2 remeasurements? First of all, exercise option is also changed. Sorry, not exercise option. Exercise lease term is also changed. Renewal is also changed. Renewal term is also there. Second thing is what? Variable lease payment is also changed. Variable lease payment is also changed. Okay. And one more thing, if you observe, here you have to follow calendar year. The total question is based on the orientation 1st January, 31st December, 1st January, 1st January, like this they have given, which means it is calendar year question. It is which question? Calendar year question. One more thing, here we have to assume payments are made at the beginning of the year. What we have to assume? Payments are made at the beginning of the year. Okay, payments are made in advance. This is the assumption which we have to make. Sir, why we have to assume means total orientation of the question. If you observe, here they have used the word 1120x2, which means payment are made at the starting only. Okay, advance payment you have to make. Advance lease payment we have to make. This is the thing which you have to understand. In your SFM, I think you already know, sir, if payments are made at the end, how to find out the present value? If payments are made at the beginning, how to do the present value also, I think you have understood it SFM. Okay, but in this question you will understand, don't worry. This is the total question. In this question, significant remeasurement is also there, insignificant remeasurement is also there. If significant is there, use the significant only. What is the significant? Apply point number B modification as it is. What is the date of modification? Tell me. What is the date of modification? This one. 1120x4 is the date of modification. Correct? Fine. Point number B means what items I have to calculate? Tell me. Point number B modification, which means whatever the question which we have solved previously, what items I have to calculate? ROU asset I have to calculate, and lease liability also I have to calculate. On which dates? Modification dates I want. If I want to calculate modifications, first I want commencement date. First I want commencement dates, correct? So let us find out commencement dates. But I have few doubts. Sir, initially on the date of commencement, have I expected to renew that lease? Am I expected to renew that lease? That is after 4 years I have thought, correct? But initially my estimation is what? Only 5 years. Lease rent is how much? 1 lakh. Lease rent is how much? 1 lakh. Therefore, I have to calculate the present value like this. So check this part. Initial lease period is 5 years. I have just written the question, whatever they are saying. Renewal 3, lease rentals 1 lakh, 1 lakh 10,000 that I have written. What is the step number 1? Commencement date I have calculated. This is the thing which you have to understand. Sir, if lease payment is made at the beginning of the year, I should not discount that amount. If any lease payment is made at the beginning, there is no point of discounting. That is the only point which you have to observe. So check this. Years. First payment I will write year 0. Because right now I am making the payment. If you are making the payment right now, you should not discount that amount. Okay. So here, first payment 1 lakh, discounting will not be done. Therefore, total 1 lakh I will write. Total 1 lakh I will write here. Next, do the 4 calculations. For these 4 amounts, I have to find out the present value. One shortcut is also there. If you know this, you can also calculate this part also. Okay. I will take 1 plus 4 years discounting rate I will take. That also you can, if you know that, you can use that part also, or otherwise you have to calculate the present value like this, because in this question payments are made at the beginning of the lease term, which means payments are made in advance. So we have to calculate like this. We have to calculate like this only if payments are made at the beginning. Okay. Is this correct or not? 4,54,600 approximately I have got the figure. This is on which date? Commencement date. This is on which date? Commencement date. But I want values on which date? Date of modification. But I want values on the date of what? Modification I want. Sir, modification is done on which date? Tell me. 1st January 20x4. Which means, sir, how many years are completed? Calculate. 3 years are completed. Therefore, ROU asset should be depreciated by how many years? 3 years. Correct. So just calculate this amount. Just calculate this amount. ROU asset after completion of 3 years depreciation will be this much. 1,81,840. 1,81,840 is my lease liability calculation. ROU asset calculation. Correct. One more thing I want. What I want? Lease liability also I want. Lease liability on which date I want? Date of modification I want. Sir, if payments are made at the beginning, one change you have to do in the amortization schedule. See, your lease liability is how much? But I will not make my first installment at the end of year 1. I will make right now. Therefore, interest will be calculated after removing this 1 lakh. Because on this 1 lakh, I will not get any interest. Because I am paying right now. So, on that amount, interest will not be calculated. Sir, what you are trying to say means, here I will write this. First, I will write the lease liability amount. Then I will write the opening balance. First, I will write the lease liability. Then I will write the opening balance. Sir, normally, my opening balance is this much. But 1 lakh is already paid. If 1 lakh is paid, this is the balance. On this, I have to calculate the finance cost. On this only, I have to calculate the finance cost. Okay, 3,54,600 into 5% if you do, you have to get this amount. 17,730 we have to get. Okay, now the thing is just add these 2 items. Just add these 2 items. 3,72,330. 3,72,330. From this, deduct this lease liability. Deduct this lease liability. 2,72,330 I will get. Into 5%, this is not new thing. Already you have did in your SFM. In your SFM, if payments are made at the beginning, you have to prepare the amortization schedule like this only. Maybe the formats will change, but this is the process. Okay, simple thing. I want this date. This date value is nothing but how much? 1,95,244. This is the long method, but if you want shortcut, shortcut is also there. Shortcut is also there. Sir, tell me what is the initial lease term? Initial lease term is 5 years. How many lease payments are completed? 3 lease payments are completed. How many lease payments are still pending? 2 lease payments. 1 lease payment I will receive exactly right now. 1 lease payment I will receive after 1 year. Correct? So I have to discount those 2 items. I have to discount those 2 items. 1 year, 1 payment I will discount. 1 year is exactly there at the current year only. Therefore, I have to take 1 plus 5%. 1 year I will take, which will give me 195,240. 1,95,240 will be the answer. This is my lease liability balance. RO asset balance is how much? 1,81,840. Now, if you observe, I have to calculate revised lease liability. What I have to calculate? I have to calculate revised lease liability. Sir, on which discounting rate I have to calculate? New discounting rate. Because in this question, significant remeasurement is also there. If significant remeasurement is also there, I have to calculate like this. Here, one thing you have to observe. Sir, from this date onwards, lease payment is changed. Because CPI is changed. What is changed? CPI is changed. If CPI is changed, my lease payment also will be changed. See, sir, for 1st January 20X1, my my indexation number is 120, my CPI number is 120, but at that time, my lease rent is 1 lakh, I have fixed. If it is increased, my lease liability also should be increased. If it is increased, my lease liability also should be increased. So this is the formula I have to write: 1 lakh by 120 into 125. This is not a separate formula, normal indexation, basic common sense. 1 lakh by 120 into 125. This I won't do in present value calculation because I will receive exactly right now. 1 lakh divided by 120 into 125. Next year also I have to do this amount only. But from that year onwards, my renewal term will start. From that renewal onwards, what is my initial lease rent? 1,10,000 is my initial lease rent. But that is based on earlier CPI. Now the CPI is changed. Therefore, I have to change this also. 1,10,000 by 120 into 125 you have to do. 1,10,000 by 120 into 125 you have to do. Tell me how much is this? 114,583 is the amount. This amount only will continue for the next 3 years also. In the lease term, this amount will be continued. This is the important observation which you have to make. This, if you calculate the lease liability, so just confirm is it correct or not? Revise lease liability calculation. This I will take directly like this. These figures we have to discount. Is it matching? Revise the lease liability, approximately it should be this much. If you are finding it difficulty, I think you have some little doubt in this discounting. Okay, if it is discounting, I can't help. Okay, if it is concept, I will explain, but if it is discounting, I can't help. Okay, for the first year, no discounting, balance years, we have to do the discounting. 491,375 will be my lease liability amount. Why I take 1 lakh? Initial lease term is 5 years. Extended lease term is 8 years. After 5 years, my extension will start. This is 7th year. 4th year, 5th year, 6th year. 6th year means revised term. Therefore, I have to take 1,10,000. Okay. Now, this is my new lease liability. This is my correct lease liability. But existing lease liability is how much? difference is this much. So do I have to increase or decrease? Increase my lease liability, therefore this entry I have to pass. ROU asset account debit to lease liability account, I have to write this much, 297, 135 is my answer. Okay, very important question. This question also, both three measurements are covered, significant as well as insignificant. Definitely you have to practice this question. Okay. This I have already shared in PDF. If you want, I can share with you. Concept notes. Huh? Okay. This one. Is this? Here both are there. That's what I'm saying. See, this is also there. Renewal term is also changed. Like, because earlier I have not opted for renewal, but now I am opting for renewal because this is also there. Significant, insignificant, both are there. Consider it as significant only. You only we have to take 5%. That's it. Because it is insignificant, therefore we have to change the interest rate. If it is insignificant, you can still continue the original discount. Okay. Let us check one more question, question number 12 also. Another important question, question number 12. Write in brackets decrease in scope. Decrease in scope or area. Decrease in scope or area. Decrease in scope or area. Okay. First of all, before understanding this, we have to know, sir, what are the steps we have to do in case of decrease in lease term. So check this. This is type C modification. This is which modification? Type C modification. Here I have categorized into type A, type B, type C. If you check the whole standard, they will just directly give it in a very layman terms. So it will not be understood by a normal person. So what I have did is simply you can remember like this. Whatever they have given, you just apply these following steps, totally fine. Okay. Type C modification means if lease term is decreased or area or lease both are decreased, along with this lease payment is also decreased. Along with this, what is also decreased? Lease payment is also decreased. Sir, if there is any change like this, what I have to do is, first I have to follow same steps as above. First I have to follow same steps as point number B modification, but one more thing I have to calculate. Sir, what I have to calculate is I have to calculate something which is called as gain or loss due to modification. First, what I have to calculate? Gain or loss due to modification. If it is decrease in area, I will use this formula. If it is decrease in area, I will use this formula. Reduction in ROU asset will be this much. Don't read it as a separate formula. While solving the question, I will explain. Reduction in lease liability, I have to solve this. Difference in the above will be treated as gain or loss due to decrease in area. If it is decrease in lease term, just do this small correction. It is not area, it is lease term. It is lease term. It is not the original area, it is balance lease term. It is not the original area, it is the balance lease term. balance list amount. Balance list amount. This is reduction value I have to check. Okay. For the balance, how much I have to cancel, I have written that formula. Okay. This is most advanced. No questions are there in your book. No questions are there, which means CMA not there, but ICAI questions are there, but those are not required because it is not possible for your institute to go into that much in depth because many questions are there. Modifications, whatever we have discussed, all those questions they can ask. Lesser accounting is also there. They can ask many questions. There are, I think, not even 0.0001% probability that they will pick this question. But still, if they have picked it, this is the formula you have to remember and you have to solve that question. Okay, this we can solve. For this, we are having a question. Okay, see. Let us solve this. It is decrease in scope. Therefore, I have to see point C modification. I have to calculate. Okay, which means as it is point number B, I will find out first. Then I will find out something which is called as gain or loss due to modification. Also, I have to find out. First, let us check this question. Lessee enters into a 10-year lease for the 5,000 square meters of the office space. Annual lease payments are how much? 50,000 payable at the end of each year. If it is end of each year, discounting problem will totally go. But if it is beginning, you have to be careful. Okay, it is end. Therefore, normally we have to do the discounting. Interest rate, they have given the story, cannot be determined. Therefore, lessee's incremental borrowing rate is how much? 6% per annum. 6% per annum is a lessee's incremental borrowing rate. After that, what they are saying, at the beginning of the year 6, beginning of year 6 means how many years are ended? 5 years are ended. Lessee and lessor agree to amend the original lease to reduce to how much? 2,500 square meters. Initially, it is how much? 5,000. Now it is reduced to 2,500 square meters. If the square is, if the scope is reduced, obviously they will reduce the lease term also. Correct? The annual fixed lease payments from year 6 to 10 are 30,000. Till now, I have calculated 50,000, but now onwards it is how much? 30,000. Lessee's incremental borrowing rate is 5% per annum. How should the said modification be accounted for? Okay, easy question. First, I want which values? First point number B modification as it is, we have to calculate, which means I want ROU asset and lease liability on which date? Modification date I want. Second, I have to calculate revised lease liability using new discounting rate I have to find out. Because point number B means what we have to do? This one. Discounting rate on the date of modification only we have to find out. Correct? Therefore, new discount rate. But after that, I have to calculate something which is called as gain or loss due to modification. That we will understand. But before that, let us solve this question normally till that revised step. Okay. So question number 12. So check this. Initial lease term is how much? 10 years. Initial lease rent is how much? 50,000. These rentals 50,000. Discounting rate 6%. This is how we have to calculate the lease liability. Just cross check, is it correct or not? $3,68,000 approximately. 6 years, 10 years. Sorry, 10 years, 6%. Approximately 3,68,000. Okay, 4 rupees, but I have written 0. Approximately. What is the entry which I have to pass? 3,68,000. This is the entry which I have to pass. Sir, but I want not on the date of commencement. I want on the date of modification. Correct? I want on the date of modification. See, here I have calculated like this, but you can write normally also. 3,68,000 minus how many years are completed? 5 years are completed. If 5 years depreciation I have deducted, I will get this amount. Sixth year beginning anukunta kada. Beginning of year 6 means 5 years are completed. Okay. So this will become my ROU asset balance on the date of modification. Like this, you need to solve. You can write it like the shortcut also based on your time. This is 1,84,000. I have to calculate one more item which is called as lease liability. Correct? Lease liability. This is long method. If you want, you can prepare amortization schedule, or you can directly write this point also. So how I get this point? Still, how many payments are there? 5 payments. For those 5 payments, based on original discounting rate, I have to calculate the present value. Anything you will get the same. If you are confusing in this, I recommend you to solve this only. Lease liability. Ten. Original list. Modification I know after the end of year 5, correct? So original I will record 10 years only. Okay. So check this. 210, 618. Some approximation I have taken. Maybe I have taken some different discounting rates and all. So sorry, different approximations. So that is the reason. 210, 609. You can all take this also. This also is totally fine. Before writing that journal entry, you have to calculate one more thing, which is called as this thing. What I have to calculate? Gain or loss due to modification I have to calculate. In this question, they have reduced what? They have reduced the scope. They have reduced the scope by reducing the area. Correct? Which means if you check this, in case of decrease in area, this is how I have to calculate. Closing balance of ROU asset on the date of modification into decrease in area divided by original area. My original area is 5,000 SFT, but my decrease is how much? 2,500. In this question, both are same. Balance also 2,500, decrease also 2,500. In this question, both are same, which means I will write like this. 1,84,000, whatever you are having, that is for total 5,000 SFT, but 2,500 is reduced, so I have to reduce your value also. I have to reduce this ROU asset value also. So this 1,84,000, how I have got this figure? Correct? This 1,84,000 balance is for total 5,000 SFT, but 2,500 is cancelled. So I have to reverse that liability also now. So first I will calculate this amount. Similarly, do that for lease liability also. Lease liability is 2,10,619 for the total 5,000 SFT, but I have to cancel 2,500. Therefore, this will become my lease liability. This will become my lease liability. This will become my lease liability reduction. Okay. See, if I want to recognize lease liability, I will credit lease liability. If I want to reduce lease liability, what I have to do? I have to debit the lease liability. Sir, lease liability, how much I have to reduce? This much. 1,05,310 I have to reduce. ROI asset, how much I have to reduce? 92,000. Ledger will not tally. Difference is nothing but your gain due to modification. Because, sir, my lease liability is reduced this much. My asset is reduced this much. My liability is reduced more than the asset. Therefore, it is my gain. I have to record that gain to P&L account. My liability is reduced more than the reduction in my asset. If your liability is reduced more, it is a gain. Therefore, I have to transfer that gain to P&L account. Okay, simple. Lease, here I am not creating liability. Therefore, I have reversed the entry. Lease liability will be debited, ROI asset will be credited, gain will be transferred to P&L account. One more step we have to do. What is that step? Revised lease liability I have to calculate because modification still I have not considered. Correct? Revised lease liability after modification using new discounting rate. New discounting rate means 5%. And what is the new discounting rate? Sorry, new lease rental is how much? 30,000. Still 5 years are left. Therefore, this will be my new lease liability. This will be my new lease liability. How much it is? 1,29,884. But understand one more thing. Sir, what is my existing lease liability? This is your total, but you have reduced it this much. You have reduced it this much, so this is my closing balance. How much it is? 1,05,309. Sir, 1,05,309 should become this much. Should become this much. I have to increase. How much? How much I have to increase? So this is the entry which I have to pass. ROU asset account debit to lease liability account 24,575 I have to pass. Okay. Just a minute. Okay. If it is decrease in lease term, we have to find out like this, but this is not relevant for us. No questions are there, but you can just understand what is the formula. Then you can aram say copy this point also. Modification fine. Here they have given, check this. Closing balances of both lease liability and ROE after the above adjustment. Again, I have to calculate revised lease liability on the date of modification using the discounting rate on the date of modification. Such difference will be again adjusted in ROE asset as well as lease liability. Okay, these steps I have not discussed it, but first we have solved the question. Then also we can copy paste this. Okay, fine. And one more thing is also there. Type D modification. This is also not there. No questions are there. Type D modification means lease area and payment will be increased. At the same time, lease term is also will be decreased. Which means lease term decreased. Initially, I have entered for 5 years. I have reduced it to 3 years only. At the same time, initially I have entered for 1 lakh SFT. I have increased this to 2 lakh SFT. One increase and one decrease both are there. Sir, if one increase and one decrease both are there, we have to do this. But questions are not there. If you want, you can check this. Otherwise, you can even ignore this part also. Okay, totally fine. Lease modification accounting we have completed. Now, another very important area in this standard. Question number 9. Question number 9. They will say X Limited. One second. X Limited LSC entered into a lease agreement with Y Limited LSR to lease an entire floor of a mall for a period of 9 years. Annual lease rent is how much? 1,40,000 payable at the each year end. They have taken some empty space, entire floor they have taken for 9 years. To carry out its functions smoothly, X Limited entered into another agreement also with Y Limited with the same person. To use the facilities owned by Y Limited such as passenger lift, DG sets, power supply infrastructure, parking space, etc., which are specifically mentioned in the agreement for annual services charging amounting to 2 lakh rupees. What they are saying is, with the lessor, for the use of that space, they are paying lease rental of 1,40,000. Along with this, they have also paying additional amounts to use these items also. Lift is also there, DG sets, generator sets are also there, power supply infrastructure, parking space. For these amounts also, it is paying some extra amount. Which means, sir, here if you observe, leasing component is also there, space is also there, plus non-leasing components are also there. So in case of leasing and non-leasing components, if they are saying, first of all, tell me what is the consideration which you are paying? 1,40,000 plus 2 lakh rupees. Totally, I am paying 3,40,000 rupees to the lessee who is Y Limited. Sir, what I have to do is you have to find out the standalone selling prices. In that ratio, I have to bifurcate. Leasing component Ind AS 116 will be applicable. Let me explain that. See, check this. The facility agreement shall coexist with the lease agreement and it will terminate along with the termination of lease agreement, which means that interlinked is what they are trying to say. If the lease agreement terminates, facilities also will be terminated. Okay, read this. X Limited have assessed standalone selling price of the lease agreement is 2,40,000 per annum and that of the facilities agreement is 1,60,000 per annum. They are saying one more thing. X Limited has not elected to apply the practical expedient of not separating the lease components from non-lease components. I will explain what is this practical expedient, but let us solve the question. See, standalone prices are how much? 2,40,000 for lease, 1,60,000 for facilities. What I have to do is understand, sir, this is the total consideration which they are paying, 3,40,000. I have to allocate this in the ratio of their standalone prices. I have to allocate this in the ratio of their standalone selling prices. Allocate this. 3,40,000. 3,40,000 is the total consideration. Okay. So what I have to do in this ratios, I have to do the allocation of their standalone selling prices. Just to do total consideration into 60%. Which means this is for the lease agreement. This is for the non-lease agreement. Sir, if it is for the lease agreement, I will apply Ind AS 116 only for this component only. Which means like this. I will calculate only for 2,04,000. Okay. I will calculate only for the 2,04,000. Individual price may be different. Individually, you are paying only 1,40,000 for that lease. But that is not correct because it is not standalone selling price. Standard is asking you to separate that item in the books of lessee like this. So we have to do like this. Very important question. This question is already asked in the exam. No modifications are there in this question, just basic common sense. You have to allocate the consideration in the ratio of their SSPs. That's it. Nothing more important in this question, but you have to refer this question. Okay. So check this part. This is what I want to explain. Lease and non-lease components in a contract. Page 30. Page 30. Sir, if there is lease and non-lease component in a contract, in the books of lessor, obviously I have to allocate the consideration between lease and non-lease in the ratio of their SSPs. Lessee also we have to do the same. Lessee also we have to do the same thing. Lease component Ind AS 116 only will be applicable for lessor and lessee, for both persons. But non-lease component for lessor Ind AS 115 is applicable because it is revenue for the lessor. It is revenue for the lessor. Therefore, for lessor Ind AS 115 is applicable. But for lessee, it is just like a normal expense. Lessee is just like a normal expense. While you are making the expense, just pass the journal entry. Okay, this is the thing which they are saying. But one more thing, lessee has an option to choose entire contract as a leasing contract only. Lessee is having an option. If it is not practically possible to separate two items, lessee don't separate. You can use the same accounting treatment, which means consider the total component as a lease and apply Ind AS 116 accordingly. This is the option which is given to which person? Lessee only. Lessor have to definitely do this bifurcation. He have to definitely find out the standalone selling prices and he have to do the bifurcation. But lessee is the practical expedient related point. Okay. Important adjustment. This point you have to check. So with this lessee accounting, all important points we have covered. Lessee, whether it is finance lease or operating lease, there is no change. We have to do the same accounting treatment. But for lessor, if it is finance lease, different treatment will be there. If it is operating lease, different treatment will be there. First, let us understand, sir, in books of lessor, what should be the things and all. Let us slowly understand. Okay, so check this. Accountings in the books of lessor. Lessor have to first identify whether it is a finance lease or operating lease. Lessor have to first identify what it is, a finance or operating lease. We have to check. Sir, how you have to identify whether it is a finance or operating lease based on this? This 5 conditions only they are asked in your MTP, recent MTP. Based on these 5 conditions, first you have to identify whether it is a finance lease or operating lease. Okay, so carefully check what is the first one which they are saying. If any one condition is satisfied, it is called as finance lease. First condition, ownership of the asset will be transferred to lessee at the end of the lease term. If in the agreement they have given, once the lease term gets completed, ownership will be transferred. If it is like that, it is called as which lease? Finance lease. It is finance lease. What is the second point? Lessee has the option to purchase the asset at a price lower than its fair value. Lessee is giving an option. Normally, the fair value of the asset is only 5 lakh rupees after the end of year 5, but I will give you, please purchase at 3 lakhs only, which means it is also finance lease. Third point, lease term covers majority of the economic life of the asset. See, your useful life of the asset is 6 years. Lease term is 5 years, 11 months. After 5 years, 11 months, what you can do? Nothing you can do. It is just like a finance lease only. If the lessee is only covers majority of the lease term, that is also called as what? Finance lease only. And one more point. This is most important. Present value of lease payments substantially equals the fair value of the asset. I have calculated the present value of the lease payments. Present value of the lease payments, I have got some 45 lakh rupees. But asset cost itself is 50 lakh. Which means what? Majority of the cost of that asset is recovered from the lease rentals only. Which means it is also which lease? Finance lease. Last point. Asset is too specialized that only lessee can use the asset. If lessee is the only person who can use the asset, any person I cannot. I mean, after completion of lease, that will be totally useless for the lessor. Therefore, lessee, what he will do? He will ask the lessee only to purchase that asset. Okay. If any one of these 5 conditions are satisfied, what I can say? I can classify that lease as a finance lease. This classification we will do only in the books of what? Only in the books of whom? Lessor only, because lessee same treatment. Okay. And one more thing. Operating lease treatment is very, very simple. If it is operating lease, the treatment is very simple. Sir, what we have to do in case of operating lease? Operating lease means in the books of lessor only asset will be there. In the books of lessor only asset will be there. Since asset is there in the books of lessor only, lessor have to charge depreciation on the asset. Lessor only will charge because asset is which person's? Lessors only. And one more thing. Lessor shall recognize lease income on SLM basis over the lease term. No need of present value calculations. Nothing is required. For lessor, he have to recognize lease income on straight line basis over the lease term. This is in case of operating lease. In case of finance lease, something we have to do. These also, you can easily remember these things also. Okay, no need to worry about this. Based on this, question is asked. Finance lease treatment for lessor they are asking. Let us carefully understand. Sir, in case of finance lease, what will happen is asset will be transferred to lessor. Majority of the life will be with the lessor only. Sorry, will be with the lessee only. And majority of the cash flows also will be taken by the lessee only. Everything, most of the benefits are enjoyed by the lessee only. The first thing which we have to do is you have to remove the asset from the books of accounts of lessor, because lessor should not take depreciation on that amount. Correct? So first what I have to do, I have to de-recognize the asset at which value? Carrying amount. First I have to de-recognize the asset at my carrying value. See, for lessee it is lease payable. For lessee it is lease liability. For lessor it should be what? Lease receivable. For lessor it should be what? Lease receivable. Correct? Sir, at which value I have to recognize? Net investment in lease I have to recognize. At which value I have to recognize? Net investment in lease I have to recognize. Sir, what is the meaning of this net investment in lease? Let us understand. And one more thing, recognize finance income on such lease receivable in each reporting period. If it is lease liability, I have to recognize finance cost. If it is lease receivable, what I have to recognize? I have to recognize finance income. I have to recognize finance income. Okay. And one more thing. Sir, what is the meaning of gross investment in lease? You have to understand. Sir, meaning of gross investment in lease is nothing but, first of all, total lease payments I have to take. Total lease payments means whatever the payments which are made by the lessee, I will take all those payments. Sir, first of all, what are the payments which will be made by the lessee? Fixed lease payments will be made by the lessee, plus guaranteed residual value also given by the lessee only. Correct? So I have to consider fixed lease payments plus guaranteed residual value. Both I will take. And one more thing, since it is a finance lease, unguaranteed residual value also I have to take, because I am calculating in the books of lessor. Lessor also will get lease payments. At the end of the period, he will also get the asset also. In this case, he is the only person which will be even receiving the unguaranteed residual value also. Therefore, in the books of lessor accounting, I will consider the total lease payments made by the lessee plus along with that I have to add unguaranteed residual value also, which means whatever the total investment which that lessee have made in the asset through the lease payments we have to calculate. This is the meaning of gross investment in lease. Gross investment in lease means ignore the time value. Gross investment in lease means just I have to ignore the time value. Ignore the time value means if lessee is paying 1 lakh rupees in 5 years, I have to take 1 lakh into 5. 5 lakh will be my gross investment. But if I want net investment, I have to take the present value of the gross investment. Questions they will ask. Questions they will specifically ask you to find out net investment. Sir, how I will get present value of total lease payments plus present value of total unguaranteed residual value we have to find out. That is nothing but my net investment in lease. In your question, one more thing they will ask, which is nothing but this unearned finance income. Unearned finance income is nothing but the difference between these two. Because obviously, the difference between present value and if you calculate any amount ignoring the time value, the difference is called as what? Interest only. The difference is called as interest. Since he is lesser, that interest will be called as interest income. And what is that income? GIIL minus NIIL. Okay. Gross investment in lease means how you have to get, tell me. Total lease payments made by the lessee we have to take, plus one more thing I have to add. What is that one more thing? Unguaranteed residual value I have to take. Sir, if it is net investment in lease, what I have to calculate? Present value of gross investment in lease I have to calculate. Sir, what is the meaning of unearned finance income? Gross investment minus net investment. Sir, what is the meaning of unguaranteed residual value? Unguaranteed residual value is nothing but total residual value minus guaranteed residual value. If I do, I will get unguaranteed residual value. Very good. Let us solve one more question. Question number 2. Check this question number 2. Check this question number 2. This already they have asked in the past. If they want, they can ask a similar question. Okay. So what they are saying is, Bees Limited has leased an equipment over its useful life that cost how much? 46 lakh 55,100 for a 3-year lease period starting from 1/4/2022. After the lease term, they are saying asset would revert to the lessor. You are informed that estimated unguaranteed residual value would be 1 lakh only. Estimated unguaranteed residual value is how much? 1 lakh. Read the second point. Second point, what they are saying is the annual lease payments have been structured in such a way that sum of their present values together with that of the residual value will equal to the cost of the asset. What they are saying is total cost of the asset equals to present value of fixed lease payments plus present value of unguaranteed residual value. See, the annual lease payments residual value can be both guaranteed and unguaranteed. Sir, why guaranteed will be included in this future lease payments only? Unguaranteed I have to take separately. Correct? So total cost equals to present value of these items. This is the thing which we have to calculate. But the question they are asking, see, implicit interest rate is 10%. Question what they are asking you to find out to ascertain the annual lease payment and the unearned finance income. This annual lease payment, you should need little knowledge of your SFM. See, this 7 crore 46 lakh 55,100 equals to present value of future lease payment plus present value of unguaranteed residual value. Unguaranteed residual value amount is 1 lakh. Unguaranteed residual value is 1 lakh. They have given the discounting factor also 0.751. 1 lakh into 0.751, please do. 75,100 you will get. I want this value. I want this value. Therefore, I have sent this to this side. So 746,55,100 minus 75,100 if you do, I will get this much. 7 crore 45 lakh 80,000 you will get. That is my present value of future lease payments. But I want present value. Sir, how I will get? See, first of all, present value of future lease payments. Present value of future lease payments is, sir, how I will be getting is, I will calculate like this: annual lease payments into present value annuity factor I have to do. Then I will get 745 80,000. Correct? I can find out this. These three, add these three. 0.909, 0.751 and 0.826. Just add these three. This divided by 2.48. 3 crore is my lease liability. Every year I have to pay 3 crores. Easiest question. But you have to check this. Otherwise, you will never understand what is this. Very easy. Okay. Second question also we have completed. Now this also I have explained. Don't worry. 3 crores will be the lease payment. Unearned finance income means what? Gross investment in lease minus net investment in a lease. Sir, what is my gross investment in lease? Total lease payments. Ignore the time value. 3 crores into 3 plus unguaranteed residual value. Directly I have to add. This will become my gross investment in lease. This will become my gross investment in lease. Minus net investment in lease is how much? 7 crore 46 lakh 55,100. Correct? This is the thing. Net investment in lease is nothing but cost of the asset in this question. Correct? So the difference is nothing but unearned finance income. Difference is nothing but unearned finance income. How much it is? 1 crore 54 lakh 44,900 is my unearned finance income. Important question. Okay. And one last question we will discuss in this leasing and then we will conclude. Okay. All models we are trying to cover. So one last model which I wanted to discuss is question number 8. Quickly open. Question number 8. Okay. So just a minute. They are saying a dealer lessor enters into 10-year lease of equipment with lessee. This is called as which person? Dealer lessor. Dealer lessor means, if you observe, for example, For example, one automobiles industry is there. For example, if you purchase any car, they will have names like Kishore Automotives. Different names are there. Any Jayalakshmi Automotive, something different names are there. Those, what they will do is they will also sell the asset. They will also sell the asset. Plus, at the same time, most of the entities will also lease the asset. Same asset, they will sell and they will also lease also. Sir, if they are selling the asset, they have to book something which is called as gross profit, which means normal profit they have to recognize, sales minus cost of goods sold. If you do normal gross profit, they have to recognize. Along with that, in this lease transaction, they also have to book something which is called as lease receivable also. Okay, combination of transactions will be called as dealer lessor. This person is normally dealing in selling the asset, as well as this person only will become the lessor also. This will be generally taken for operating leases. Okay, so let us first let us understand the concept. This is there. Accounting of finance lease by dealer lessor. Same to same copy paste treatment like finance lease. Finance lease means initially I will write lease receivable. Initially, I will write lease receivable to asset I will cancel at the carrying amount of the asset. Correct? This is a normal thing. But in accordance to that, what I have to recognize is two more items I have to calculate. What are those two items? Sales also I have to write. And one more thing, cost of goods sold also I have to write, because I have sold the asset also. Therefore, I have to recognize gross profit also. So, how you will get very simple calculation. See, net investment in lease I have to take. Net investment in lease, after I have taken that value, see, unguaranteed residual value, anyways asset will be reached to me after the end of the lease term. Therefore, what they are saying is unguaranteed residual value you will receive anyways. Therefore, deduct the present value from that calculation. You have to deduct the present value from this sales amount. Similarly, deduct the same amount from the carrying amount of the asset also. While calculating cost of goods sold, I will only take the carrying amount of the asset minus present value of UGRB. Similarly, while booking the sales amount also, I will recognize net investment in lease minus present value of unguaranteed residual value I have to recognize. Simply speaking, this is the journal entry which you have to pass. Lease receivable account debit, how much I will write? Net investment in lease. Net investment in lease is nothing but what? Present value of gross investment in lease. Correct. This is the value for lease receivable. Asset I have to remove at which value? Carrying amount. But one more thing you have to do. Two more calculations you have to write. Sales also I have to recognize. Cost of goods also I have to recognize. Sir, sales how much amount I have to write? Net investment in lease minus present value of UGRB. Cost carrying amount minus present value of UGRB. This is the only thing which you have to check. Okay. Same copy paste calculations we have to do in the following question. In that case, we have completed this leasing chapter. Okay, so this question, they have given lease payments, they have given residual value, they have given 50,000. Guaranteed residual value is 30,000, which means unguaranteed residual value is how much? 20,000. Total is 50, guaranteed is 30, which means unguaranteed is how much? 20,000. They are saying equipment has an estimated remaining economic life of 15 years, a carrying amount of 1 lakh and the fair value of 1,11,000. Okay, and one more thing. The lease does not transfer the ownership or contain an option to purchase the underlying asset. This also they are specifying. First of all, we have to write in exam, I have to write all the 5 indicators of the finance lease. I have to copy paste all those 5 indicators of the finance lease. In this case, present value of the future lease payments is substantially equals the fair value of the asset that they have given in the question only. See, if you check. See, fair value of the asset is how much? 1,11,000. Just calculate and tell me, sir, 50,000 is the lease rental, 10 years is the lease, 10 years is the lease, and 10.078% is the discounting rate. 10.078% is the discounting rate. 1 second. 10.078% is the discounting rate. One second. Tell me. I have to calculate present value of future lease, fixed lease payments also, plus guaranteed residual value also, plus unguaranteed residual value also. Because whatever the total amounts which are receiving from the lessor, I mean, whatever the total payments which are receiving from the asset, I have to calculate. From the asset, I will also receive this, and I will also receive UGRP also. If I calculate the total, I have got 1,11,000. I have got 1,11,000, but they are saying this is only the fair value of the asset, which means present value of future cash flows is approximately equal to the fair value. In this case, it is same. Therefore, it is a finance lease. Therefore, it is a finance lease because one of the indicator, if you check, present value of lease payments substantially equals the fair value of the asset. Fair value of the asset is 1,11,000. Present value of cash flows also exactly we have matched it with 1,11,000. Therefore, it is which lease? Finance lease. And one more thing, the question starting only they have said that this question is what? Dealer lessor question. This question is what? Dealer lessor question. They have given the carrying amount of the asset. Carrying amount of the asset is how much? 1 lakh is the carrying amount of asset. First, what I have to do is, let me write the journal entry for the lease. Lease receivable account debit to asset account. Lease receivable account debit, how much I have to write? 1,11,000 I have to write. Correct. So this is the entry. Lease receivable account debit 1,11,000 to asset account. Asset carrying amount is only 1 lakh. I have to recognize two more items: sales, cost of goods sold. Sales I will record at net investment in lease minus present value of UGRV. Sir, what is the present value of UGRV? Here I have separately calculated. 7,655 is the present value of the UGRV. Okay. From that net investment in lease, I will deduct this amount and I will book by sales figure. Similarly, from the carrying amount of the asset, I also have to deduct this amount. Which means 1 lakh minus 7,655 also I have to deduct. Now tell me how much it is. Cost of goods sold should be 1 lakh minus 7,655. Sales amount should be 1,11,000 minus 7,655. Okay, very, very important question. Dealer lessor concept. Okay, so with this, finally we have completed Ind AS 116 leases. Very nicely we have covered all models of questions we have discussed. Okay, leases also we have completed. Tomorrow what we'll be discussing is, tomorrow I will cover this financial instruments, NBFC, recent developments in financial reporting also, or if time is there, I will start with Ind AS 103 also. Okay. Financial instruments, NBFC, recent developments, one concept is there, economic value added and market value added. That is also problematic question. Every attempt they are asking the question. So we will cover that also. And internal reconstruction is also there. One more thing. Internal reconstruction also we will start. If time permits, I will also start with Ind AS 103. Ind AS 115 we will see. Okay. So that's it. Today we'll go. So because too many standards I have discussed, today only two important standards, 102 and 116, both are very huge. So we have to cover these standards very nicely. Yesterday 36 also I have discussed, that also we have to solve. Okay. So today practice those questions. So we will continue in next class. Tomorrow we will continue. Okay.